however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Good morning.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on
Clorox is higher this morning. Clorox, CLX. Let's take a look at that one. Google is also higher this morning. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is October 1st. Dock workers strike on the East Coast, not on the West Coast, and certainly not slowing down FedEx planes. So if you're in FedEx, probably hold on to those for a while. FedEx up higher. FedEx is up. Dock workers strike.
Welcome back to Morning Trade Live. Time to take a look at the global picture. For that, we welcome in Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Jeffrey, always good to have you with us. And want to start with that port workers strike. The East and Gulf Coast port shutdown is underway with those workers on strike. And of course, we don't know exactly how long this is going to last. But I want to talk to you about potential impact. When will we as consumers potentially feel the pinch from this?
Well, this is a lot of container volume. We're talking about half of the container volume coming into the U.S. It's 2 billion a day in trade flows. A relatively short strike of, let's say, 7 to 14 days would probably not have any major economic impacts on the availability of goods or prices, in part because importers have been front-loading shipments, anticipating this potential shutdown, and they've been diverting some activity to the West Coast in anticipation as well. A rule of thumb is that it takes about a week of a port operating at normal pace to clear a day of a shutdown. So you can figure out how long that might take if we're down 7 to 14 days. But a longer strike of 30 to 90 days could be much more important from an economic perspective, with delays that could stretch out months or even quarters, possibly similar to what we saw in 2021 when several factors led to that congestion at ports in Los Angeles and Long Beach, where the U.S.'s biggest port. And that led to shortages and helped to drive inflation. You can take a look at this chart on the screen here. It just shows how prices have come down for shipping to the East Coast relative to the West Coast. So, shippers have recognized the idea that if they ship to the East Coast, their stuff may sit in that port for a long time before it gets unloaded. I just add to this that back in 2021, the last time we saw major port congestion, then on the West Coast, we saw the Fed sit on their hands. They didn't know what to do. They weren't sure whether to keep easing monetary policy because of economic risk from shortages of production, or to hike them on the risk of inflation from those shortages. And the stock market, of course, fell into a bear market in 2021. And this year might not welcome lingering supply chain issues either. So we'll have to keep a close.
Okay, we got about 11 minutes to go. 11 minutes to go.
Every day the strike lingers.
Trying to get the Gamma uploaded. It's giving me difficulties this morning.
But I guess at what point do we have to worry that inflation, which finally seems under control, could be out of control again?
So right now, we're in an environment globally and in the U.S. where services are really where all of our inflation is coming from. We've got services running at a 4 or 5%. That's really labor costs. Goods, energy, food, all those prices are basically flat to down from a year ago. And so if we started to see those pick back up again.
All right. So I'm looking at FedEx.
A lot of container product. that could really push those prices back up again. So it would be an important and significant development in CPI, and it's one of those things that the Fed would have to contend with. Are there more issues tied to a slowdown in production related to those things not coming into the U.S., or is it an issue for inflation? And we'd have to see how the Fed would react, and other central banks would react to that as well. Again, these are very significant ports and involve agricultural exports to the rest of the world, so it's not just a U.S. issue.
And 25,000 striking dock workers are just a small fraction of the U.S. workforce, but there's clearly labor, discontentment, if you will. We're seeing it at Boeing as well. We're seeing it with the possible strike at Stellantis. So at what point do we have to worry about wages causing upward price pressures and impacting the broader inflation picture?
Yeah, that's the real question. How long does this last? We've seen some catch up in wages, catching up to the price increases we saw in 2021 and 2022. But now they're lingering. And in some countries, they're even being encouraged, like in Japan. They really want to continue very high wage growth rates to sustain inflation. Japan hadn't had inflation in a generation. But elsewhere in the world, we're seeing those same pressures as well. And that's why I do worry that if goods prices do begin to pick back up again, we'll see broader inflation pick back up again, because it's really all concentrated in labor and wages right now. I think that's one of the reasons why we're in a much more...
Okay, got 9 minutes to go. I'm still trying to rectify what's going on with Gamma.
Slack in the labor markets like we did for much of the last 20 years when China entered the World Trade Organization and we had 1 billion excess workers that we had to absorb, or even in the 90s when we had the fall of the Soviet Union and all those former Soviet Baltic republics come into the global labor pool. That was about 700 million workers. So we don't have that excess supply anymore, and that means wages are probably going to run at a faster pace than we've been used to, and that can create much more volatility in inflation and keep central banks engaged, whether they're cutting right now. Maybe some might have to hike in the future. I quickly note that Brazil is one of the central banks around the world that's been leading. They're back to hiking rates again because of very high labor wage rates.
Okay, well, let's switch over to China. Obviously, China is adding extra stimulus to their economy with rate cuts. We've seen a huge rally in Chinese stocks after those stimulus measures. Of course, Chinese markets are closed for the Golden Week holiday. But do you think that the strength that we've seen is sustainable?
The jury's out. I'd like to believe it, but I've seen this happen so many times in the last 4 years. We've seen 4 of these rallies in the 20% range or more, only to see them completely fizzle out and give back those gains. China's policymakers did announce a lot of aggressive stimulus, both on the monetary front and the fiscal policy front. But we've seen this happen before. Even in May of this year, we saw a rally along these same lines, about 20% rally on the back of more stimulus, only it failed to deliver on those promises. A lot of money was promised, not a lot was delivered. So I think what we need to see is to boost local government bond issuance. This is what we really need to see to shore up the...
All right, let me do this a different way, I guess.
We need probably more than $1 trillion in additional issuance there, because we're seeing that much of a fiscal drag right now. We need to see faster money supply growth in China, more borrowing as interest rates come down. Do people even want to borrow at any interest rate to fund growth? We'll have to see whether that's the case. We'll be watching money supply growth very carefully to see whether these gains are sustainable. And then finally, some kind of rise in consumer and business confidence.
All right, let me update Gamma a different way that I'm used to. At least we'll have it as a record. Okay, I'm updating Gamma right now.
20% plus rallies in China over the last 4 years is actually sustainable.
Okay, so still some uncertainty around investing in China, but more broadly speaking, how should investors be thinking about investing in the U.S. versus international markets as we kick off the fourth quarter?
I've become a big fan of international markets over the last year or two as they've outperformed the U.S. And here again in the Q3, just as it's ending here, international stocks have outperformed the S&P 500 this quarter. Emerging markets did see a huge gain, but we actually saw developed international stocks.
Okay, so this will work. I'm updating Gamma as we speak.
With the S&P 500 since the current bull market
levels. I'll just pull this up on the screen for now. Okay, looking at levels overhead, you can see 5,700 support, 5,750, 5,800 resistance.
International stocks, keeping pace with that orange line, which which is the S&P 500. Of course, if you take out that Mag 70, you get the blue line. And so, if you took out some of those AI-related darlings, international stocks have really outperformed. But overall, we continue to see very competitive performance by international stocks, which are showing stronger earnings growth this quarter, better valuations, and higher dividend yields. So I continue to focus on international stocks as a way for investors to maybe get away
Okay,
from
let's
some
see
of
what
the
it says. What he says about the roll.
and still find very attractive.
And you
Okay,
obviously mentioned uncertainty
here's the
in
roll
the
here.
Chinese markets.
Okay, I'm just
Can you
gonna
be specific about which
leave this up so you guys can
sectors?
read it.
I don't think you have to be specific
Okay.
when this asset class is in favor. When it's out of favor, you've got to be very careful about picking countries and sectors. Now, I think Japan is outperforming. Canada outperformed in the third quarter. The UK outperformed. Germany, France, Italy, Spain, they're all outperforming the US. So I don't think you need to be specific and pick a unique country or sector. I think you can get broad international diversification and perform well.
And in your chart, if you took out the Mag 7, obviously that blue line was less than impressive. But
All
we
right,
are
so
necessarily taking those out. There's question
6,000
about
is the new level.
the strong outperformance with big tech here in the US.
Immediately after JP Morgan print, the S&P 500 ripped 1% into the close, 57.62. What's unique about this is that we can't recall having seen zero-day puts used as part of this trade before. The timing of all of this, though, strongly suggests they were. We believe that the JP Morgan Colliers broker would be short futures as a hedge coming into Monday, and so it's possible they loaded up on zero-day puts and then printed the new December collar. Following that, they covered their shorts, but not the zero-day puts as a cheap hedge.
It would certainly help.
This futures short covering could have sparked that massive rally, and it seems that the 9:30 expiration, 5,750 calls, which the dealers were long. JP Morgan was short with 3 minutes to go. 3 minutes to go for the opening bell. We're not closed until 4 p.m. Those long 39,000 calls made 3.9 million for every point the S&P closed above 57.50. Wow. Wow. Yeah, that's what I love about the S&P. Every point above your level, if you have 57.50, every point above that level, you make $100. They had 39,000 calls. They made 3.9 million for every point the S&P closed above 57.50. Wow. Dealers made that money. Wow, that's pretty impressive. Pretty impressive. Look right here. Those long 39,000 calls made 3.9 million for every point the S&P closed above 57.50. Okay, we got 2 minutes to go. 2 minutes to go. FedEx is moving a bit higher. They're looking for FedEx to continue higher with this longshoreman strike. Left to be seen whether the West Coast will strike or not. Okay, Meta's on the move. Meta is on the move. Meta's popping. Okay, looks good. All right. First 15 minutes, you know what I'm doing. Taking profits off the table, reassessing the markets. Around 9:50, 10 o'clock, we're looking for direction, trends. Tesla looking for a nice bounce towards 265.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this. Gotta run, Carl.
Okay, let's get ready. Less than a minute to go.
With Schwab. It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next.
Okay.
Paying an account, but he made as clear a clean breast as anyone.
There we go. And we're open. All right, Meta. Let me take, let's see, Meta. Take some Meta off here. I'm selling some Meta into strength. Okay. Okay, sold Meta into strength.
We definitely remember the spring of 23. Difficult time for all kinds of brokerages and mid-cap banks.
He was a great steward, and he will be missed. I really, really like him.
Let's get the opening bell here and this ABC real-time exchange for the big boys.
Okay, Pinterest with an upgrade, Netflix moving higher. We got Apple, Amazon, Broadcom, and Microsoft down a little bit right now. Look for a bounce. Looking for a bounce. Okay.
Steve on Squawk earlier today.
Always such a great job, Tony. It's all about
Okay, Clorox on the move. Clorox is looking pretty good. Clorox. Clorox on the move. Okay, Team Atlassian is number 1 on the NASDAQ 100. Team. Okay, let's see what else is working here. Team number 2, Datadog just dropped the number 4. Meta's on the move. Meta's on the move.
Signet gets a mention in that upgraded materials over at B of A because they're looking at engagements starting to rise again, which they argue will lead to household formation, which they say is good for materials.
It's so funny you mentioned that because one of the things she said when she came on air, and here now you're talking about September 6th, that was a 74, and she's talking about how it's engagement season. It's rarely been as strong, and it's been a great reason to own Signet. Great reason.
What do you make of this Barclays call, Jim, on Apple cutting iPhone 16 builds, likely indicative of weak demand? I'm reading a headline here
Yesterday we had a strong demand
from the piece itself. We're in that season.
Okay, Tesla, a little pullback. Meta's still going. There goes Google. Google's the next one I'll take some profits on. Google. Google's up big, pre-market. And following through now, Google. Google will take profits there too.
Mike does. I have a lot of respect for Mike, but he can tend toward being somewhat promotional.
Google, let's see. Google. All right, where's Google? Oh, it's already gone. Okay, I had a limit order apparently. Okay. Micron is working. That Iron Condor, Micron. Okay, we'll turn off pre-market. We don't need that right now. Micron down at 103. Okay, I'm going to go ahead and close this. Okay.
Well more than the 190 billion that Verizon sports. No doubt about it. And you have to take what he said seriously. But there has been a chorus of analysts who are talking about iPhone demand not being particularly strong.
Point out this would be the biggest build decline.
Actually, you know what? I'm gonna hold on to that one. Can't. Oops.
But I will point out that we have a mixed view. We don't have a unanimous view.
Cancel. Okay, I'll cancel that for now. Let that drift a little bit lower. We got until next week. I was thinking October 4th on that Iron Condor. So we'll let that hold on for a few. FedEx. Tesla pulling back. Meta, a little profit taking. Futures dropping off here. Futures. Futures with a drop.
Yes, that's a very different. Very different. Guys, Boeing shares are down a bit, not much, but there is some talk now of a $10 billion share issuance or stock worth $10 billion. It may not happen immediately, but it is a Bloomberg story that they are weighing raising at least $10 billion. Again, according to the story, it's not likely to happen for at least a month, and it seems to be in part based on whether they can resolve the ongoing strike right now. Now, that strike itself is costing the company as much as $1.5 billion each month that workers stay off the job. But I did talk to a couple of Boeing investors this morning who are not happy about this. They point to the fact that, well, when you're going to do the Spirit Aerospace deal, remember it was going to be all cash. Then it ended up being stock. And why in the world did you raise capital now? You've got $9 billion still in cash.
All right, what's CRM doing? We haven't looked at that in a couple of days. CRM, okay, Meta's still going. CRM, CRM. Okay, Meta, CRM still above the 200-day. It tested it yesterday, bounced today. Netflix is bouncing. Netflix. Meta still looks very strong. Meta still looks very strong.
We had some analysts using like a price target down over down 100. This is a very worrisome story. Boeing's a national treasure. You see Boeing had trouble many years ago. This was
Okay, Meta has cleared a level of supply. Let's see, Money Magic updates. If you're not using Money Magic updates, you're missing the picture, the bigger picture here. Okay, Meta, we got 580 and 600. 580. Okay, we got a move. We could see a move to 600. Okay, thank you, Money Magic.
These are real unions that have occasionally in history, like William Singer, who ran the machine.
Got an up arrow. Positioning is more to the upside.
He can shut down anything.
I believe you.
Okay, Meta.
William Singer was an amazing labor leader, and that was during the period when I was a known communist and a footer.
Jim, a little bit of a spill here at the Open. Axios is quoting a senior White House official who says that, in their view, the United States has indication Iran is preparing to imminently launch a ballistic missile attack against Israel. That would mark some escalation in what we know is happening in the Middle East.
Yeah, that would be a different narrative entirely.
Been interesting that despite the heightened tensions, not tensions, but the increase in hostility, it hasn't impacted oil.
No, and then you take a look at 1973 when Syria and
Okay, Microsoft, Nvidia pulling back. Okay, we got the futures pulling back pretty quickly here. Futures. Supermicro pulling back.
Obviously, we are the key producer in the world.
Yeah, we're 13 billion. Back then we were 13.2.
13.4 million.
Yeah, when we're talking about the Israeli war, 1973 we were at 9.2 million, and I just think that what we're dealing with is something that was not an overall situation.
Loading up at below 70 for the
Although we were at 66.33.
Okay, Meta. Okay, watching how it reacts here. Does it start to move higher? Meta. Okay, watching. We're above these order blocks. Let's look at VWAP for Meta. Okay, Google pulling back in a little bit. Google. Netflix is okay. Google's okay for now. Netflix, Google, and Meta are okay for now. Everything else, the New York FANG, Tesla, Nvidia, ABGO, Broadcom, Amazon, Apple, and Microsoft are lower. Okay, Google. So this is Google. Meta. Okay, I'm not going to do anything else with Meta right now. I took profits off in the strength, so I'm waiting to see how this reacts. In the next few minutes, we got a doji at the highs. The call wall shifted to 600. Doesn't mean we'll go there.
Putin did weigh in today. KLM's cutting flights to Tel Aviv through the end of the year, so we're starting to get into that cycle that we've become familiar with.
Right, you look, Iran stopping flights to Beirut, which a lot of people feel were the way that they got missiles in. I mean, everything's in play here every minute. You go to the New York Times here, they have this constant you're checking it constantly, looking for any sort of news, and it's very hard to get. But Iran sending a ballistic missile, if Iron Dome couldn't stop it, obviously would be an escalation of unbelievable proportions.
Jim, there are some sell-side calls we didn't get to. One was this upgrade of Ford over.
Okay, Q's looking for a pullback.
And look, I understand
to 50% Fibonacci's. Let's see. Let's look at the Qs.
And it's very contrary, though, to Jonas, what Jonas had last week. And I thought that Jonas had told a pretty good story. And that was a mea culpa because he liked Ford and he got it wrong, like I did. So I'm not hard on Jonas whatsoever.
Although some of the September deliveries from Neo and Lee.
Qs, the Qs, watching the Qs.
5% free
Very positive. Of course, then you think about Tepper.
Looking for an opportunity. We know that the JP Morgan collar, the upper strike is what, 6,020 now? So looking for dips to get bought. Okay.
They're telling you what they're going to do, and I take them seriously. That was sort of his.
And I don't know if you got to see Michael Semblis yesterday from JP Morgan.
That was a great piece.
What's in Canada?
Well, tell us about it,
Well,
guys.
there were a couple things. He talked about debt and deficits,
Right.
fiscal deficits.
Yeah, and also remember he's saying it's the most contentious election in 100 years. But at the end he says, look, I believe this time that China stimulus is real.
Meta. Okay. You got Meta. I saw your Meta chart.
They've said over and over again.
Meta. All right. Right through 1618.
Say you gotta buy it. Now, Tepper told me yesterday, look, it could be pullback. But you have to buy it.
Okay. So I'm just waiting. I'm just sitting here waiting for the cavalry to show up. Okay.
Exactly. The whole
Consumer confidence, property prices.
the charts were so bad, you would think that they really are in a depression. Michael had not been that positive about China until now. I still think Michael Semblis is the best strategist in the world. And if people don't know, I mean, he's also pure joy. He's so smart. I mean, I think he could be a song and dance man.
Hollow's on the move. Okay. HOLO. Hollow's on the move. Okay. Penny stocks. All right. So don't buy the pop. Buy the little pullbacks if they keep buying the pullback.
Yeah, it was an incredibly negative piece. And just when you have gasoline come down, that had always been a kind of a nice corollary to Disney. But this piece, David, people really think that there really has been some damage done at Disney. That it's not the Disney. That the parks aren't doing well, the movies, ESPN.
Well, the movies did extremely well this summer.
Well, no,
they
right now.
a great box office summer.
No, I'm just saying that
So-
you. Well, yeah, I just think what's happened here. Let's just go back with that. Longer term, the woke issues are still.
Okay.
even though they-
Nanonuclear is down 2.36%. Starting to bounce at a major area of interest. Right around 14, starting to bounce at 14. Watching Meta. Meta has a possible trajectory towards 600. Meta.
Was not well communicated at all. Following some of his employees, and yet not really dealing
Cool.
with sort of brand.
Okay, looking for Meta to bounce. Looking for the Qs and the futures to bounce down here.
Reset things. They are now done with the state of Florida. I don't know how much the damage is. I mean, maybe there is still an overhang from that. But
saying that that now here's three pieces. Barclays understanding upside and downside scenarios from Disney parks. I like that. But then you've got this Bank of America piece, big headwinds into fiscal year 25, largely known. All right, so that's good. Then Ray J downgrade the market performance. Parks idling in park.
yeah, I mean,
This
so
really
it's
negative.
also priced
Really
really that.
They also say Epic Universe from next year will create some competition.
Absolutely,
Yes.
it was nice to see that significantly increasing potential competition. David, this is a mention that's positive about Comcast.
Hey, Comcast shares have been on something of a bit of a tear.
Do you think it's
lately
because
for
of
that stock.
Epic Universe?
No, I don't.
Okay, I'm just sitting and waiting for the cavalry to show up. We got the little dips on all of these New York FANG index stocks. Yesterday we bounced. New York FANG bounced. Okay, we're still dealing with this trend line. Little descending channel. If you look at it on the 60-minute time frame, it's a little bit more obvious. Okay, so we need to get back. We're trying to get above the 20 EMA. If we get above the 20 EMA, that'll start to turn. We'll see a lot of these New York FANG index components turn back up. Right now, Meta is looking okay. Meta's looking all right. Let's take a look at Meta. Meta. Okay, I'm not doing anything until I see all 10 of these stocks start to do the same thing, or at least the majority. Only 3 right now are holding up. And Google is starting to fade very quickly. Okay, Meta. Meta is higher. We got 600 as the next money magic level. Yeah, XBI looked really good yesterday. Excuse me. XBI looked good yesterday. Somebody with 10,000 October 99 103 call spreads bought for $1.40. Looking for upside in the next few weeks. XBI. Okay, let's look at XBI. That one's pulling back at the moment. Okay, looking for a bounce. XBI. October 99. What October? October 10,000 October. October 11th, October 18th. What was it? The 99? Okay, I see it. It's right here. Okay. 99. Yeah, okay, I see what they're doing.
Why are they resisting this? It's so much smarter than anything they've come up with.
99.
Oh, no, I know how the
99. 103. They're $1.14 now.
Dow's down 300. Jolts ISM coming up at the top of the hour, but first some PMI. Let's get to Rick Santelli. Hey, Rick.
Yes, S&P Global Manufacturing.
Okay, looks like XBI is trying to bounce right now.
Mid-month read in Twatson. The mid-month read was 47.0. It moves up a bit to 47.3, but it still remains the weakest month-over-month level going back to June of 23, and obviously it still remains the third consecutive reading under 50. A lot going on in the world today. Yes, we have more data points, and even with the drop in rates and the flattening of the yield curve, 370 and a 10 down 8, against the boons, the distance of 170 basis points is actually the widest in 2 months as European yields fall. We're at the lowest yields of the year in Europe on their 10s, on their 2s, 2-year low. And we want to continue to monitor, of course, their inflation data. The month over month was pretty good. Year over year headline, like here, all like here is pretty good. Year over year core CPI at 2.7 is sticky, just like it was here. Squawk on the Street will return after a short break.
All right, I bought some of those XBI. Okay, we're starting to bounce right now. Buford, David, posting trader with 10,000 of the October 18th. I had to search for it, but you could see where the open interest is. Okay, this looks good. Okay, so I bought some of them too. Okay, I bought some of those. I did the same spread, but I did it for $1.20 instead. All right, hope everyone's having a good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is October 1st, first trading day of the month. We had the JP Morgan collar roll yesterday. Delivery release, I believe, right? Let me just look here on to answer your question, Lori. I believe it is. Let's see. tomorrow, October 2nd. I don't see it. Let me go to Tesla, though. I'll go to Tesla. TSLA, Tesla. Okay. Tesla is scheduled to release its quarterly global deliveries on Wednesday. Lori? Wednesday. Okay. So Tesla deliveries are tomorrow.
BC. Apple is the worst performing Dow name at the moment, down about 3%. We mentioned this note out of Barclays. We believe Apple may have cut 3 million units from a chip component supplier. Would be the earliest build cut in recent.
All right. So all the New York Bang Index stocks are pointing lower at the moment. Futures are pulling back.
It is weighing on the Dow, though, down about 290. S&P 5712. Stock trading with Jim is next.
Okay. Tesla pulling back. Okay, Nano Nuclear starting to move. So penny stocks are starting to move. Penny and small caps. Nano Nuclear is starting to move. Okay, added shares yesterday. Okay, back above that add level now. Nano Nuclear. Small caps could be in play today. Watch small caps. All right, so all the big cap tech names are down at the moment. So we're looking for an opportunity. Okay, Nano Nuclear. At the moment, I'm not doing anything. Yesterday was a kind of a slow day until like the last hour, and then everything shot higher. So patience a lot of times gives you the best setups. The majority of the time, patience will give you the best setups. Okay, what's FedEx doing? FedEx with the longshoreman striking today. FedEx. Okay, inside day, so not doing what we thought it would do. FedEx just yet. FedEx. Okay. Let's get some audio on here. Okay.
In those options. That's why I like to do spreads.
Oh, he's doing a credit spread on NVIDIA.
Great, right? That's a pretty big percentage move, about 12% above the current share price. Do I think it's going to go up more than 12% by the end of the year? Well, if I do, then maybe I buy the 120, sell the 140 or the 145 call. I have always liked to offset some of my risks on these call purchases because of the option premium and the high implied volatility level.
Let me see.
Okay, good point there. Taking a look at
Options,
AMD,
AI.
down about 1.2%. Walk us through your
Look at Tesla. Look at NVIDIA. Credit spread just.
Bullish on this one. Still taking that outlook that the shares are going to go higher. But I looked at a cash.
Okay, so he's doing an iron condor.
Out of the money to the downside here from the current share price. And I went down to the 155 strike put in October 25th. Now, they report earnings after that. So I want to kind of avoid.
Okay, NVIDIA by December.
Maybe consolidate or grind higher into the earnings. I just want to
NVIDIA.
avoid that earnings event, high volatility levels elevated here. So I get to collect more option premium. So selling that October 25th weekly options that expire.
Here's another one.
Days, just
AMD.
55 strike put, collecting a credit of about $3.50. I think it's closer to $4 right now. But that credit that you collect is your profitability on this trade. But you can see here for the risk profile, it takes my break even all the way down to 150, 150 over the next 3.5 weeks. That's about 7% below the current share price. So this type of strategy is twofold, right? You either want to collect that premium
155.
or if the stock continues to fall.
Oh, he's selling the 155 put.
I'm willing to buy the shares at 150, 150, which is a steep discount to where the share price is trading. This also takes away some of that implied volatility.
Okay, so this guy's talking on Schwab,
To that earnings report, but,
selling the 155 put strike
a little bit more conservative.
for a $4 credit.
Yourself that big cushion to the downside, but then you're also having
Okay, let me look at NVIDIA though. NVIDIA.
it goes below one.
NVIDIA. Okay, while I'm waiting for the markets, we got about 4 minutes to go for 10 o'clock. I'm just analyzing the trade he just mentioned on NVIDIA. Okay, so he's got, all right, let me just take a look at this. He's got, ooh, let's see, call side 120, 135. What? 120. 120.
Well, I think that's why I looked at this type of strategy where, hey, if I'm comfortable owning the shares, I can do this strategy where, hey, if it doesn't go down below.
Oh, I see what he's doing.
With that, because I just get to keep the credit that I collected. And this is one of those.
So he's doing the 120, 130. He's selling puts to finance the call side. Okay, I see what he's doing. Okay.
Wall Street is, elevated at this point because demand for AI chips.
115 strike put.
Chips also remains robust at this point.
Okay, I don't like what he's doing actually. 110.
Valuations elevated. You got to give yourself maybe
110, 100.
depending on which direction, directional
40.
bias you're taking on a specific position. So in this instant, looking at a cash secured put like this, hey, I'm comfortable owning the shares, and look at that big 7% discount. So even if I see some near-term volatility over the next 3.5 weeks, I've still got a.
Okay, the New York FANG index stock's pulling back. Meta's starting to bounce. Meta.
On this trade, as opposed to maybe just buying an outright 160 or 165 call to take that bullish stance.
All right, Tom White, thanks for those trades.
Nano Nuclear. There goes Nano. Okay, so that was a good entry. Again. Nano once again. Okay. All right, this is like the third or fourth time.
Also, a reminder, later today on Trading 360, Nicole Petalides will be joined by the current CEO of Charles Schwab, Walt Bettinger, and the incoming CEO, Rick Wurster, to discuss the transition and what's ahead for the company. That's today at 11:30 a.m. Eastern here on Schwab Network. Be sure to tune in. We'll be right back after this quick break.
Okay, so we got another dip buy on Nano Nuclear. Okay. Okay, buy the dip, sell the rip.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage.
Okay, Nano Nuclear. Okay, let's look at Nano. This one we've only been trading for what, less than a month, I believe. Frano brought this one, I believe. Okay, so Nano Nuclear, let's just look at the strategy that we're using. It only works if buyers show up. All right, so how do we know buyers are showing up? Well, first we look at the volume, which isn't the greatest compared to previous occasions, but probably losing more people on the latest dip. Losing in terms of, all right, over here to the left, that first run up got a lot of people's attention. It pulled back, buyers stepped up, volume spiked. Okay, volume spiked here and here. Let's see. Okay, volume spiked here and here. Okay, on the first run up and pullback, we got pretty solid support here at 11, 12. Okay, volume again here. We run up. We can't get through 17. All right, so we'll pull this up to 1771, the most recent. All right, so we're going to have some difficulty getting through this area, but if we do, we could see a nice follow through. Okay, this is a 60-minute time frame, so we want to be above the 20 EMA on the 60-minute. Okay, RSI is also turning up. All right, looking better. Occidental Petroleum coming off the low. Okay. Nano Nuclear. Okay, let me see. Nano Nuclear. The fact that the JP Morgan collar has a higher strike makes me feel a little more confident that dips will continue to get bought. We'd like to see a little bit more buying coming in right now. Futures look like they're going to turn. So I'm watching the New York FANG index stocks for buyers. In particular, I'm watching the TTM. Okay, TTM is red, so I'm not going to touch anything just yet. Watching Nano Nuclear. I'm going to post something on X. Let's see, X.
Welcome back to Morning Trade Live. I'm Caroline Woods in for Oliver Rennick. Let's take a quick look at the markets at this hour. Continue to see red arrows, and those losses are picking up some steam, as you can see.
Okay, Nano Nuclear.
200 points now. That's about 0.6%. The S&P down almost 1%. There's this NBC News report that Iran is readying imminent ballistic missile attack against Israel. Could be weighing on shares. Take a look. Crude oil up about 3% on this potential news here. The energy sector now the best performing sector in the S&P 500. One of the only winners. Communication services also higher, but every other sector in the red. We'll continue to watch this to see how that story develops. Let's take a quick preview of what's ahead on hour 2 of the show. We're going to take a look at Nike ahead of earnings this afternoon. The CEO of Momentum joins us live on the floor to discuss his company's spinoff from Jacobs. And, of course, we'll have the chart master charting a few different stocks and walking us through fundamentals. For a market update, though, let's welcome back in Kevin Hinks, the co-host of Fast
Okay,
Market.
so Nano Nuclear. Eventually, we're going to break through, I would think. We'd break through these resistance levels.
Could be because of geopolitical tensions here.
Exactly, Caroline. We've been talking about this for a couple days, that late last week, some geopolitical risk started to seep into some of the volatility metrics, and now you're seeing the VIX 1920. That's up 2.5 points just today since the opening. So yeah, with the S&P now down about almost 0.7%. That announcement that Iran is planning imminently to bomb Israel. It looks like Benjamin Netanyahu is warning Israeli citizens to take action, precautionary action like they do. From a trading perspective, Caroline, you go right to the risk-off assets, and that is number one, the VIX. Number two, the bonds. Look at the 10-year yield is spiking lower. That means bonds are rallying. Look at gold. The gold futures up $30 today. So without that, and then the U.S. dollar is firming up here as well. So it was already up this morning. So every risk-off asset screams at geopolitical risk here, Caroline. And I think that's what right now you have to brace yourself for.
All right. Well, thanks for that update.
Okay, watching Meta for the bounce. Meta, okay, looking better. Looking for TTM. TTM has to turn on these stocks, okay? So TTM has to turn.
Slightly lower than the 47.6 expected. Jolts. Here's a little surprise. Jolts, 8.04 million job openings here. So that's another big jump. And remember, this is our first look this week at employment data, something Jerome Powell says we should be focusing
on. Okay, where are we right now? S&P 5,700, major support, right? Okay, we're starting to turn. There goes Meta. Meta's starting to go. Meta going.
For sure, Caroline.
Meta going.
Jay Powell will be looking at more job openings, and then any insights into the quit rates.
Well, think about it.
Okay, Meta looks good.
The labor market, if the labor market is starting to strengthen up again, most of his fears that he talked about, he was worried about the labor market, that starts to dissipate. And maybe the pace of rate cuts or
We're above VWAP. VWAP could flatten out, so just watch VWAP.
starts melting away. Remember, we're going to get ADP tomorrow. We're going to get jobless claims that have been strong for the last.
Okay, so where the hell did Bitcoin go? Off the screen. Okay, lower. Okay.
4.1. That's going to affect yields. That's going to affect Jerome Powell's willingness to cut interest rates because his one fear, his legacy, is that he beats inflation and it doesn't reignite on the upside, Caroline. That's the biggest thing. Now, he has shifted focus away from inflation to the labor market. If the labor market starts to strengthen, that takes him what? Back to inflation? It's hard to say, actually.
Well, you know, we had a guest on yesterday, and I've heard this a few times, that forget the soft landing.
Google still not there yet. Watch your TTM. Okay, your TTM will give you an indication of when it is a little safer. So look at it. Look at Meta. Okay, Meta. See the difference in Meta? Okay. All right. Meta.
We've got jobs every single month, positive jobs.
Meta.
We've got earnings that have been strong. We are clearly the strongest economy in the world right now when Europe is starting to talk about cutting rates at faster pace. Jerome Powell, with everything, remember, you've also got 2 strikes going on that could increase wages. There's a lot of potential inflationary things still lingering on the horizon for Jerome Powell that could muddy the waters and his ability to lower rates. And the market, Caroline, has got, as you know, a bunch of rate cuts already built into this economy. So it could get a little dicey here. Could throw a little bit of uncertainty into that whole lower interest rate, higher stock scenario. But still, that said, earnings will really drive us in the fourth quarter, I think.
Earnings, and then how should investors be?
Okay, still got red histogram bars for most everything. The NASDAQ 100, we only have about 10 stocks green at the moment. Okay, they're talking gold spiking. Okay, so much for the gold short.
So, and S&P off almost 1%.
Yeah.
We haven't seen, we've seen some kind of, near-term impacts, because obviously we've seen a heightened geopolitical landscape for the past few years, but haven't seen, the market has continued to tick to new highs. Could Iran's involvement now change that?
Well, think about this. The first thing that rallied this morning, crude oil. Crude oil now back over $70. Remember, we were
All right, nice bounce on Meta.
As disinflationary and something that would help Jerome Powell. Well, if crude oil starts to spike again, if geopolitical tensions start to affect that part, that could reignite inflation. It's hard to say what a war like that or incursions over there do to the U.S. economy. The U.S. economy has remained pretty strong up until now. Matter of fact, a lot of the defense contractor stocks have rallied so far this morning on that news. Should they do that? Hard to say, but overall uncertainty because the.
All right, so Raytheon is one of the bigger ones. That's Iron Dome and everything else, right? RTX. RTX looks like it's going to break out.
All right, Kev, really appreciate you breaking that all down for us. Should note that we've seen all of the Mag 7 turn lower, except for Meta. Meta actually has added a bit to its gains, so maybe Meta is a safety play.
Raytheon looks like it's going to keep going. Bollinger Band's opening up. It's already consolidated for what? 4 weeks. Raytheon. Let me see what we can do with Raytheon if there's any good opportunities. Raytheon. Okay, I don't want to buy at the high. I want to wait for a little dip. I can put a limit order in.
Not even in the CEO seat yet. That's coming, October 14th, I think.
Yeah, I think Q1
Q1's, yeah, that's right. October 14th is when we will see that handoff. But I think Q1 expectations are fairly low. I think analysts and investors are expecting low foot traffic. They're expecting,
Micron pulling back.
still continuing to see pressure from competitors. And as we look at the numbers,
Okay, Raytheon. Let's see. Raytheon, defense contractors, General Dynamics, bouncing off the 200-day. I like this setup better, actually, but I won't buy it for now. Lockheed Martin breaking out. Lockheed.
a little bit higher off that Olympic ad spend that we expect the company did. And, there are some analysts out there that are wondering if the company is going to lower their guidance, which of course we could see a negative impact on the stock price from that, but it might set better targets for the new CEO and some of the
Lockheed Martin, Northrop Grumman, Northrop NLC, Northrop.
We're seeing U.S. and China, a lot of slow revenue growth there. Competition.
Okay, RTX.
Names like On Holding, which has been doing incredible this year.
Okay, starting to consolidate at the highs. Raytheon. Okay, gold at the highs. GLD. Let's take a look at gold. GLD. Okay, that's back up to the highs. Okay, so we got to pull back to the 90 MA, bullish 90 MA, 21-day, 50-day, all bullish, 200 days bullish. Looking for gold to head to 3,000. That's Russell's first target, I believe, 3,000. Meta pulling back a little bit. Okay, Meta pulling back a bit. Gold looks okay. Meta. Okay, Meta.
Direct-to-consumer is going to be very important. We saw direct-to-consumer business paid off very big for Nike during the pandemic. That direct sales revenue was up 60% between 2020.
Thanks, Frank. Okay, so we're looking at liquidity on the Qs. Okay, Frank looking at liquidity levels on the 4-hour. Let's take a look at the 4-hour. Okay, so this looks good. 4-hour, we got a lot of liquidity down here. Support. Looking for the bounce in the Qs. That's a good idea. That's a good idea, Frano. You're absolutely right. ITA, that's a good one. Defense, ITA. Okay. How much does this move? Moves about $2 a day. All right, so that's a valid candidate. ITA, IAR, ITA, IAR, not IRA. I don't see IAR. IAR, is it a different symbol? IAR. Okay. ITA though, that one looks good. ITA. $2 a day. It's already up 65 cents, so it could see a full $2 a day. Okay, ITA.
It might be priced in. It's a little bit difficult to tell now because there's still some question mark around it. Of course, we know for now, 2025, Nike's guiding for low single-digit drop in revenue. They're expecting a high single-digit drop during the first half of the fiscal year. If you look at analysts, for example, Jefferies, which maintained a whole rating, set a price target of 85 up from 80.
Let me look at the weekly. Okay, that's been on a hell-bent trend.
Until 2026. Therefore, they think the Nike shares are in no man's land and likely remain range-bound for a number of quarters. One of the bigger catalysts I think a lot of investors are waiting for is that analyst day in November. Right now, it's set for the 19th. A lot of people are expecting that that's when we're really going to hear this plan for what the company.
You could sell, put credit spreads on this too. Let me see what that looks like. 140. November. Sell a vertical. Sell the 140.
Time to trade it with Tim Bigham, option strategist at
Buy the
Thanks so much for joining the show.
135.
All right, so Jeff made the case for uncertainty for Nike, potentially lowered guidance, softer numbers, a lot of headwinds there. Not a whole lot of action in terms of shares right now. They're only off about a quarter.
20-cent credit. That's not enough. Let's see. 145.
But down about 20%
145.
approach Nike ahead of these earnings here.
Yeah, certainly, this week's, options are implying about a 7% or so earnings-based move on Nike, which I personally think is overstated. I think we'll continue to, as you and Jeff were talking about earlier, kind of just, grind out sideways here, kind of in no man's land. Certainly on the charts, the stock got to over.
Oh, there's hardly any open interest.
RSI over 70, now softening. Bollinger % over 100.
All right, let me cancel these. Should have checked that first. Cancel. Cancel. All right, let me see what kind of open interest we have. ITA. Futures continue to move lower on that news. Raytheon, RTX. RTX at the highs of the day. RTX. Looking for a dip in RTX. Hopefully we get a little dip first. Right now it's just consolidating. Could pull back a little bit. Reducing your risk at this point, probably not a bad idea. If we get a further dip, watch for buyers to show up. People throwing away shares right now. Looks like they're just selling positions.
Okay, I should note that On Holdings, Nike's big competitor that has been really crushing in terms of the competition, but also
okay, watching the cues.
More than 2% today to Nike outperforming On for the month of October. Limited scope there, but I guess what would make you more bullish on Nike? Is there anything specific that you would need to hear from Nike on the call later today that would make you a bull?
Yeah, certainly, coming out and saying, upping the guidance and so forth. Good news out of China has somewhat been priced into the stock already here, given that rally we've had. Valuations also getting a little.
The Q's still pushing lower.
Levels for Nike as well on a PE and price to sales basis. So really, they'd have to come out with up guidance, beat both the top
daily
to a large degree, and saying things are looking really good going forward. I don't think we'll hear any of that, but if you do, I think you'll see, a quick and sudden up move. But the fact.
Let's see, weekly.
Has already had a big rally off the lows here, kind of, dissipates any major upside, even on decent earnings-based news. So I don't look for much, if any, upside fireworks here, just given the valuations and the move and the overbought technicals here. But as you know, trading is trading and anything can happen.
All right, Tim, also just want to get your thoughts on the market as we kick off the fourth quarter on a pretty sour.
Okay, all these New York FANG index stocks are lower, except for Meta. Meta's holding on.
What are your thoughts as we begin the last quarter of the year here?
Yeah, absolutely. I think, obviously interest rates are going to continue to head lower, especially on the short end. The 10-year still, hovering above that 3.5% level, but valuations for stocks generally at historic extremes. If you look at, I like the favorite price to sales on the S&P 500, basically at 3 times price to sales. The only other time that happened was 7 years ago, which was right before a 20% or so pullback in stocks here. So I think it's going to be a little bit of tough sledding here. The leadership that we saw out of those kind of AI names you were talking about earlier has kind of, dissipated, to say the least, recently. So I look for more of a slide in. Certainly put further headwinds into any additional rallies.
Yeah, well, we're starting that slide today. Tim Bigham, option strategist by Alerts. Thank you so much.
You bet. Anytime. Take care.
Have a good one. Coming up, John Heller, CEO of Momentum, is here, fresh off ringing the opening bell. We'll chat with him about Momentum. Stay with us right after this.
Okay, you're going to take a 5-minute break. Raytheon looks like it's going to keep going.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
No problem is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to Morning Trade Live. I'm Caroline Woods and for Oliver Rennick. Momentum began trading on the New York Stock Exchange yesterday under the ticker symbol AMTM. Joining us now is John Heller, CEO of Momentum, fresh off of ringing the opening bell. John, thanks so much for being here. Saw you on the podium. Congratulations.
Thank you, Caroline. So great to be here.
All right. So Momentum just completed its merger with Jacob Solutions, or a few business units there.
Correct.
Tell me about Momentum and how this deal changes your business.
Well, Momentum, we're an international government services business, but primarily supporting the U.S. government. And by combining with Jacobs, we create approximately a $14 billion company that is one of the largest and, I would say, strongest advanced engineering and technology companies in the industry, really focused on 5 key markets: energy. And
watching the cues for a bounce too. Probably going to do some cues here. All right, cues.
And an international footprint that makes us stronger and more capable to deliver services around the world.
Okay, so I'm here. I want to kind of drill down into the defense component, if you will, because obviously we're seeing the markets fall right now with the geopolitical tensions rising in the Middle East, given potential Iran involvement in the
October 18th.
Situation. So, tell
October
me how
18th.
you would be involved here, and just how rising geopolitical tensions has really changed your business, given all of your government contracts.
And our history is really strong in engineering, research and development, science, in bringing together technology to advance American capability, our close allies' capability for security, intelligence. And so if you think of the conflict around the world, say in Eastern Europe, Middle East, you use Momentum as a company that can help
deliver capability to the warfighter as soon as possible. So we are able to get on the ground.
All right, Q's watching for a bounce.
Work with technology companies to bring together capability. An example would be unmanned aerial vehicles. So our ability to integrate and actually operate unmanned aircraft could be a way to support conflict if necessary.
Okay, so what are
Okay, watching for a bounce here. Okay, I got to take a couple of minute break. I'll be back shortly. Watch the TTM. That'll give you a good clue.
So talk to me about the key growth drivers, the key growth opportunities across, the defense. You mentioned intelligence, civilian space, environment.
Yeah, no, there are several, but we see the first one is space. And what you're seeing recently in the last 5 years is a massive increase in launches to bring technology into space for defense and intelligence use. And Amentum is the leader for design of rocket capability, full life cycle rocket design. So increasing that both on the commercial and the defense side, our ability to improve and advance capability for rocket launch. The second is putting ISR capability, which is intelligence, surveillance, reconnaissance capability in space. So those rockets are taking technology that is then used to improve our ability to see what's happening around the world, both for defense use, intelligence use, but also homeland security. And we are able to help design and develop those payloads and advance that. And then think of all the information that technology collects. You're really talking about the information age where we have massive amounts of information. How do you sift through that? How do you build the systems that can make that information useful for the intelligence force, for the defense? And we help build those systems and operate those systems that deliver useful information to our customers.
And you predominantly work with the U.S. government, or do you work with the private sector at all?
Well, this is a really interesting part of the combination of Amentum and the Jacobs CMS and C&I businesses. Amentum traditionally was focused with the U.S. government. The Jacobs business brings tremendous footprint with some of our very close allies, which I think is really important to America as we think forward. Our allies are so critical in helping strengthen peace and security for America and our partners. We will now have over 5,000 employees in the United Kingdom supporting the UK government, over 1,000 employees in Australia supporting the Australian Ministry of Defense, and employees across Europe to different allies of ours and in the Asian region.
Watch TTM. It has yet to turn. Watch TTM in the bottom of the chart. That'll give you a clue when to consider taking trades.
Obviously, with our number one customer being the American government, we're only going to do things that are positive to that relationship and support the U.S. government ultimately. And so our allies are really important to the American government, and that would be a smart way to expand our business and probably an area we would limit our focus to key allies of the United States.
So what's the biggest challenge your business is facing right now?
Well, I think with everyone, it's having the right culture to attract the best talent. And I think as you bring these two historic companies together that have, 100-year history, each has a unique culture, but both of our cultures are built around an engineering mindset, a problem-solving mindset, a focus on the customer mission. So I think that's something that is we're really going to be focused on to make sure that the employees of both companies feel really excited about what we're doing and that this is good for them looking forward, and so that everyone's focused and rowing the boat in the same direction.
And why now, in terms of actually going public under AMTM, your new ticker symbol? Why is now the right time?
Well, it was a great opportunity for us that we've always seen the Jacobs business as a very strong business in the marketplace. So we see each other in the market. Sometimes we might compete, sometimes we partner, but nonetheless, a lot of respect for each other. And we saw the leadership that the Jacobs team had in space in particular, also in cybersecurity. And we saw those things as very beneficial and additive to the Amentum capabilities. So for us, it was an unbelievable opportunity that, no, we didn't plan for it. They decided to spin out
but we knew of the business and always thought that would be a great partnership with us.
And just quickly, you mentioned cybersecurity. Obviously, we're getting very close to the election. How important is that component, do you think, especially ahead of a U.S. election where we have seen kind of foreign interference in the past?
Yeah, and it's unprecedented, the amount of kind of the foreign entry into our systems every day here in the United States or around the world with our partners. And it takes a significant capability to be on the watch for what's happening electronically in our systems. And Momentum has that capability, and I'm excited about strengthening that with the Jacobs business. But no, I think it's one of the biggest priorities and biggest growth areas with our customers is how do you secure your data? And we're using that data to create advantage. But if all that data gets in the hands of potential adversaries, then our advantage goes away. So it is absolutely one of the top priorities of our customers.
Is AI also a top priority? Speaking of data.
Well, sure. I mean, AI, I think if you look at it from a government perspective, there's a desire to see the advantage of it, but also a desire to limit the opportunity for AI to reach data that you don't want it to reach.
Right.
So what we use it, we use it as a tool to enhance our solutions. And what we use it in a way that's called narrow AI, where we limit the scope of the data that the AI tool can see. So it still creates advantage, but in a smaller, limited tool set so that we don't have the cybersecurity issues that could be created with AI.
All very interesting. We have to leave it there, but really appreciate you joining me here at the desk, and congratulations again. That's
so much.
ticker symbol AMTM, Momentum. That's John Heller, CEO of Momentum. All right, coming up, it's time for the Chartmaster. We'll take a look at analyst upgrades for Datadog, Clorox, and AB InBev. That's next on Morning Trade Live. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Morning Trade Live. It's time for the chart master. Jenny Horn is back with us to walk us through the fundamentals, and Rick Ducat joins us to go through the technicals. Jenny and Rick, great to have you both here. Jenny, let's start with you and start with Datadog. It's a loser today. Shares are off about 1% despite getting an upgrade over at DA Davidson. Fill us in on the analyst note.
Yeah, and Caroline, amazingly enough, because just like taking a first glance at this list of stocks, I would have never guessed that it was the worst performer on the year. But so many of these companies that have the cybersecurity exposure have been, like, their winners and losers have very clearly emerged, we've seen over the last just several months. But today, DA Davidson did upgrade shares to buy from neutral with a price target that was raised to 140 from 115. Now, mind you, the rest of the analyst coverage on this name, 146 roughly, is about to be average. So this puts it slightly below the average, but still would imply almost 30% upside from where we are currently trading. But they did say that the firm's proprietary developer data showed a strong positive inflection point now for Datadog, which gives them greater confidence of the overall trajectory of the demand. And overall, the firm has now greater confidence in Datadog's platform adoption play, as feedback from checks is now at this point suggesting that Datadog is gaining more traction, specifically within its SIEM product. So, I mean, Street still really very much likes this name. It's amazing to me to see how choppy it's been. We've actually seen like lower lows, continually not been able to take out previous highs, but there are still 36 buys and 6 holds and no outright bears in this name.
Okay, so no outright bears, a price target that implies, I think you said, what, 30-something% upside. Rick, what are you seeing in the chart?
Well, it's kind of a rough day for the broader market as a whole. We basically went straight down from the open here. Datadog not having the greatest day either here. We can see that for starters, we've got kind of an ascending triangle type pattern here between our upward sloping white trend line and this horizontal resistance near the red line here at 118. You can see this has been a repeated stopping point for price multiple times, and it's holding true once again today with a swift rejection here that is on pace to form a bearish engulfing candle. Today's big red candle swallowing up the real body of the previous day's smaller green candle. Real body meaning the distance from the open to the close. We're also at a pretty interesting point right now to notice that all our moving averages, our yellow 21-day, orange 63-day, purple 252-day exponential moving averages are clustered together right on top of each other, which speaks to a lack of clear trend direction and also gives us a notable supportive area between like 113.7.
Okay, we're starting to see some green candles, but wait until you see a TTM bar turning yellow. It's a 5-minute time frame. Let's look at the 15.
Now we are above the 50 midline, but only barely. And it's looking like that could change, especially if we start dropping through this support. So further support, if we do get through these moving averages, we've got our trend line right here, our white line around
Raytheon still going. Raytheon.
Blue channel here, that would come in near like 106 to the upside. If we break our ceiling near
Raytheon looking good on the daily. Daily gave you a nice little base for the last 4 weeks. 4-week base breaking out. You know, it's interesting how the military industrial complex always looking for wars to supply. It's disgusting, but you can see what's happening. People just can't get along.
A lot of these types of companies, up 2% today, like you mentioned, but Jefferies upgrading shares to buy from hold. Price target was raised to 187 from 174. And they said the company hasn't exactly been itself lately, but they see actually that changing. They also expect Clorox to return to its past, delivering more of this peer-leading economic growth and rerun on its capital
overall, they said that history has been met with a 30% premium valuation to its peers. So they see now the company's sales, which is already improving, and operating leverage is in sight. So they acknowledge a lot of these headwinds that it's faced. So many of these staples this year, I mean, pricing has been the biggest concern, and say that could perhaps be in the past. And I think that would be encouraging for all of us, especially those that are consumers.
All right, watching TTM for turns. Are we getting all the FANG stocks starting to look very similar? Microsoft is starting to turn. Okay, Amazon, Apple. All right, so Apple on a dip. Apple on the dip.
Street's fairly muted on this name, or just maybe more sidelined if you took the average analyst conviction here. All right, so Rick, Clorox shares up 2% today, up 17% almost year to date. Wall Street not too hot on this one, with the majority, as Jenny said, on the sidelines. But what do the technicals tell you for Clorox?
Well, I'm a little surprised to hear that, because it's a pretty darn good chart, especially in the recent term here. So let's look at what we've got going on. You can see earlier in the year, we hit our yearly lows. Then we made our way up. We peaked out at this light green line near 159. Then we had a bit of a drop off here. Price languished for a while. No help from earnings in April here. But then a gap up on our more recent earnings that has spurred on a steep upward trend line here. We topped out near 169, then gave some of those gains back, a very short-term white trend line, replacing
Okay, Apple.
sloping upward blue trend line.
Okay, watch these. Starting to see TTM starting to turn on many of these. Apple, watch the 5-minute chart on Apple. Okay, looks like we might see a bounce in Apple. Apple's ready to bounce.
RSI also paints a somewhat jumbled picture here. You can see that we've been trending upward for a good while here. We've spent a lot of time in that overbought area, that threshold above 70, typically regarded as a sign of strength in a trending market. But now, kind of both of our trend lines have been broken here on the RSI, so it's leaving us with
Apple starting to turn.
We are above the 50 midline, however, so it is more geared toward the bullish side. Folks in the controls, if you could
Futures trying to turn as well.
I do want to assess where we might find some further.
Okay, I might buy some Apple down here. Let's see, Apple might be too early, but Apple looks like it's going to turn. Going into earnings.
Channels here, and you can see that would be the +2 channel, that orange line, comes in near 173.4. So if we take out those old highs, that could be a potential stopping point. Now, if we look lower, we've got our 2 green lines, and just above that, we've got our +1 standard deviation channel right on top of our yellow 21 EMA. So like 159 to 162 could be
227, 230 put spread, call spread, sorry. Vertical.
As well. Fill us in. I know we are 3 for 3 with the upgrades and all upgrading to buy. So AB InBev City to C moving to buy from neutral with a price target of around €69. The analyst did say they also opened this positive catalyst watch on the shares, but mentioned we are still seeing this weakness in the U.S. and a slowing Mexico market, which mean that their third quarter volume estimates are actually now below consensus. And also they mentioned this ongoing now tight cost control in the U.S., meaning the company is on track to deliver its
Nano Nuclear going. Good job there.
4 to 8% guidance.
Apple just bought a vertical on Apple.
This would not exactly be a picture of an upgrade, but they did say that with margin expansion set to continue into
Nano Nuclear breaking higher.
scope for midterm margins to trend back towards their pre-COVID levels. The confidence in AB InBev's earnings deliverability is higher than their peers. They also think that management will announce a $1 billion buyback with their third quarter results released at the end of this month, providing a technical support to the stock in the coming months. So it's amazing to me for all of the negative PR and the backlash this company has faced that they ended actually their last fiscal year still being the best-selling beer brand in the U.S. I believe that is Bud Light. So they still do dominate beer sales, and their portfolio is so massive. I think it's very clear to see why, but I mean, it's modestly higher on the year. It's pulled back about 1% from its 52-week high, but definitely looking for a continuation of this recent momentum because we're about 30% now off of 52-week lows. All right, so Rick, the median price target for FUD is $71 a share. It's currently trading up about 1%, as I said, just under $67 a share, so a couple dollars upside from here. What are you seeing in the chart?
Yeah, 71 would be a nice move above those previous 52-week highs. So kind of a chart that's been a little bit stuck for most of this year. You can see we did have a nice rally earlier in the year, but then broadly speaking, we kind of just moved sideways between a low point near 57 and a high point near 67 here. So that was our high that we made on the year, and we came quite close to that once again today. You can see that we have this white trend line traveling upward here with some notable stops along the way, some support and resistance to keep an eye on here. But, you know, we are coming up to that crucial point here, and so far not able to really hang on to that elevated level. 67.49 is the mark to beat here. Overall, though, we're above our moving averages. We're having a nice steep rally. You can see that the pace of the gains is accelerating here. We had this green trend line on the RSI here pointing upward. Brief stop in the overbought area here, but we lost our trend line, then quickly recaptured it. Tiny bit of bearish divergence here, though. We are not making new highs in the RSI as price is making a new relative high here. You know, we would want to see price make a close above that level here and cross into that overbought area, hopefully here. So if we could click one to the right and take a look at our standard deviation channels, if we were to move to the upside, 69.22, that's the +2 channel, a little bit short even of our 71 price target. So there's some near-term road bumps to consider as well. To the downside, support at the +1 channel near 66, and then moving lower all the way back to our red line. 63.55 represents a repeated high point that we have now eclipsed.
All right, appreciate those levels. Anheuser-Busch currently up a little less than 1%, and yeah, only about 1% away from the highs. Rick, Jenny, thank you so much. Coming up, we'll discuss today's moves in the markets with our market meetup panel. That's next on Morning Trade Live. We'll be right back.
Okay, Nano Nuclear, nice little pop on Nano. Nano Nunu. Nano, all right, that's looking really good. And Nano, see if we can't get to 17 this time on Nano. Nano Nuclear. This one, you got to buy the dip, sell the rip. Okay, you can't sit in it. Well, you can sit in it, but I would look for dip buyers to come in. They're starting to come in now. Several different businesses. Most recently, it talked about a space division, if you will, focusing on space and portable nuclear units. I'm sure I'm bastardizing it, but Nano Nuclear definitely getting a bid today after the dip, most recent dip.
Accelerate your market knowledge and shift your perspective.
Excuse me.
Real-time example trades.
Alrighty. Okay, Micron, what are you doing, Micron? Micron doing exactly what we were looking for it to do. Micron. We made the nice trade. We leaned bullish on Micron. Into earnings. We had the, what was it? The 100 call. Expired last Friday. That was a great trade. That one netted a nice profit. In addition, we had the Iron Condor. Okay. That's working.
Welcome back to Morning Morning Trade Live. It's market meetup time. Joining us now is Alex Coffey, the co-host of Next Gen Investing, and Dan Grant, senior specialist retail trading at Charles Schwab. Alex and Dan, so good to have you here with us to close out the show. Alex, let's start with you because we're coming off a strong month and a strong quarter and kicking off Q4 in October pretty deep in the red. The Dow off its earlier lows, but still down about 260. The NASDAQ off about 1.6%. The S&P off about 1%. Russell off about 1.6%. Energy stocks obviously doing well today, as are defense names. But otherwise, you're seeing a lot of red arrows here. So talk to me about what's standing out to you, Alex, especially as those geopolitical tensions continue to rise.
Yeah, good morning, Caroline. I mean, when you look at this market today, you have to look at it in the context of what's driving it, which you mentioned, which is some of those geopolitical tensions, as well as how we closed.
Okay, I'm sorry. Here's Micron.
Brought that huge bid once again, which we saw, back in May. I think we saw it in June as well. We've seen it a couple times throughout this year, but those rallies aren't necessarily always super sustainable. Now you throw on there, some concerns around what's going on in the Middle East. It can, kind of add gas to what it was already a smoldering flame, perhaps, for equity market volatility in terms of where we set up. That being said, Caroline, looking back at history, and history can always be a guide, it isn't necessarily going to play out the same way. These geopolitical sell-offs have not been sustained. So if you're looking for or have been looking for opportunities to get into this market at lower prices, I'm not saying the selling is over here, and I'm not saying that we can't go lower, but you perhaps have that opportunity with the equity market 1% lower in the S&Ps and, 1 and let's call it 0.5%, a little bit more than that in the NASDAQ. I'm more concerned, I think, with some of the stuff that's coming out of Apple than I am this geopolitical things, even though, of course, the worst case scenarios are always, pretty dire when it comes to geopolitical tensions. We've seemed to avoid them over the last few years, so hopefully that continues.
All right, so it's just sticking with you quickly, Alex.
Okay, Nano Nuclear.
Market is facing
Still looking good. Nano.
right? Not just in terms
Nano
of
breaking higher.
tensions
Okay,
with
so that's working.
strikes going on, labor discontentment, concerns about what that could mean for inflation. You mentioned some of the issues out of Apple, potentially some weaker than
At some point, Nano Nuclear is going to stop working, but until it does, we're just going to keep making this trade.
What is the path of least resistance from here?
Buy the dips, sell the rips.
Question, but I think you should always note that
Last time we sold was pre-market $16.55.
that's why there's volatility in the market. That's why it derives a return over the risk-free rate, is because you are taking risks. So I mean, that's just a given. As far as the path of least resistance, the question always for big institutional portfolio managers or individual self-directed investors is, if I take my money out of the market, where am I going to put it? Are you running to cash here, which that rate is only coming down with the Fed starting to cut rates? Are you running to the Treasury market? Perhaps. That's been a market that's done well. Gold has done well. But those are also trades that have been doing
Okay, Nano Nuclear on the move. Okay, all of the New York FANG index stocks are showing yellow histogram bars. If you look at Apple, for example, Apple histogram bars are turning yellow. Okay, so do they turn more and head towards zero line, and we get a bounce back into the mean, back towards 230? That's what I'm expecting. 227 to 227.50, 230 is the calls I have. Vertical for now with a 50-cent stop. Not doing much else of anything with anything. There goes Nano Nuclear going ballistic.
Some of the things that I'm looking at, like the data revisions out there, is that the economy is still in a good place, right? The economy, we just had a record high in the indexes this week. But investors don't believe it, right? Our clients and investors just don't believe it. We have $6.42 trillion sitting in cash and money market mutual funds. That's on the sidelines. Investors still are hesitant to pile back into stocks. So are they putting money into cash? Yeah, they're still staying into cash. We'll have to kind of keep an eye on that. And we do have geopolitical risk. There was a fire in India for the Apple plant. I think that's going to disrupt supplies a little bit. I guess they're saying that China could pick up, and then we have the two strikes, BA and the dock workers.
Okay, so when it comes to the Fed, because we obviously
Okay, Meta still hasn't done much of anything. Futures are trying to turn, basing down here. What's Raytheon doing? Raytheon Okay, Raytheon, a little profit taking at the highs.
Path down from here.
Well, are they going to go? Are they going to go a half in November? And
If there are any developments in Israel, Iran, in that conflict, if anything happens or escalates, you could see this shoot up towards 130, 140 or so. So dips, buying dips better. Nanonuclear going. Okay, this is looking good. Nanonuclear.
All right, and thank you for joining us on Morning Trade Live. Stay tuned because Trading 360 with Nicole Catalidis is coming up next. And as a reminder, the current Charles Schwab CEO, Walt Bettinger, and incoming CEO, Rick Wurster, will join Nicole live to discuss the transition. Stay tuned.
Raytheon, nanonuclear, nice move. Running into supply at the moment. We got sell order blocks, resting orders sitting up here. If we break through 17, this could rip. All right, this would be the what? Third time pushing up against 15. Third, fourth time pushing up above 15. And then once we made it to 1632, and then again at 1771. So if we can surpass 18 on nanonuclear, this one could go nuclear, for lack of a better term. Watching the histogram bars, TTM histogram bars on the New York FANG index stocks. Okay. Okay. Going to take another break. I'll be 2 minutes. Be right back.
see you.
Tesla starting to bounce. Tesla. Tesla starting to bounce. Tesla looking better. Okay. What do I want to do with Tesla? Tesla deliveries are Wednesday. Wednesday delivery numbers will come out.
We've got 35 days before a pretty contentious election that, half the country's going to be unhappy, but it is the way it is. I think you can see some pretty good pullbacks. Net, we're very bullish. The HCO byline is positive. That's our trend indicator. There's two things you don't find.
Okay, Meta making new lows here. Meta.
Both of those are on investor sides right now. So I'd be bullish. I'd be buying on all pullbacks.
Meta's red TTM. We're looking for those to turn.
Well, one thing that's really opened up is the bond market. When you look at convertible bonds, people seem to overlook that. CWB is a great place to play. It's breaking out. It's looking very, very strong. Emerging market bonds are looking good. You can play that with DMB. We've been talking a lot about China with the PBOC doing what they did last week, and they're also throwing a lot.
All right, Raytheon turning back up. If you're looking at Raytheon, okay, that's a better dip to buy. Raytheon.
So with that, I know you have some trends in ETFs that you're watching. The ETFs, are there any themes among these ETFs? And I'd love if you go through a few of them. You have the TLT, right? You look at Treasuries, you have CWB, BPU. Tell me a little bit about some of
Raytheon catching a bid. Raytheon.
They are. They're, like I said, they're breaking out. TLT dropped back a little bit, and the reason for TLT being the 20-year Treasuries dropped back is some people are concerned about our debt, the amount of debt that we have in this country, which is something to be concerned about. Because sooner or later, it is probably going to break. But the other areas, the bond market, corporate bonds, high yield bonds, convertible bonds, emerging market bonds, they're all looking very, very strong, and they're all breaking out, and there's some money to be made there. We've only had one rate cut so far. We expect another one before year end, so we expect these bonds to move even higher. And I suspect the 10 and 20-year Treasury will turn around and be quite profitable and start to move higher also. An interesting note too, Nicole, is anytime you've had the Fed drop rates and we've not hit a recession, within 6 months, the market has been higher 7 out of 7 times. So those are pretty good.
Okay, let me go get my son. All right, let me put this on S&P 500. We need to stay above 5,700. Okay, we're just below 5,700, so this could get ugly pretty quickly. All right, so watch the S&P. All right, I got to go drop him at school. Okay. All right, so if we move any lower, you may want to buy. You know what? I'm going to buy some puts just for the hell of it. SPXS. Charts. SPX. I'm going to take a hedge first. SPXS. Okay. No, I don't want to do that. Let me hear.
Yeah, you do have an individual stock, though. You have JP Morgan, right?
SPXS.
I do. I like it.
Okay.
Pullback. I like that it pulled
I'll
back.
buy a couple hundred shares of this for now.
Financials usually pull back after the full first rate cut, and it's pulled back to an area that I think is a very viable stock. The company's well managed, well run, earnings are good. It should benefit greatly from what's going on with the Fed.
And then I didn't mention VNQ. Tell me about that one.
Which one? I'm sorry. Oh, VNQ real estate. Yeah. If you're looking at the real estate market, VNQ is a great ETF for real estate because as interest rates drop, you're seeing the housing market and the commercial real estate market start to move up. Another one that people should be looking at is utilities, BPU. That's a very big beneficiary of lower rates and what's going on with the Fed and dropping rates. That's going to push a lot of these different areas of the market higher and higher that did not participate in the last couple of years. It's all been the Magnificent Seven, but now we're seeing it really broaden out, which I think is incredibly positive for the market. And Nicole, one thing, the greatest, most powerful technical indicator in any market is new all-time highs. The Dow hit a new all-time high last week. The S&P hit an all-time high last week. That is the most bullish technical indicator that you could ever have in a market.
Last but not least, you're buying on the dips, and this continues into next year. Or do you feel like you're a long-term bull?
Until the bottom line goes negative, which is very positive right now, I'm very bullish. I'm buying on no pullbacks. Now, if that changes next quarter or next 6 months, we'll change our philosophy, change our thesis, and we'll move according to what the market's doing. And because we're trading, I don't know what the market's going to do next year or 10 years from now. What I do know is sitting here today, the HCM buy line's positive, and investors should be at 100% in the market.
Vance, it's great to see you. Thank you so much. Vance Howard, Howard Capital Management. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rich Ducat goes to the technicals. Jessica and Skip will take us through the trades for Eaton, Seagate, and Honeywell. We'll be right back. Trading 360, Schwab Network.
All right, looks like these New York FANG stocks are not going to hold up at the present levels at the present time. So we'll have to reassess this before noon and just after. I'm going to go drop my son off at school. I'll be back here before noon. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's October 1st, 11:10 a.m. First trading day of the month. Looking for this dip to get bought, hopefully, and then we can reassess it in the evening session.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Investor Research at stockbrokers.com. So glad you're both with us. Jessica, new month, quick thought on the markets?
Absolutely. We certainly have a lot of external macro headwinds hitting our way with the strike that's happening all across the coast, with supply chain issues, natural disasters also causing supply chain issues, and then, of course, geopolitical tensions, and then leading up to an election year. So even though we've got such a bullish backdrop from a technical perspective, we've got a lot of external headwinds heading our way and challenges that we really need to understand.
All right. Tell us a little bit about Eaton. That's going to be your first trade today. Why did it jump up on your radar?
Yeah, absolutely. So thinking about the supply chain issues that we're discussing at the top here, it really is coming down to nuclear energy and energy efficiency and AI disruption that has piqued my interest. So that's the theme that I'm going into today. For ETN, it's something that we've talked about before. They absolutely have secular growth drivers that has to do with grid modernization. So yes, that energy efficiency, but also the big impact that we're seeing on the grid in regard to AI. They've got AI-driven data center expansion. They're setting up really a robust runway for growth over the next decade. They've got clean energy and technology investments. They've got expansion plans with a backlog of about $11.4 billion just in its electrical segment. So I really think this is going to create a resilient market cycle for ETN and lead to that longer-term market share expansion that I'm looking for, as in this is going to be a solution, a tailwind rather, for that headwind that is the data grid, where I'm seeing the spending happen now on those hyperscalers. That's the opportunities I'm looking for right now outside of AI, just the impacts.
Yeah, understood. Okay, so they're saying there's opportunity here. Rick, take a look at the charts, please.
Well, it certainly enjoyed a nice move to the upside over this past 52 weeks here. You can see our low point all the way back there near our other edge of the chart here. We're up about 70% from that point here. So we had a nice rise to the upside. We topped out near 345.19, then gave back some of the gains. We had a low point right here that took us below our purple 252-day exponential moving average before recovering once again. Now price is sitting above our 3 moving averages that we follow: yellow 21-day, orange 63-day, purple 252-day exponential moving averages. So we've risen above all those. All the moving averages are trending upward. We've risen above our volume profile point of control. Thick red line here, area of heaviest trading on the chart, coming in near about 316 or so. So we've crossed some important areas here. You can also see RSI. We have been trending upward. We saw some acceleration of trend to the upside. However, a little bit of bearish divergence here in that price made a new closing high. RSI was actually trending downward. We've broken the trend line, but we're still bullish here. So some resistance areas to watch to the upside. Our old high right here, this red line, right about where we topped out a few days ago near 335, then our yearly high 345.19. To the downside, support. We've got our yellow 21 EMA, our volume profile point of control, and this green line here, that was a repeated low point, and then subsequent high point for price. So between like 310 to 317, there's a lot to choose from in terms of support, Nicole.
Okay, look, you're seeing a lot of support. It looks like you may have a case here. Jessica, final thoughts?
Yeah, just the way I'm structuring this trade. Normally when I'm adding something to my longer term portfolio, I use the at the money cash secured put. In this case, I'm actually going a little further out of the money just because of the external pensions that I'm seeing. So I'm selling the November 15th, 2024, 320 strikes, so about $10 away from the money. That still gets me a premium of about $10.90, but gives me a break even down to 309. So really lining up with some lower levels of support. So again, it's a way to add a security to my longer term portfolio utilizing options, and premium tends to be amplified on down days.
All right, next up, Seagate. Why this one?
Yeah, absolutely. So Seagate, again, this is going into data centers, and I really think that's where the opportunity is going to be. That headline that came across with Microsoft saying that they're just putting an infinite amount of money into data center leases. There's just expansions that are happening there. So I'm following where the hyperscalers are spending. They were spending first, that led to NVIDIA. Now they're spending on this expansion within the data center. So that's the next opportunity that I see. And Seagate technology leads to that. They have really positioned with AI and cloud demand. They've got really some driven growth. So I'm looking for revenue and margins. They're a little bit leveraged. That's something that is concerned for me. But again, it's data centers that I am looking for, cloud customers, that expansion, and where the money is being spent from those hyperscalers.
Right, understood. Rick, your thoughts on the technicals, please?
This is another chart that's enjoyed some really nice upward movement for the bulls here. You can see, once again, up about almost 70%, 68% or so from those yearly lows, coincidentally, pretty much the same as our last chart here. But what we see with this one is that we peaked out near 113.57, this red dashed line here. Then we gave back some of those gains. We've also got a longer term blue trend line here stretching across most of the year and beginning with that low point that I mentioned earlier. We did dip below it a little bit right here after we experienced that high point here, but quickly righted the ship, touched the trend line once again, crossed above the moving averages. Now we're finding ourselves above the moving averages. They're all trending upward here, and we are sitting right on this solid blue line here, the linear regression line based on the past year of closing prices. So line of best fit here, an idea of fair value for traders. We are right on the nose of it, almost exactly, just like 20 cents below that point right now. So this is a key supportive point to hold. Also, it lines up with our short-term white trend line here. So a doubly important area near about 108 that traders need to hold on to. If we were to move to the upside, those highs, 113.57, that's the first mark to beat. Then our +1 standard deviation channel, 1 standard deviation above our blue linear regression line coming in near 119.50. As I mentioned before, supportive area very close to where current prices are right now. Then the 21 and 63-day EMAs at 105 and 102 roughly, respectively here. RSI, one final question mark here. You can see a longer-term downward sloping trend line going across those highs in red here. That's still in play for really most of the year at odds with an upward sloping green trend line. We're above the 50 midline here. So more of a lean toward the bullish side here, but a persistent, downward sloping trend line on this RSI is something that needs to be considered.
All right. So in the meantime, just wanted to talk more about the year-to-date numbers. I mean, it's certainly been a winner. 1 year, it's up 63%. And it's interesting how it dropped off from 113. It dropped off right to that 90 level, like you were showing, Rick, but made its comeback back to the moving averages. Jessica, final thoughts on this, and then let's get to Honeywell, please.
Yeah, absolutely. So again, similar structure this time with a more aggressive strike price selection, selling the November 15th 105 strikes, collecting about 435 worth of premium. Again, it's a way to utilize options to add a security to my longer term portfolio. I'm creating an obligation to buy the stock at that strike price if it were to move adversely.
All right. Honeywell and Chevron are teaming up to develop some AI tools to refine processing. That's one of the headlines today. The stock is down about 0.8%, but is a winner over 1 year. Honeywell, please.
Yeah, absolutely. And that was the headline that caught my eye, Nicole. So I'm glad it caught yours as well. Honeywell, they're really positioned for strong aerospace growth and their leadership within autonomous and electrical propulsion technology. So this one is my energy efficiency pick. Still going with that theme. There is some AI exposure, but not as dominant as STX and ETN. Now, it's really interesting when I'm focusing on understanding the electric propulsion technology and even hybrid, and this is within the aviation sector, is the big issue or headwind with that is battery life. But Honeywell has solutions that has a longer battery life, that has longer flight times. So that certainly is something that will help them. But their biggest issue and headwind really is fiscal implications. So I think perhaps we'll get some understanding post-election, but also with some, when we've got the budget constraints finally understood, that's also certainly helpful. So I think Honeywell is positioned long-term to propel, if you will, what they are with their aerospace. But nonetheless, it's something I don't want to add more to my position. It's just a hold in my view.
Okay, Rick, can you take a look at the charts and the technicals, please, on this?
So this is probably perhaps our least volatile name here, the least overall movement, the least big swings here, but still not a bad chart at all here, because we can see that we are up notably off those lows here. But since last earnings, a bit of a struggle here, because we topped out near 222 or so. Earnings gave us a large gap down here. But since then, we've established a shorter term upward sloping channel here. We drew a normal trend line going across the lows, duplicated it, roughly put it across the highs. It matches up decently here, a common trick you can use to help yourself project potential resistance. However, we also have a very obvious, very important point to the upside to consider as well. The low point that we saw before our earnings gap down comes in near 213.13, this red line. We would be looking for this stock to fill the gap here. That's a common situation that happens in trading. Certainly not saying it's a guarantee that it's going to happen. I'm not saying that. I'm just saying it's a very common situation to retest that level, and then you have to make a choice as a trader. Do you look for the move to continue to the upside, or is this a resistance point that you think will overcome the price momentum here? So something to consider. And when we do look at momentum, speaking of momentum, RSI here, we can see trending upward on one hand, above the 50 midline here, but we haven't really made too much progress above our old high. See this horizontal red line here? That's what traders would want to see, would be a break above resistance on price, and also for RSI to make matching new highs. So support and resistance, this level right here, 213.13, that's the obvious point to watch to the upside, almost pretty close to this volume node right here. Then those yearly highs, obviously that's the next point to watch. To the downside, confluence of our yellow 21-day and orange 63-day exponential moving averages. They're right on top of each other near about 205, so that's a key point to hold. We tested it yesterday and held on. We came pretty close today. Beyond that, the next low comes in near about 259, so some areas to keep an eye on.
All right, Rick Ducat, thank you for those charts, and Jessica Inskip, stockbrokers.com. Thank you both for that right now. We appreciate it. Coming up next, big news from the Charles Schwab Company, right? Corporation. CEO Walt Bettinger is here, and Rick Wurster is here. We will have a conversation as they will be making some new announcements today, as Walt Bettinger will be stepping down in his role as CEO, and Rick Wurster will be incoming CEO in the new year. Let's talk about the leadership, the transition. An exciting interview next.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. This morning, it was announced that the current CEO of Charles Schwab, Walt Bettinger, will be retiring, and the current president of Charles Schwab, Rick Wurster, will be his successor. We'll give you all the details, and we have them with us right now. It is our pleasure to introduce to you Walt Bettinger, CEO and co-chairman of the board of directors of the Charles Schwab Corporation, and Rick Wurster, president of the Charles Schwab Corporation. Thank you both for being here. It is our pleasure to have you here today.
We're thrilled to be here. It's a big day. It's a big day for our firm, a big day for Rick, and I'm excited about this upcoming transition.
It takes a lot of work going into succession plans. I want to talk all about it, but first we need to acknowledge what you have achieved, the most significant growth in history, clients, assets, revenue, profits, market cap. You came on during the financial crisis. We were calling it the Great Recession. I was here reporting, talking about the layoffs. You came on during a really tough time, Walt. And now you're choosing retirement. So tell us about that road.
Well, it was definitely an interesting time. I often joke that not many CEOs survive whose stock price goes down by half in their first 90 days. But it was a difficult time overall. But I think it also laid the groundwork for a future of powerful growth, as you shared, going from about 1 trillion in client assets to 10 trillion. So often out of the ashes of challenges come great opportunity. And with Chuck's leadership, up to the point I stepped into the role, and then the great talent across Schwab, all of our Schwabies, we were able to create some powerful success in the last 16 years.
Yeah, I wanted to go over some of those numbers from 1.14 trillion, the client assets, to nearly 10 trillion, right? 9.74.
That's right.
Client brokerage from 9.3 million to 43.2 million. Stock up 400%. You may remember when this was a $16 stock, all the way up to $65. Market cap 660%. Well, you've been there, Rick, for a lot of this, and it has been noted how you've been along, you've been working together closely, you've been in the face of this business. Tell me about the transition now as you will take on your new role January 1st.
Well, I have a great role model in Walt, and he's done an outstanding job with this transition. He's really supported me and mentored me, and I feel really well prepared. At the same time, I'm also very grateful to be coming into the company at a period of such strength. We've never had a better client offering than we have today, both for our retail clients, our traders, our advisors. We're as well positioned as we've ever been. We're number 1 or number 2 in the 2 fastest growing segments of financial services. And to be coming in at this time and to be able to continue to work with Walt and benefit from his insights and mentorship is it's really a dream come true.
This has been a disciplined multi-year succession plan in the works. I was curious, as you did this, you've gotten some great words from Chuck Schwab. What are your great words to Rick at this point?
Well, I think the lesson that Chuck has shared with me, 2 big lessons. One is it's always about the client, no matter what the issues are. If your focus is on clients, in the long run, you're going to be successful. And then that plays into the second great lesson from Chuck, and that is take a long-term perspective. We know that the market has ups, it has downs, environments get better, they get worse. And of course, our stock is going to have up and downs. But when you focus on clients and you take a long-term perspective, that's when you can reward shareholders, reward your employees, and importantly, reward your clients.
Yeah, you talk about the clients, nearly 44 million, employees 33,000, the stockholders. Rick, you talk about this all of the time, from the farmers to the grandmas to everybody, right? And you have a lot coming in the wealth management side and young investors, serving everybody.
Yes, we are thriving, and we do. When you talk about 10 trillion, it's such a big number. You can lose sight of the fact that behind every one of those dollars is an investor that we're serving, that we're helping to meet their financial dreams. And that's what, one of the things I've learned from Walt is we always put the client first. And behind that $10 trillion are clients trying to live their financial dreams. And we're here to help them succeed.
I think about the growth opportunities and the younger folks, Walt. You've been in this role a long time. In 2008, you came on in your CEO role, but you had been president and COO prior to that. So this was 16 years ago, but you had already been with the company. What's your advice to younger investors as more and more are becoming Charles Schwab clients?
Well, I think our advice has been very consistent for a long time, and that is set an asset allocation, understand your risk tolerance, keep your expenses as low as you possibly can, and then stick with that long-term view. That to us is the path for most investors. Now, there are traders who are particularly capable at trading. They're disciplined, they use risk management tools, and they can be successful also. But for the majority of our investors, taking a long-term view, watching those expenses, and I'd say following some of the advice that Schwab offers is a great path to success.
And you think about wealth management, such a huge position as a brokerage, as a bank, and more coming in, growing the number of clients quarter over quarter, the money coming in, and the pressure on you, Rick. Now you're going to have more starting January 1st. I know you've been seasoned for this. I've heard a lot of kind words, all about you, what a talented executive you are, your great integrity, that you are, in fact, ready, talented, and ready for this position. But tell me about your new role here as you think about the growth opportunities and what you'll do in the new year.
Yeah, well, big shoes to fill, and so there is some pressure, but I also feel very well prepared. In terms of what we're focused on, it all comes back to the client. It's about empowering our clients to succeed in their financial life. There's a number of initiatives that we have to do that, to continue to grow our business and delight clients, one of which you mentioned, which is wealth management. There is a bull market for advice. And one of the pivots we made, back early on in Walt's day was really to move from being a transactional firm to being a relationship firm, where we build relationships with our clients and really help them take ownership of what they're trying to accomplish and help them along the way to the extent they need it.
So many tools, so much advice, so many outlets for folks to get into Schwab and understand trading better and understand the markets and their financial planning. I did want to speak about the integration of TD Ameritrade. That wasn't easy. I mean, this was the largest in history of its kind, a huge undertaking, and went pretty smoothly. Some of your thoughts as you wrap that up?
Sure. So most of the integrations that have gone on in our industry were fairly simple and straightforward. They were often what we call lift and shift. The acquiring firm simply closes out at the old firm and moves every client over in mass to the platform of the acquiring firm. But that's not really through client's eyes. That's not consistent with the strategy that we have at Schwab. And so what we did is we took a best of both approach. We knew that Ameritrade had platforms in several cases that were superior to Schwab's, just as in some cases, Schwab's platforms were superior to Ameritrade. And by taking the best of both, it added a little bit of time to the integration, but ultimately for the long run, it's the right way to serve our clients and grow the firm. When we look at the results financially, the attrition was lower than in any acquisition of size in our industry ever, which is quite an achievement for Rick and Joe Martinetto, our former COO, who led that integration. When you consider they did the largest integration and did it with less attrition than any other acquisition in our industry, it's a real feather in their cap.
I mean, it takes a lot of time, and you did it so methodically with so much discipline to make each client feel welcomed and prepared for the change. I think about also how some of the clients are doing a couple of things. You called it core and explore, I believe, right? They're investing, but they're also having some trading experiences, right, Rick?
Absolutely. And, when we acquired Ameritrade, one of the great things about the acquisition was we acquired a new strength and a new capability around trading. The Thinkorswim platform, we think, is the strongest trading platform in the industry. And Ameritrade came along with education around the platform to really help traders do their best. And what's so exciting to us about this going forward is that, as you mentioned, a lot of clients will keep part of their dollars to trade. Right. And their other money they want to invest for the longer term or use advice. And now that they're part of Schwab, we're finding that Ameritrade clients are willing to engage with us on all of that, not just the trading, but also the advice and the wealth. And that creates a really exciting future for us.
Yeah, and we have the great wealth transfer. We keep hearing about that. Some thoughts on that as folks are trying to hold on to that principle, add to that principle, and pass it down. We talked about young investors. Thoughts there?
Well, I think Rick said it well when he referenced how we continue to acquire younger investors, and also we've moved to a relationship model over the last 15 or 20 years. And by having those deep relationships, we build connections with whether it's surviving spouse or partner, or even the children to someone who might have affluence, and therefore give us the best chance to hang on to those assets, continue to serve the next generation.
So you're going to have a different role, right? You're co-chairman of the board now. You're going to become executive co-chairman with Charles Schwab himself. So you will still have a significant role, but it'll be a different type of role, Walt. What are some of your thoughts about some of your retirement plans? I mean, what have you been waiting for?
Well, I think the first thing is I had an incredible role model in Chuck, who served as executive chair during my entire tenure as CEO. And I remember when Chuck and I made the transition from him being CEO to me being CEO, from that day on, he always said on key decisions, "Walt, you're the CEO, you have to make the decision. I'm here to offer you support and my experience." And I look forward to following that same approach with Rick. When Rick is CEO, he makes the call. I'm there to support him and offer any words I have of experience. From a personal standpoint on retirement, I'm excited about that. As you know, jobs like this are 24/7, 365. There's sacrifices that are made by my wife, my 5 children, my 3 grandchildren, and I look forward to spending more time with them than I've been able to in recent years.
Yeah, and you're an empty nester now. You'll get to enjoy the grandchildren. This is your moment for your next chapter.
Yes.
This is it.
Yes.
Rick, are you ready for January 1st? You're busy 24/7 every day as it is now, right? You're ready for 2025?
Well, I'm ready. I have a great role model in Walt. I have a lot of gratitude for working at the company. This is a company that 50 years ago, took action to disrupt the industry, to make investing more accessible, to make it for everyone. And I'm so proud to work for the company. And I'm so proud to hold the position that Walt has held and that Chuck has held, 2 people that I admire a lot, both professionally and personally.
And I know it has been in your leadership to always focus on the clients, employees, and stockholders, and at the clients, everybody. And you're going to be taking the reins and doing much of the same. So I wish you the best of luck in your new role. Congratulations in your transition, in your new role, and enjoying some well-deserved time with your family. It's great to see you both. Thank you for being with us here today on Schwab Network. Walt Bettinger, CEO and co-chairman of the board of directors and Charles Schwab Corporation, and Rick Wurster, president of Charles Schwab Corporation. Coming up next, the disruptors. Kevin Green standing by. He'll take a look at Datadog. We'll be right back. I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. Time now for the disruptors. Kevin Green is here, Senior Market Scores Foundation, here to talk all about Datadog, D.A. Davidson upgrading this stock. And we want to hear more about the call. Kevin, good to see you.
Good to see you as well, Nicole. We are seeing an upgrade, as you said. We have a new buy rating for the shares that's up from neutral with a new price target of $140, and that's up from $115. Now, they're just really optimistic when it comes to the platform adoption for Datadog's product offering at this point in time, and they think that that's going to actually be a tailwind for them when it comes to driving top-line growth as well as trying to expand margins. Now, one thing that they did note, they have proprietary data that basically their channel checks are saying that adoption for their product offering is actually a lot faster than what they initially expected here, and they are expecting that maybe market share would actually increase in the near term. Now, we know that Datadog really does focus on cybersecurity, and that competition within that space is really heavy, but with the recent issues that CrowdStrike has seen, there has been some optimism that maybe some of their customers may actually go over to Datadog, or maybe some of the other players within the space, which could actually improve Datadog's market presence as a whole here. So overall, you are seeing the stock kind of consolidating, trying to break out to new highs here. But it has been a little bit of a tough road, especially today after some of the geopolitical risk that's been hitting the marketplace as well as economic data. But I think over the long term, when you're looking at the vision for this company and the fact that cybersecurity continues to be an issue that a lot of companies have to spend on a month-over-month basis, over the long term, it seems like there's a lot of optimism from analysts when it comes to the prospects in the expansion of their product offering here in the near term.
All right. That being said, could you give us an example trade, please, Kevin?
Yeah, definitely. So if you do have some optimism when it comes to the stock here, looking at the October 15th, 115, 130 call spread, doing this for a debit of $3.50. Max loss in the trade would be the amount paid for the debit, which is $350. Max gain would be the difference between the spread minus the debit paid, which would be $1,150, with a break-even point of $118.50. Now, this gives you a little bit of time to try to see if the stock's going to break out to the upside here, Nicole, but your break-even level does give you a little bit more delta in the event that it does not actually achieve that $130 level at the time of expiration. And if there is a market available, you could also take this trade off if it is profitable and worth doing so here. So an optimistic trade, risk defined, and then also bullish overall when it comes to Datadog.
All right. Kevin Green, thank you for that. We appreciate it. Good to see you, Kevin. Coming up next, it's time for our 360 round. We're going to check in on the labor market. Today's JOLTS report. We have the Friday jobs report that's coming up. That will be key. Trading 360. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to Trading 360. Time for the 360 round. We're looking at the labor market. Want to bring in our panel. Richard Walquist is with us, Chief Executive Officer, American Staffing Association, and Amy Glazer at Adecco. Thank you both for being with us. So we've gotten our JOLTS data and we look at the job openings. I know that the Fed has been focusing very much on the labor count. Amy, some of your thoughts?
So I think the report continues to show we have a strong labor market and stability is the name of the game right now.
And Richard, some of your thoughts here as we look at the JOLTS and more.
Sure. So the labor market is certainly cooling, but it's not rapidly slowing. One of the things that we take a look at is labor market churn. And what we saw in this morning's JOLTS report was that companies are not laying off large numbers of workers, so we're not seeing big separations. But the other thing that we're seeing is quits, and so workers are staying put. In fact, they're becoming wary of the job market right now. So right now, we think that things are somewhat in limbo, but we see a normalization.
And so with that, at this point now, when we take a look, Amy, you're looking at the jobs report on Friday. Is there anything that you're really honing in on? Obviously, we're going to have, we have the estimates, but the big picture on some of the themes that you're watching most closely, Amy?
Yeah, we continue to see healthcare be white hot labor markets. We continue to expect healthcare to rise. August is usually kind of a slow month, and we're preparing for the September surge as companies get ready to start holiday hiring and ramp up.
Richard, we look at the different types of jobs. We watch wage growth in comparison to inflation. Some of your thoughts and a forward look here into Friday's number, your expectations, and the labor force participation rate is something that people talk about as well. What will you be watching for?
So what we really like to begin seeing is that the job growth is extending beyond just a couple of sectors. And as you are aware, I mean, over the last year, we've seen disproportionate job growth concentrated in government jobs at the federal level and also the state level, the healthcare sector, social services. We've been seeing some upticks, which are very encouraging in construction. But I tell you what we're really looking for now is an uptick, kind of an end of the year bounce, both in logistics and manufacturing, something that in a normal economy that we typically see at the end of the year. So we'll be watching for any upticks over the next couple of months in those sectors.
Yeah, Amy, some of the thoughts that you had about the landscape of the employment issues are how people like to work, hiring, some hiring predictions, maybe some part-time roles. You also had stability being a priority for folks.
Yeah, part-time and flexibility continues to be key. We've got 5 generations in the workforce for the first time in history, and employers really have to lean into that and make sure their workplace is inclusive for all. Flexibility continues to be the #1 need of all generations.
Yeah, you know, Richard, you also talked about the hybrid work schedule. Is that going to work? Is it working for folks? Is it actually happening for folks?
Hybrid work is working very well for folks. For their employers, the jury is still out, both in the United States and around the world. We are seeing a return to office. We're seeing more businesses now at 3 days a week in the office. Very notably in the press, we've seen some big companies that announced they're going to have mandatory return to work 5 days a week, Amazon most recently. Those experiments haven't worked too well yet. I think that we're going to find a kind of a middle ground. So during COVID, everything shut down that could shut down. All white collar turned remote. The pendulum really swung very, very far in one direction. And workers got used to it and workers liked it. Productivity fell, but also we saw that worker engagement scores fell. And if there's one thing that is a truism now, as we're entering this next period of what we hope is economic growth, it's going to have to be the focus that employers have on employee retention and employee engagement. We're already seeing signs of it. When you take a look at the separations, the layoffs, we see that employers are still holding on to talent. And on the talent side, we see that talent is reading the job market pretty well. They're seeing that there aren't as many openings as there used to be. But we think both in the United States and internationally, we're going to find kind of a middle ground, probably many, many more hybrid offices working on 3 to 4 days a week.
And you mentioned the rate cut comes in, it's welcomed by many businesses. Maybe that could help them in the books and help them maybe catch some fresh air, you wrote, and as they want to grow the businesses and doing the hiring. Job openings rose, they were to 8.04 million, exceeding those analyst expectations. Final quick thought, because folks are still having a hard time finding a job, Amy, than they did 2 years ago.
I still remain optimistic and encourage people to do so as well. We've got a great Q4 coming up, lots of holiday opportunities, part-time seasonal work to supplement while you're doing that long-term job search.
Yeah, Amy Glazer at Adecco and Richard Wahlquist, American Staffing Association. Richard, Amy, good to see you. Thank you so much. Thanks for joining us here on Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. Eastern Time for the watch list, so join me then. In the meantime, download our Schwab Network app. It's free in the Apple App Store. Tune in 24/7, schwabnetwork.com. Keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. And everything we say, everything we do is through that lens There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We're going to discuss markets. We're having a sell-off here today. We'll also look at some option strategies in Boeing, which is under pressure again, or was under pressure again, amid reports of a stock sale, and Lululemon, which has dumped about 48% so far this year as core U.S. sales slow. And like Folio, break down consumer sentiment data in Nike. The athletic apparel company reports earnings after the close, with the bar set pretty low on this one going into those results. Now let's take a look at the major indices, which are off a session lows, but still deep in the red. S&P 500 down 1%. Dow Jones Industrial Average off about 140 points. NASDAQ 100 down 1.7%. Pretty solid reversal there to the downside. The Russell 2000 small caps off 1.5%. Help me break down.
All right, we are back.
Kevin Hinks. Kevin, geopolitical risks on the headlines here, and that's causing right across the board after a solid September.
And just look at the VIX, look at the 10-year note, look at gold, look at the dollar.
Yeah.
It reeks of geopolitical risk. It's everywhere, and it's easy to figure out that it's risk off today. And oh, by the way, defense contractors. Why was Boeing down in the morning and up now? Defense.
Yep. RTX.
Yes.
LMT. Some of the other
that whole sector has just exploded this morning. And is that the right move? It's hard to say, but it's an obvious move. It's one you can connect the dots to. So now what? Well, the good news is
Okay, Apple watching that. We got cyan bars showing up over the last 15 minutes on Apple, Amazon, Google, Microsoft seeing last 10 minutes, and Tesla. Tesla showing 3 bullish TTM bars. Okay.
So right now it's
Okay, nanonuclear with a bounce.
for the next headline to come out, and it's risk off until then.
Yep. United States has indications that Iran preparing to imminently launch a ballistic missile attack against Israel, according to senior White House officials. So we'll continue to watch that story because it is taking hold, moving markets at this point. And with markets, the S&P 500 and Dow settled at record highs yesterday. It's not surprising any little thing like this, geopolitical risks in that region could set off some downside here. But let's expand this conversation, bring in our next guest. That's going to be Alex Coffey, senior equity contributor here on the network. Alex, I wanted to get your take here.
Boeing, let's take a look at Boeing. Boeing made a nice reversal off the low. Okay, so do we get, we got supply overhead that we got to deal with, but Boeing looking pretty good. The 160 strike being pointed out by Ricky over at Seals Beach in California. Ricky, I hope everything's going well on the West Coast. Boeing, a little dip there.
For much of yesterday, and then you saw that pretty, vicious rally into the close. So giving back much of that and maybe a little bit more. All things considered, though, I mean, you're still above the
Abbott Labs. Okay, I'll look at that one. Thank you, Paticus. Appreciate that.
2 consecutive good years now for the
Abbott
market.
Labs.
If history is
Okay, nice little bounce at the 50-day. That looks really good. You got buyers at the low of the day, ABCD pattern.
It's really not in the best interest of these
Okay.
governments if you look at it from a realpolitik kind of a way.
Q's looking good. Q's, nice bounce on the Q's.
Shows a force because of the tensions that are there, and hopefully it stays that way. If it escalates something beyond that, yeah, there could be real risks. But you know, historically,
Q's looking really good.
Geopolitics have actually been, you know, kind of.
Looks like it's going to rip here. The Q's. Let me put a vertical on here. Q's. I'm going to buy end of the week.
You know, what started that yesterday.
I'll buy end of the week. Verticals. Let's see. That'll be the 4th. And let me go. Hello there. You know, type on my keyboard. I got a visitor. Okay, watch it for a break through this area.
This is what the market does. And Jerome Powell did what a Fed chair should do. Think about this, Tom. There's a lot of inflationary things running through the economy right now in terms of spending, and potentially, remember, you've got Boeing strike, you got the port strike. That's wages
Okay.
going higher.
QQQ.
Did you see the number request by the workers?
What do you want?
61.5%
Cat came to visit.
They worked out at 57, but they called the Boeing strike. They're looking for 80%.
They offered him 50%. They said no.
Right. So that's going to put up wages. Jerome Powell had to temper the, unbridled enthusiasm that the market had towards rate cuts, and he had to bring it back into more realistic terms. And I think he did that.
Okay, I bought some verticals on the Q's to join you guys.
And then he's going to get to the neutral rate over time, right? The market wanted him to go to the neutral rate during that interview, and he said, no, it's going to be over time.
Right.
So
Pay, P-A-Y. Okay. P-A-Y, pay. Big reversal. Yeah, it looks good. Pay.
End of quarter window dressing, perhaps that could have been.
Paymentus Holdings. Okay. We used to trade that one a few years back.
Jobs report actually increased about 329,000.
Okay. Looks good.
So that's a positive because that's what the Fed's concerned about at this point, right? Yeah, on the margins, I'm on record saying this every time this report comes out. I mean, this is the least useful of all the job reports because it's one so far back in time, but it's the most optimistic view you're ever going to see of the job market. We know there's sales postings because, you might even know hiring managers and they still have things up on LinkedIn or whatever, site they may use, and they've already filled that job. They just haven't, taken that posting down. When you look within that report,
Boeing. I'm going to sell some put credit spreads on Boeing. Doesn't look like it's going to come back. I don't know. I don't like Boeing as much as others. I'll leave Boeing alone.
There's just not hiring, but there's not firing. And so if you're not already in the job market,
Okay, Amazon's already turning. So is Apple. Amazon buyers at the low of the day. Apple.
shows up in the sentiment report, that shows up in University of Michigan consumer confidence. There are a lot of Americans who are saying this isn't a great economy, despite what the numbers say. And so until something meaningfully changes there, I'd expect more of the same.
Somebody just bought a crap ton of nano-nuclear. It popped on that, gapped up just now. Qs look good, looking like we're going to head back up at least 50%. Okay, so look at the Fibonacci's. Rick does this a lot. He does it a lot better. Okay, he is good at this. Fib retracement. Okay, so he'll take.
Told you the labor market's worse than expected. ISM employment was 43.9. The expectation was for it to increase from the prior 46 to 47.1. So
He'll take a 50%. Okay, 50% retracement would bring you back to about 462. Okay, you'd be back to about 482. 482. Sorry, 482.
Yeah, and in that ISM, Kevin, New orders bounced a little bit to 46.1, 1.5 points.
Okay, so watching that.
They dove almost 6% to 48.3.
The Q's watching for a bounce.
The lowest lowest for the year of 2024. That's a positive as far as inflationary pressures because that had been rising into the end of last year.
Yeah, anytime you see a move like that in prices paid, that's deflationary, right? And however, it might be lost because crude oil's up 4%, right?
Right.
So I remember we had a lot of eggs in the crude oil basket in terms of lower energy prices, fueling lower inflation. Now it's up 4% today, back over almost $71. So that narrative is now a little shaky, but that could reverse pretty quickly. So the general news from that is the price is paid, pretty solid number.
Yeah, Boeing could be a bottom on this one. They've got awarded a bunch of military contracts as well. So yeah, that's a good point. That's a good point.
And reports about the imminent attack from Iran sent crude oil futures moving higher, which was, that's one of those stories that we've been talking about where geopolitical risk got pushed aside because demand was low for crude oil. And then also production was at record levels also.
Okay, watch this move here.
That's inflationary, right?
Q's are about to go.
But if this drags out for, a week and a half, it's going to, cause some issues. And, people are trying to build up inventories right now going into the holiday shopping season, amongst other things.
It definitely can be inflationary, but I mean, we just talked about the JOLTS numbers. We just talked about these ISM numbers when it comes to employment. The leverage is not with the worker the way it was 2 years ago. So isolated cases where, big, unions might go on strike or renegotiate labor and get higher wages. Yeah, that can be inflationary in an isolated situation. But for the most part, when you look at the sentiment reports and you ask consumers and people who are...
Okay, watch the Q's here. If this goes, this could see a lot of stocks move together.
That they're going to keep their job at the moment. And so they're not going to go in and ask for a raise if they think that there's a chance that, their job's going to be cut, or if they don't think they can...
Okay, Apple's starting to move higher. There goes Amazon. Okay. Opportunity.
The chart. So you have something that should be spiking prices. It is spiking prices. And that's a still very, very, very deflationary looking chart.
Okay, we should see a lot of tech go with. There goes Meta. Meta's ripping back up to the upside. I might buy some Meta. Let me take it. Meta, we've got what, 575, 580 was it? Money Magic levels. Meta. I want to go Meta. Where are you, Meta? There you are. Okay, 580, 600. So Meta, I'm going to do something with Meta too. Let me trade some Meta. Okay, Meta, it's got cyan bars for the last 20 minutes. Meta for Friday. I'm just going to do something cheap here at the money. 575, 580. Vertical 575, 580. 575, 580. All right, so I'm going to watch this one. I'm going to keep this trade open. So if the Qs start to go more, all of the New York FANG are doing the same thing. Okay. Remember yesterday? When the TTM turned on everything? The Qs, gotta wait a few minutes. Let's see what the Qs do here.
Really reeks of, that is a big indication of risk off, right?
It is risk off, and you've got central banks, and now it's being used as a safety play.
Okay, nano nuclear is going. Nano nuclear.
Into treasuries too. Yeah. And I've kind of been waiting for that move into treasuries, Alex. I mean, I know that you follow the treasury market pretty closely, but I've been waiting for this to bounce back a little bit, where we get that trajectory starting again, because after the 50 basis point cut, yields have actually firmed up a lot.
Yeah, this is where I think it's important.
There goes nano nuclear. Okay, this is gonna make our day.
Treasury market to have tailwinds. Interest rates are going lower. The argument is whether or not they'll go low quickly because they need to, or if it's going to be more of a sustained move towards that neutral rate, is the case of Jerome Powell. Well, either way, the rates are going lower because the growth and inflation situation are going down. The longer out in the curve you get, the more those interest rates reflect the expectation for inflation and growth over time. And so when you look at, let's say, ZB, which is
All right.
something I watch a lot because it moves a little bit.
Nanonuclear pushing higher. Okay, watching Meta. Watching Meta. Okay, Meta. Okay, we got a little bit of supply right overhead. If we can, you know what? I could wait. I could wait. We got 580 and 600, right? Oh, I posted this in the wrong room. I just realized. Sorry about that. Delete. Yep. Delete. Yep. Delete. Delete. Posted that in Money Magic's channel. Can't be doing that. Can't be posting in the wrong channel.
Maybe you'd be less likely to make a decision on what you want to do. Because it's something that's short-lived sometimes, perhaps if you were already in this trade, you'd be looking to reduce because you might get back some of this if it ends up not being what's...
There goes Nanonuclear going nuclear. Okay, there it goes. There it goes. Okay. I'm going to go ahead and take some Meta now. I'm going to take some Meta right here. Okay.
Potentially looking at raising at least $10 billion in the potential stock sale. That's what is coming right back.
Let's see. 575, 585, 75, 580. Do, 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 do.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Okay, Nano, Nunu. Having fun yet?
The number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking Boeing. It's been in the headlines for it seems like the last few years now. Getting a little bit of a bounce today, and this is probably on the back of maybe some of these defense names catching a bid because that is
Okay, almost $2 now. This thing is going vertical. Okay, looks good. Nanonuclear going.
End up selling shares. Let's get into this discussion, Kevin. You follow Boeing extensively, and you have for years.
Love-hate relationship with Boeing.
I think of a lot of investors are.
Traded $149.49 this morning,
Yeah.
and then all this happened, and defense contractors picked up, which We don't talk about Boeing as a defense contractor, but they're an enormous defense contractor.
Right.
So it's not just 737.
Pre-market too.
Yeah.
46 58.
So let's talk about this because $10 billion, they need to raise capital right now. Machinists, 33,000 of them on strike right now.
80% raise they're looking for.
They're looking for, they're putting the screws down on a company when you don't want the screws to be put down on this company because it's important to manufacturing here in the U.S. and it's an important U.S. company.
This is a company in need of good
Okay,
news.
Nanonuclear looking good. Nanonuclear.
In the stock market. Here's
All right, nice pop on Nanonuclear. Look at the cyan color TTM bars. Look at the volume. Okay, it's about to break through 17. Looking really good.
The numbers are still down 25% year to date. The good news is they're still booking orders if you look. Geopolitics kind of saved them today because of the defense contractors. And the stock has got a lot of this bad news priced in, but the strike impact.
Okay, can we get through 17 this time?
It's just going to be this company. Here's the good news. I'll give you the final bit of good news because there's not much good news to report. This new CEO, it comes from the engineering side and may improve all these problems that may have been caused under Calhoun. I think that's a good promise for the future. But boy, much like
Oh boy, look at this thing go. Nanonuclear is going vertical.
Yeah, and Alex, they're right on the cusp of maybe some of their debt going, getting downgraded to junk status at this point. So they need to raise capital, right? In this, they've had furloughs. Some of their suppliers have had furloughs. Wells Fargo came out with a note today, lowered the price target to 110 from 119. They've been underweight on this stock for a number of months now, but there's caution out there. Maybe there should be at this point.
Yeah, if this company wasn't one of two major players and the only one located in the U.S., I think we'd be talking about potential bankruptcies and things. But that's how poorly it's been managed over the last half decade plus. But we live in a reality where it's a very critical piece to United States manufacturing, defense, role in.
There goes Nanonuclear. Okay, looks good.
But there seems to be a backstop that the U.S. government would be willing to put up for this company. Yeah, that's somewhat speculation, but time has shown us that this company has survived a lot and continues to survive
Okay,
a lot.
Q's looking for the futures to move higher. Okay, let me change this to NQ. All right, let's make this NQ instead of S&P. Why is this not changing? Oh, there it goes. There it goes.
So to me, you throw all the negative news. Every day there's negative news seemingly.
Okay, I don't see any. Well, if we get through this supply right here, look where the next level is. Make it through this supply. Look where the next level is on Nanonuclear.
It's going to be different for every investor. A chart like this, to me, isn't necessarily one that I'm jumping for joy to be selling. And some people would see a really strong downtrend and would totally disagree with that. They'd be seeing a pop today as a counter trend move, and they'd be looking to get short that move, and all the power to them. This, to me, is an uncorrelated equity at the moment to the overall market. It's perhaps a value play. It does have elements of it that are working against the stock, but if there's resolution, any of those things.
Okay, we continue to move higher. Nanonuclear.
You see opportunity to perhaps.
It's going to take another few. It's going to take another few higher highs and higher lows to get there, but it looks pretty good.
Yeah, and if the stock actually earlier on in the session hit.
Okay, I'm going to sell some into strength a little bit at a time. Okay, Nanonuclear, I'm going to sell a little bit at a time into strength. Okay.
So implied volatility levels elevated not only because of the market, just because of the moves that it's had. So it's in the top 10% over the last 52 weeks of implied.
Okay, I got to change channels here. These guys are getting on their nerves.
Yeah, another thing too is the implied volatility is way at a premium to the actual movement that you've seen in the shares, and so to me, that can be an indication of an oversold stock. And you saw the bounce back today. But what I looked at was utilizing that, 1 month highs in volatility, near yearly high implied volatilities, and selling a put vertical below the market. 149, 146. Now it just happened to be below the lows of today from after the market opened. But really, this was more of a function of pricing. I wanted to look at a $3 wide spread that I could collect $1. That was a third of the width of the strike. Collect $100, risk 200. So 2-to-1 risk reward. And in this case, that was just the strikes that could accomplish that in that October 18th monthly cycle, with just a few weeks away. Another thing too to think about was when you have those short-term spikes of implied volatility, sometimes shortening that time horizon as well for the trade can make sense, because you're still getting a fair amount of premium because of elevated volatility levels. And it also may, if there is a resolution in any of these things over the next few weeks, you could see a quick repricing of some of those shorter term volatility. So a little bit more sensitive to some of those short term news when you go a little bit more short term. But again, 148 break even, 2-to-1 risk reward.
17 days expiration on this example, Alex Frost, in the October 18th. Selling the 149 put, buying the 146. As you mentioned,
Nano Nuclear looking good.
It's trading closer to 85 cents right now, but if you collect that $1, you get $200 in risk per spread. But Kevin, probabilities are decent on that short 149 put in this trade, right?
Yeah, 65% probability of that October 18th 149 put finishing out of the money, 66.5% actually. I stand corrected. So, Alex is like a surgeon when he picks out these numbers. He looks for the $3 wide that's collecting.
Okay, looking for this to pop a bit higher. If it can get through 17,
people should probably be writing down.
if Nano Nuclear can make it through 17, this should scoot higher. You can see that sell order block overhead just sitting there. Okay, that's the 4-hour chart. Let's look at the daily. Daily. Yeah, same place for the daily. Okay.
I think that's a good point to bring up to viewers and stuff, Alex. We talk about this all the time. Guidelines, right? Well,
okay.
Nobody has the same set of guidelines, right. But there's barriers, that you kind of look at, and then you get more comfortable with it. And it's from experience. What kind of risk are you comfortable with? Somebody might look at this and go, "Oh, I'd like to collect more than $1." Maybe he sells the 150 put, or it might be somebody that's a little bit more risk averse and go, "Hey, I'll sell the 145, 142 put vertical. I'm not going to collect as much, but I'm giving myself a better probability of success," right?
Yeah, I think it's a loose guideline. Sometimes the math is cleaner on the $3 wide with the $1 too, which I think is nice. The 2-to-1 risk reward, but
okay, looks good. Nano Nuclear doing well.
Maybe a quarter the width of the strikes and a third the width of the strike.
Okay.
If it gets much more than
Let's see if it drifts much lower, looking for a higher low.
But you no longer have sort of that. There's a relationship, I guess the best way to say it, there's a relationship between risk and reward and your probability of success. And so if you're looking at credit generating trades, oftentimes the reason you do that is because they have a higher probability of success. And when you start getting to a situation where, say, it was a $3 spread collecting $1.50, well, that's equal risk to reward. That's more of a 50-50 relationship with your probability of profit. Perhaps you would look to something more like the debit spread in that situation if you wanted a more 50-50 probability of success. So I think it just depends on the style of trader that you are, but that relationship between risk and reward has a relationship to your probabilities. It's not perfect, but it's a good kind of armchair method. If you have 2-to-1 risk reward, you probably have around a third the width of a third, probability of risk there, and 2/3 probability of success.
Yeah, and Kevin, it makes a good point there, because we always look at it I always look when selling verticals. I like to do it in high volatility environments, right? Because you're going to collect more option premium for those. But to that point, when you look at this, and IV percentile ranks 91%, but if say that was down at 40% and the stock was bottoming out, then maybe you look at buying a call vertical, right? It's all based on implied volatility sets a tone for a lot of these strategies.
There it is. Implied volatility should help you determine the strategy that you use. And and why? Because when implied volatility is high, premiums are higher, theta is higher. When implied volatility is low, maybe it's a long vega trade where you take advantage of if implied volatility goes back up. These are the things that beginner option traders don't understand and utilize, and intermediate and advanced do utilize. And where does it show up? The end of the year P&L. You
Yes.
keep doing the good practices every day and watching and working all your orders and not and you do all this list of things that make you a more efficient trader, and then you check at the end of the year and it shows up in real money.
Yep. Yep. And those guardrails or bumpers, I like to call them, those are flexible, right? They're dynamic. They can change based on what maybe historically you've changed or what's going on in the
One
overall
final
market.
thing along that line, though, Tom, is I think it's important to have.
Okay, Amazon continues to rise.
Talk about do whatever you want.
Okay.
Take the thinking out of the part that you can.
Tesla looking good. So
Define the asset you want to trade.
remember yesterday we had this turn.
Entry points and exit points. If you can get the strategy to some sort of system, it's at least one part of the game that you don't have to think about as much.
Yep, comfort level increasing as you get more experience. All right, great discussion here, guys. Thanks to Alex Coffey, Senior Equity Contributor, for joining us. But coming up after the break, we're going to be joined by Landon Swan from Mike Bolio for a look at sentiment data in Nike. The athletic apparel stock has fallen about 18% so far this year. They report earnings right after the close. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop. With robust
Okay, looking for nanonuclear to go again. It needs to get through 17. You can see the, okay, let me put this back on the 4-hour chart. 4-hour chart has this little bit of supply right here. If we can get, you see how it just disappeared? It just disappeared. NNE 17 order block disappeared. Now it's back.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the
A
same
pop is all we need now to get through 17. You see that 17, that sell order block over there on the right? This will disappear automatically if we chew through all of this volume and push through.
Neil, tell me you know this. Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Okay, we're presently chewing through volume. All right. Apple not showing much follow through at the moment. Amazon's looking pretty good. Meta's looking good. Meta looks like it wants to run. Tesla looks like it wants to go. So does Google. Broadcom, higher low printing. We got cyan colored TTM bars. Looking for that to follow through. NVIDIA, higher lows, 1, 2, 3. Cyan bars. We need more momentum and more volume. Okay, watch nanonuclear. Looking for this to pop higher. Okay, let me switch channels. Sorry. These guys aren't really helping much with their yappity yap.
It's a little bit too close to the market price. If you get stopped out and you were right all along, you get to watch other people make money. So that's the story here with me.
All right, let's get the headlines now with Contessa Brewer. Hi, Contessa.
Hey there, Scott. The Israeli military said its forces have killed the commander in charge of transferring weapons from Iran and its affiliates to Lebanon's Hezbollah. 2 senior U.S. officials told NBC News today the U.S. has indications Iran is planning an imminent ballistic missile attack against Israel, following the start of Israel's limited ground incursion into Lebanon overnight. And U.S. officials are warning Iran a direct attack on Israel would carry severe consequences. A trial is underway in Georgia this morning over two new controversial election certification laws in the state. Basically, they broaden election officials' abilities to search for voting irregularities. Democrats challenged the law, saying it's too close to the presidential election to pass new rules because it could cause confusion or, in fact, undermine November's results. And a new report says breast cancer is rising in women younger than 50. A study by the American Cancer Society found rates in women younger than 50 have increased about 1.4% every year since 2021. But the reason is unclear, Scott, but certainly concerning and attention getting.
No doubt. Contessa, thank you. That's Contessa Brewer. Up next, Trade School is in session. On the 60-40 portfolio, it's traditionally been a safe bet, but should you rethink the set it and forget it strategy?
Okay, let's look at the New York FANG. Let's look at the New York FANG index. New York FANG. New York FANG. Oh no, I want to go to the chart. Let's go to the videotape. New York FANG index stocks. We want this to be turned higher. Okay, so buyers stepping up at the 21-day. 50-day is right below, so it wouldn't be improbable. There goes Meta. Meta's starting to go. So is Tesla. All right, starting to see buyers coming in. So if this continues to build throughout the rest of the evening, if we can get above that trend line, that would be huge. I mean, that's a subjective area, but we need a bullish bias to start the day. We had a bullish bias to start today. Bullish to neutral. We didn't take out, what's today? Tuesday. We didn't take out Friday's high, but we did close on a bullish candle. We need more. You can see stochastics is recycling. All this is telling you is that expect closes now in the lower half of the daily range. Okay. It's telling you, look at the last time it turned down like this. Okay. New York FANG, see where stochastics down at the bottom, where it hit the red zone and turned down. What did the stock do? The index do? It turned back down. Right now it's turning back down. It's telling you look for closes in the lower half of the daily range. We got a MACD about to cross. Unless something can change, I would be selling into strength. So I would be taking short-term trades off the lows and selling into strength. Okay, closing by the end of the day. Swings are more susceptible to failure because stochastics has turned over. Okay, so all we're looking for is, I showed you this yesterday. What I'm looking for is, okay, so we've had a wave down. Okay, the previous two waves down, you had this one. Boom, that was pretty severe. Then you had the next one, which was less severe. I'm expecting that this one could be even less severe. And then we could pop and start to head higher into the last few months, into the election and year end. Remember, the call wall will probably shift higher if it hasn't already. Let me go check over here. Let's see what the call wall, did it shift? Call wall, yeah, 5,800. All right, so it went from 5,750. The call wall is now 5,800. You see that? Okay, this used to be 5,750 right here. S&P cash, and to the left of S&P cash is S&P futures. Okay, and that's 580 on SPY, and the Qs is 500. Okay, so the call walls have shifted higher. So I'm anticipating a more narrow pullback. All right, so maybe the 50-day, maybe not. Maybe we take off today, but sell your positions into strength and try to be closed by the end of the day. Short-term swings are a little bit more susceptible to failure for the next couple of days. Could bounce by the end of the week, be back up to that trend line, but I don't want to hold positions overnight if I don't need to.
With both equities and bonds up in Q3. Now, Barron says the 60-40 portfolio worked well for over a century. It's flashing a warning now. What do we think about this tried and true investment strategy, Josh?
They're still pushing this 60-40 business.
And then we're told it was dead.
Stocks and bonds.
It does better than other periods of time, which is part of the risk of investing, and that's why you get paid for the risk that you take. I don't think the suggestion that the 60-40 is dead is ever useful. Of course, it had a terrible year in 2022.
Okay, so let's go look at advanced decline percent. That'll tell us a lot. Okay, Are we swimming against the current like a salmon? Looks like it. It looks like it. Looks like we're selling into strength. Okay, so any pops, I would be selling into strength. Okay. McClellan volume oscillator just sitting here moving sideways the last couple of days. No help there. New York Stock Exchange high low. Take the new highs, subtract the new lows. Are we above the zero line? Below the zero line? Where are we? We're trending a little lower, but it doesn't mean that we can't see more upside. All we're looking at right now is blue elder sticks, which is telling you the markets are range bound and at the highs of the year. So watching, it looks like Apple's going to make a new low here, or test a low, maybe a double bottom.
Were really low. They were like 1% or lower. And as a result, you needed to earn an 11% return from your stocks in order to get that nominal return of 7%. The good news is stocks did 14% average annual returns.
NVIDIA turned back down now. All right, the cyan bars starting to give way to blue bars, dark blue bars.
You need a 9% nominal return on stocks in order to get that blended 7% that you're hoping the 60-40 can deliver. So the bonds are going to kick in more of the help, even though stocks are.
Okay, let's look at bullish percent. Let's look at bullish percent. Okay, bullish percent. It's red, but it's not really overbought. Bullish percent. If you go to the weekly, you can see that we have ways to go. We could see a move back to the 80s. All right, so we got room to the upside. Bullish percent. Let's look at the New York Stock Exchange. When we're in doubt, we always look at the New York Stock Exchange. Are they buying? Looks like they're buying to me.
If you get the historical average return from the S&P 500 of 9%,
NYSE.
Maybe even 5% from investment-grade corporate bonds, you're sitting pretty. And I also want to point this out. On the bonds, after inflation, you've got a real return. I mean, inflation, depending on how you measure it, 2 to 3%, 4 to 5% is tautologically higher. So it is a matter of perspective here. It's also a matter of time frame. Any quarter, you might see yields go up and bonds go down, and certainly the bluebirds will come out and say that the portfolio is dead. I don't think so. I think over the long run, it absolutely will work.
Santoli, he's next with his midday word. We're back on the half after this quick break.
Okay, looking good. Okay, we're trending higher. Just want to show you something. Okay, you can see it on the screen. You can see these two wicks. Okay, we had a high. We come down. We test the 9 EMA. Wicks are showing up. So this is 2,000 stocks. What does the 0-day look like? 0-day charts. 0-day is midline. 0-day is in the middle of the Bollinger Bands. Okay, down volume is leading. So right now we don't have any good signals in the market. The indices, they're moving sideways. Okay, but New York Stock Exchange looks good. Advanced decline percent showing that they're selling into strength. So that's what I would be doing, selling into strength. Don't swing overnight too many positions. Some will probably work. But the risk is we could pull back a couple more days back to the 50-day first. Let's see. What else we want to look at here? We want to look at, we looked at bullish percent. What's the Copoc cycle look like? Copoc cycle, this is built for the weekly time frame. Okay, this is daily. Let's look at weekly. Copoc cycle is bullish. It's trending higher. Copoc cycle designed on the weekly time frame. This is transports. Let's look at S&P. That is starting to bottom, it looks like. What does it look like on the daily? Even though it's designed for the weekly, let's look at the daily. Okay, it's peaking out a little bit. Lower high. Okay. S&P. QQQ. Same thing, peaking. IWM, small caps. Okay, look okay. What about the value sectors like financials holding up very well? So it could be rotation. Could be just rotation what we're seeing. Industrials look pretty strong. I know Caterpillar has been working for Frano, and I believe, Stephen, you take this one from time to time, right? Okay. Okay, so Caterpillar's doing okay. So industrials, financials are working. What about materials? Materials, that should be working because of China. What's FXI doing? FXI, a little crowded on the trade, so move. It's inside day. Not too bad. Let's see, what's Baba doing? Baba, inside day, Baba, Baidu, inside day, IQ, inside day, Baozun, inside day. Okay. Materials.
Missiles entering the airspace above Tel Aviv. The Israeli Defense Force has
Uh-oh,
confirmed
that's not good.
Iranian missiles have been launched toward Tel Aviv. You are hearing those air sirens now, warning the citizens of Tel Aviv that there are incoming forces. We are told that Iran is expected to launch 240 to 250 missiles.
I mean, excuse my French, but what the fuck is wrong with Iran? You know?
Including Mossad headquarters.
I mean, I know I don't understand the Middle East. I don't really propose to, and I know there's a lot of people that, you know, are against everything that's going on, but I mean, it just, Jesus. All right, so I'm not going to get on a political rant, but okay, most stocks are drifting a bit lower right now. So we had a brief higher low. It's unfortunate. You know, war is always unfortunate. I spent time in Vietnam, so I wasn't very happy about it either. So let's see, Baozun. Let's look at Raytheon, RTX. Raytheon taking off even higher. Raytheon. It sucks, man, you know? All anyone ever wants to do is to live in peace, you know, raise your family, have enough food on the table, not being worried about crazy leaders, you know, being safe in your home, in your neighborhood. That's all anybody wants, no matter what side you're on. I guess I'll never understand how vengeful some cultures can be. Oh wow, it's pretty nasty. So keep an eye on these. Keep an eye on these aerospace and defense stocks. Raytheon, Boeing. Boeing drifting lower now.
We're watching it show itself in the market too, depending on which asset class you look at. Whether it's yields down because of a flight to safety, the dollar playing into that role. That's at the highs of the day on an intraday basis. That's the dollar.
All right, Supermicro. I'm going to probably buy some Supermicro down here.
WTI, all of this, of course, reacting.
All right, Supermicro. Maybe buy some leaps. Could wait a couple of days, right? For the fallout.
She just showed us on those live pictures.
Okay, Nano Nuclear pulling back a little bit, so selling into strength.
That's a loss of 355 points. Dow's down about 250. That's 2/3 of 1%, but the Nasdaq is by far the hardest hit of the majors today. We're back in just a couple minutes.
March 20th, 2003. That's when the U.S. attacked Iraq. So let's look at March 17th, 2020. S&P, let's go out to the weekly. Let's go out What did I just say? Let's see, 2003. Okay. March 19th, 2003. All right, March 19th, 2003. March 19th. Okay. March 19th. Wow, it's been that long, right? Oh, geez. Okay, March 19th, 2003. You can see what the markets did. Okay. So I'm just looking at what happened. When did we invade Iraq? Okay. It was March 19th, 2003. Correct? All right. So here's March 19th, 2003, right there. What did the markets do? They continue to move higher. Short term, probably going to get some Reuters sell algos to do their thing. We got earnings coming up. That'll be a focus next week. And if this blows over quickly or becomes a nothing burger, I don't mean to be insulting. If anybody takes insult from my terms, please don't. I'm a crude American white man. So, I'm liable to say things that offend some people, but I don't mean any offense by it. I'm just looking at what happened here, 2003, March 19th. That's when we invaded Iraq. When it was like, 2 years ago now, February, right? When Russia invaded Ukraine.
TimberTech decking.
Okay.
Senior markets commentator Mike Santoli
We're due for a pullback. Some people like Mike Belsky are looking for, Brian Belsky are looking for 10% pullback before the election.
Sort of right in front of us. And then we have jobs report on Friday. We're going to soon be talking about earnings and the realization that maybe the Fed's going to, be a little smaller than we thought.
Yeah, and it all makes for a pretty noisy environment. I do think all of that, plus the strikes and the storms, for one thing, it's going to muddy up a little bit of the near term.
Okay, looking for the dip to get bought on Nano Nuclear. Looking for the dip to get bought.
Down is just risk exposures across the board today. I will point out, of the 66 points, the S&P's down 30 of it came to the upside in the last 20 minutes while we sat there yesterday in this kind of ghost rally at the quarter end. So it's not as if this is a run away from risk entirely. It's not a panic, but it does show you that you're up 20% in the first 3 months. You're up that much, embarking on an October where there's expected to be a little more volatility. It's a typical trim it from the top, and that's why the NASDAQ is down 2%. So I would say it's a measured but cautious response to all those things, that are being felt.
Yeah, how do we feel about jobs report on Friday in the context of the market activity?
The JOLTS were soft. I mean, the JOLTS report this morning and the employment component of ISM manufacturing were, again, downside surprises. So it reinforces this, I think, not a terrible way. I mean, the absolute job openings were up, but the hiring rate and the quit rate are both down. And you should really feel like the labor market might be softening up. This is the week where we had little growth scares the past 2 months.
Yeah, it's true. I would agree with you there. I would agree with you.
Alert for potential, downside
Mm.
directionality for that.
All right, so this is S&P, New York FANG. Okay, that's pulled back. All right, so that makes sense. Certain sectors should be more than likely pulling back a bit more than others. We got some rotation that we saw last week. Rotation. All right, back to the 21 EMA. Okay, so look at value. Is value? It looks like rotation to me. growth versus value. Okay, so here's a live screen. Okay, so this is what the growth is doing versus value. Growth pulled back. 21 EMA pushing higher. It will be the third time that we pull back in the last couple of months. The third time we pulled back below the 21 EMA. The last time we pulled back was less severe than July. I'm just analyzing this. I'm not telling you I know what's going to happen because I don't know what's going to happen. All I can tell you is looking at what happened last time with the 21 EMA still pointing higher and with rotation very obvious. Look at the rotation back in July. Okay, we've had a big top and a drop. What did value do? Started to see some buying, a little bit of a drop, but not as severe as growth did. Then we both of them moved back up, and they pull back again. Last time, growth was more severe on the pullback, less severe on value. Value, more defensive names, right? What is utilities doing? XLU utilities have been moving higher. So fixed income investors are obviously on the right path. XLU, XLP, consumer staples is flat. Consumer discretionary, buyers stepping up at the low of the day. New York Stock Exchange again, buyers. I'm seeing buyers. Okay. So you don't have to participate in every single little nuance in the markets. Buy puts at the highs, sell them, buy calls at the low. You don't have to be so active in a market where we don't know exactly what's going to happen next. So my 2 cents is if you make a profit buying from the lows and we start to move higher, sell before the close and be out. Collect your cash and sit on the sidelines and wait. See how the markets react. I do have a hedge on. I do have SPXS. I'll probably keep this on. Even though I have some longs that I want to take care of. Okay, I have SPXS. Okay, three times bear. Okay, so that we do start to lose it. You can see the waves up, the opposite of what we saw, waves down in the S&P. All right, so this could get all the way back to the 50-day. Who the hell knows? So that's only 60 cents. So it doesn't move a whole lot, but it does give me peace of mind that I have, 1,000 shares of this. And if it does move, then I have some sort of cushion. If it gets worse, if the markets look like it's going to get worse, maybe I'll join you with puts on a bounce. Okay, but right now I'm looking at the New York FANG index stocks. Looks to me like they're buying dips, maybe shorts covering. I don't know. It's really hard to tell at this point. Q's looking good. Okay. All right. What are junk bonds doing? You know how I think when it comes to junk bonds. If junk bonds are down big, they're not. Junk is a doji. Junk, daily, doji. $9, $21, 50-day are bullish. You got to respect the signals, okay? It took me a long time to get used to just, okay, junk says we're bullish, so I'm not going to get crazy on the downside. It took me a long time to get used to this. I've been using junk for, 30 years, 25 years. I forget who I learned this from. Oh, it was from the junk bond traders I told you about. Okay, so that was, when was that? That was between my first and second marriage. Now, don't chuckle. I seem to meet the wrong women for some reason, or they meet the wrong guy. I don't know. I think I'm a pretty level-headed person. I'm humble. In the past, I've been taken for granted. When you're humble, a lot of times you're also naive in some respects. I'm I'm not naive any longer. But sometime between my first and second marriage, I think it was, we went to this bond traders event. When was that? That had to be 86. No, it had to be, must have been in the early 90s. So I've been using this for quite a while, for at least 25 years. Okay, so junk bonds hold up. I was talking to a junk bond trader. We went to a bachelor party, and the people were getting crazy. I mean, I went to bachelor parties before, but these guys and ladies, don't want to be politically incorrect, they were off the charts. I mean, they were spending, I want to say, tens of thousands of dollars on this guy's bachelor party. It was crazy. It was on the let me see. It was on the east side of Central Park. There was a hotel there. I don't know what the name of it was. No, it's not. Wasn't the Algonquin, but it was on the east side of Central Park, overlooking the park. They had a balcony. They had an upstairs, where you could see upstairs balcony. It was just crazy, and I think it was something like $1,000 a night for this place. Brownstone, really pretty place. So that's where I learned about junk bonds. Kind of a long story, but if junk bonds are holding up, then you know that people with deep pockets are not that concerned with the markets. Will we see these little intermittent pullbacks intraday that create opportunity? My guess is, yeah, that's going to continue to be the case. But junk is moving higher. Okay, so let's look at the weekly on junk. Does that look bearish to you? Look at the bear market over here in 2021, 2022. That's bearish. This is bearish. Okay, that's bearish right there. Is this bearish? Not in your wildest dreams. This is not bearish yet. Okay. That's just one indicator. All right, so let's take a look at junk bond. Let's look at 10-year yield. 10-year yield's moving lower. Okay, flight to safety. That's what the market bears are telling you, at least the financial media. That's what they're telling you, flight to safety. Okay, maybe it is, maybe it isn't. Gold. Okay, gold is moving higher, so that's bullish, obviously. Gold is just as bullish as junk bonds are. Okay, USO crude oil. Crude oil is still in a range. You could probably try to trade crude back up to the top of the range or the middle part of the range. I don't really see a good trade here.
Contessa Brewer joins us with the very latest. Contessa, what do we know this hour? We are watching as we speak, Kelly, as there is a
It's funny. Funny, Jimmy. It's because my grandparents lived on a farm in Georgia, and they lived to be over 100 too. So yeah, I could see that.
The Israeli Defense Force confirms it's a barrage of air attacks by Iran. The military has issued orders that civilians have to take shelter upon hearing those air raid sirens. Let's pull up the audio and see if you can get a sense of what they're hearing on the ground right now. In the meantime, as we've been expecting this onslaught, the U.S. Embassy has warned its staff and U.S. government workers to shelter in place. Witnesses have reported to Reuters that Iranian missiles were intercepted in Jordanian airspace. And again, what you're seeing now is just moments ago in Tel Aviv, but we have reports in Jerusalem and in other cities across the country that there have been explosions spotted there. We are also getting reports in Tel Aviv that there was a shooting of some kind believed to be a terrorist activity of some sort that happened on the ground there. This is, of course, an escalation of the onslaught that we have seen by
it is
against Hezbollah, which have to do with the strikes outside of the Beirut, Lebanon, the capital city there. We know that there have been ground incursions, limited ground incursions. The military says across the border with Lebanon.
Yeah, they were growing their own food, and they had their own cattle, livestock, chickens.
U.S. sources to NBC News that they were anticipating this. NBC News quoting
for eggs.
source and a senior U.S. administration official
pigs.
The onslaught is expected to contain 240 to 250 missiles in 2 waves.
A lot of the crap that you eat, a lot of the crap in the stores today are just like, I wouldn't feed it to the chickens.
Also, the United States has warned
Peanuts.
that there
Yep.
will be severe consequences for this airstrike. We know that
Okay, Meta doesn't seem to be concerned about what's sirens.
security officials to talk about how to respond to these Iranian plans to launch the attack, to the attack itself. We'll be waiting to hear from the
I don't mean to be a dick, but it's just like that's all they're going to talk about now, you know. CNBC. What does that have to do with the financial markets? I mean, I know it does have some effect on the markets, but I'm watching the markets, literally watching everything on the screens, and doesn't look as bad as you would think. I'm watching it nano nuclear, looking for that to push higher.
and explosions reported, but we don't know whether that means just explosions in the
I don't know.
sky above these cities or whether any of them have actually found their mark. But we do know that Israel had said it would be prepared for this. But you can see the sheer scope of this and how terrifying that must be on the ground for Israeli citizens. But again, the military says Israel civilians have taken shelter, that they're in bomb shelters right now, riding this out, and the air raids warned them that their rockets were incoming.
Contessa for now. Thank you, Contessa Brewer. Let's bring in Raymond James policy analyst Ed Mills and Michael O'Hanlon. He's director of research for foreign policy at Brookings. Gentlemen, thank you both for joining us. Michael O'Hanlon, anything you can add to what we know at this hour, and what do you expect next after this escalation?
Greetings. Well, no, I can't add too much until we know whether targets have been struck, whether it really is 200 and some missiles in a 2-phase attack against 4 sites. I think we need to understand all of that. Some kind of an Iranian response was almost inevitable. And if this winds up being essentially on the scale of April 13th, which is, as you know, a day when Iran tried a similar kind of thing and just didn't get the stuff through, then I think you might conclude that things can start to level off for the moment. On the other hand, if a lot of these weapons do get through, if civilian targets are struck, and if the United States decides to get involved, then, of course, there's no, all bets are off as to where this could go.
So
I was struck the United States. It has said that we would retaliate. I don't know yet what that's going to mean.
Understood. And just to be clear, you're saying if we see not much success of these missiles getting through, and this escalation is basically the apex of what we can expect, then you could almost take it as now we can look beyond this. But if they do make some strikes, if civilians are involved and so forth, then if the U.S. gets involved, that to you would represent a new chapter.
That's right. That, in a nutshell, that's essentially what I'm trying to argue. But again, the data is so incomplete that it's hard to draw any firm conclusions.
Ed, how should we be thinking about this, both for investors as the markets try to figure out how to react to it, and in terms of the response from the U.S.?
Yeah, Kelly, I think Michael's absolutely
Okay, so all right, watch. You know what would be really cool to see? Nano nuclear take out 17 and start running. I'll probably jump on that with a quick scalp. You know, a couple of thousand shares, just scalp it. You know, for 50 cents to $1 or more, just scale out on the way up. I'm watching nano nuclear. 17 is the level to get above. If it closes above 17, we could start to see some activity.
That is something that generally says this would be a change election, and then you have the debate as to which candidate would bring about the greater change. Certainly, Donald Trump would be making that point. Right. However, I think it is way too soon to kind of have that,
in the arena of foreign policy
on the election just yet.
Ed, President Biden obviously has talked a lot about, I mean, in many ways, he thinks foreign policy is a big part of his legacy. This eruption on the eve of him, turning the presidency over to one of his successors tells you what exactly, and does it change at all the odds for who wins in November?
Yeah, Kelly, I think it shows you kind of how unpredictable all of this is, how difficult it is to get a near-term de-escalation. It is one of those things where you have to escalate before you can de-escalate, and it's something that changes the calculus. Certainly, Israel since October 7th.
AMD fading a bit more.
Certainly felt a increased pressure.
Watching nano nuclear. All right, let's see what the S&P 500 looks like. S&P 500. All right, so that looks okay. Top stock on the S&P 500, Apache, Northrop Grumman, Occidental Petroleum. Acceleration was buying Oxy.
Michael, we spoke yesterday to some extent about the response.
Oxy is moving higher. Let's see, Occidental Petroleum. I believe Acceleration bought that yesterday. Big move.
Is it too soon to talk? And this is what markets like to discount.
Okay. Nano-nuclear turning back up.
Before the dawn moment.
It's possible, and I suppose we should all try to keep some degree of optimism as we watch such horrible things happening in the broader Middle East. But I think that, you know, at least we're not seeing Iran do something radically different than it ever considered before. At least we haven't awakened to the news of, you know, 10 Israeli ambassadors around the world being assassinated, or to American.
Who is this guy? Where did he find these people?
So in that sense, what we've seen so far, you could say.
Okay, I got to change the channel. King's Research. Okay. These people live for war.
By 27%, and I mean, well, the same. I mean, by 60.
Okay, Apple making a new low here. Apple. All right, that trade's not working. Apple trade's not working.
So this is for the year of 2023, though. 80% of the revenue, U.S. and Canada, but only about 20% of the monthly active users. So they're squeezing every penny out of U.S. and Canada, North America, but they're growing tremendously in terms of an active user base overseas. So perhaps something to think about if they are able to monetize that area a little bit more, or perhaps get more users in the U.S. online. Seems they have two kind of areas of attack they can focus on. Get more people in the U.S. because you make a ton of money off them, or find a way to make some more or extract a little bit more from some of those 80% plus users that you have from other places.
Okay, and I misspoke.
Jason, is that the daily or the 4 hour?
But worse than 66. That's a good point, because I did know there was that international component, because again, I'm like, where is all of this money coming from? I think I'm like the most loyal Pinterest user I know. I still go on Pinterest all the time, but I'm not exactly sure how they're making money off me. I guess it's probably my data that they're collecting. But last time today is also another one that is, I'm sure, definitely collecting some of our data. That is Shopify, as Barclays did.
Apache.
$70 a share from 65. Keeping an equal weight rating as part of their third quarter.
Apache is number 1 on the S&P 500. Apache coming off the low. Big move already. You could sell some premium here. Let me see what that would go for. We'll sell the 23. Let's see. Trade. APA. You know what? Let me look at Oxy instead. Occidental Petroleum. Okay, Occidental probably has better. Okay, 60. So sell the 50, buy the 45. Let's see. Sell the. Let's go. Let's go out to the 18th. Let's sell the. Oh, that not much premium. Sell vertical. Sell the 50, buy the 45. Yeah, there's nothing there. Better to just buy options on this. Occidental Petroleum, Oxy, Apache, APA.
It does look like, according to Iran State TV, that they do say Iran is likely to launch another attack on Israel. So this is just sort of wave 1, and that the attack is on.
Buy 26. What?
See a little bit more of a spike in crude oil, but all of this within sort of the range of.
Okay, let's see what Apache looks like. Apache, APA.
Sort of picking up here, but not necessarily things necessarily sliding by any means.
What about leaps? What about leaps? Let's take a look at leaps on something like Apache. So October, that would be next year, January. Not much trading. December, got some volume. Okay, but not a lot. November, most of the volume is at the 2750 strike for Apache. Let me do a vertical here. 2750. I'm gonna go 3250 if they have it. 32.55 wide, $94 per contract. I'm going to go ahead and do that. Okay. Even though we're at the high of the day, I'll look for a dip to add to this one. Okay. Okay. Just got a dip right there. Just bought some Apache. Okay. That is the 2750, 3250, 2750, 3250.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close.
Okay, and that is 15 November. 15 November.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24
Yes, sir.
and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chartmaster segment. Today we are diving into the technicals on both Nike as well as Pinterest. And so here joining me is the Chartmaster himself, Rick Ducat. To talk about Nike first, because Nike has earnings.
Okay, there goes Apache. Apache on the move. Okay, a little pullback in there. So if it does pull back a little bit more, you have a better entry. I'll probably add to my position. For now, I'm just sitting here watching. Nano Nuclear trying to push a bit higher. Let's see.
Since we hit those yearly highs at 123.39, where our blue line begins, trending downward across this area here, where we had some consolidation and then ultimately moving lower. Big gap downward on earnings here. We had some, some more positive news, CEO changes, etc., and then a moderately steepening up.
Okay, S&P 500. We got 145 stocks that are advancing, 355 that are declining. So we got 1 to 3, basically, down volume.
We also saw some heavy volume, and we only had this gap up here, which speaks to conviction on the part of traders. So that's more of a positive sign.
Okay, so it's not that bad. New York Stock Exchange is only showing 1-to-1 down volume. Doji at worst. 2-to-1 on the NASDAQ Composite. 3-to-1 on the SPY. 5-to-1 on the Qs, down. 3-to-1 down on the SPY. 5-to-1 down on the Qs. 5-to-1 down on the industrials, only 30 stocks. And 4.5 on the IWM. Okay, Apache looking for push higher.
Now when we look at the overall momentum and obviously hoping for some type of upward recovery here for Nike shares, what are you seeing as far as RSI?
RSI, our measure of momentum here, is showing some interesting behavior. First of all, we were spending a relatively large amount of time in that oversold area, speaking to the weakness that we saw after this earnings.
Apache.
Really took a beating after that point, but really didn't move that much lower, So we had the initial severe move to the downside, then kind of bottomed out near, the mid 70 or like the low 70 range rather, before ultimately hitting 70.75. Then we managed to make our way to the upside here, a pretty quick turnaround here where we went all the way into the overbought area next. Now we have this green sloping upward trend line here. We are once again in the overbought area. That is what you would want to see if you're bullish here. A trending market moving into the overbought area, usually regarded as a sign of strength. So this is a good sign for bulls. Watch for the crossover back below that overbought area, that threshold of 70. That would be the more bearish signal here. So
Making around a 0.6% move to the upside.
Nano Nuclear looking for the next pop to the upside. Nano Nuclear.
Here, and I think we're expecting some that are super optimistic on this.
Okay, notice,
What are we watching here now? Going
notice the stair stepping of these buy orders. Buy order, buy order, buy order. Do we get another one? If we get through 17, this is likely to go pretty quick. So keep an eye out for Nano Nuclear. This one could go fast.
Volume profile, point of control, our area of heaviest trading here, another key resistance area to look for a potential slowdown in the upward trajectory of this stock here. So quite a bit going on between like 92.50 to 94.50 or so, like a $2 range or so, to be on the lookout to the upside. Then we have another gap here. That was the low point that we had before. Another gap down. So this pink line, 99.76, could be another area to keep your eye on. To the downside, we've got our green line here, a high point and then a subsequent low point after the line was breached. So 85.39 could be one area to watch for a foothold here. And then we've got below that our moving averages, our yellow 21-day, orange 63-day, between like 82.85 to 84.50 or so. That's another spot to watch for support.
Okay, yeah. So
Okay, Meta, no follow through on Meta.
for the recovery, the earnings have not been that upward catalyst, at least not as of this past year or so. So with all this in mind now, Alex, walk us through what you think about trading the same for example purposes, of course.
Yeah, what I took from that chart was there's a lot of noise going on in Nike right now, and perhaps earnings aren't going to provide that much clarity either. Even if they're better than expected, still declining more than likely. So the picture might be improving, but still.
All right, keep an eye on
Nike. So I looked at a neutral strategy.
Nano Nuclear.
The 83.
Okay, what's Boeing doing? Boeing. Boeing pulling back. Raytheon, RTX. Raytheon at the highs of the day.
On this one, Jenny. So pretty straightforward. Equal distant iron condor.
What's Micron? Where's Micron? Okay, Micron looking pretty good. Micron. Okay, Micron back down. Holy crap, it's it down at 100. Holy smokes. Wow. Okay, so this worked out pretty well. We got the call side. Last week's 100 call, we bought those. The night of earnings, we were leaning bullish. We're leaning bullish on Micron. Okay, now we're back. Wow. 50 days, 1 day away, probably. 50 day. We had these September 27th 100 call into earnings. I think what we were trading here, we were trading 95. It jumped to 115. We sold into that strength. That was a great trade. That worked out really well. Apple's still drifting lower. Oh, okay. Apple, that trade didn't work. Apple. Let's take a look at Apple. Maybe it gets back down to the 50-day and then bounces. Apple. Apple doesn't look that great right now. Okay, let's look at Apple. Okay, Apple looks like it's going to test the 50-day. It just looks like a big range for now. Everything's resetting, so that makes sense. Just make sure you have enough time if you're going to trade Apple. Okay, so we got this over here, more or less. Okay, you got this over here. So basically, it's a range. Could see this move down or bounce. Could bounce tomorrow back up to the upper range. Looks like we're gonna have. It looks like this is resetting. Okay, so we're probably gonna move a bit lower. Maybe we move down to that lower band. Okay, Apple, Meta pulling back.
However, we did manage to kind of climb out of it,
price made a higher low. RSI followed suit. Now we are above that 50 midline, switching back from bearish to bullish momentum here. The next step would be across into the overbought area. That would be the next sign of potential strength here. But really, the thing that needs to happen is for price to push above this channel boundary here, and for RSI to make a new relative high over its previous peak from a few days ago here. That's kind of the near-term situation that the bulls would want to see develop.
Okay, yeah, so last but not least here, when we're watching for some key levels.
Okay, Meta.
Near term, but this name, I mean, can move on its own accord. We see overall macro.
All right, we're deteriorating pretty rapidly here.
And Pinterest is no exception, which is relatively like a definitely high volume play or high volatility play, excuse me. But as far as the levels we're watching now going forward, what do you keep on your radar?
The upside's a little easier in this case. I already kind of touched on this area that we need to overcome. So now, not only do we have to take out the 63-day EMA, this area is even more important, right near like 34.25 or so, because it's our channel boundary and our purple 252-day EMA. So we've also got volume profile point of control just above 35.35. And then after we had our gap down, the high point that price reached, 36.11, our red line.
All right, Nano Nuclear, just watching this one. It's not moving much right now. Nano Nuclear.
That's where we want to break out from.
Apple, yeah, Apple not doing that great right now. All right, the Qs. All right, Apple's still pulling back. Apple's still pulling back.
Crucial point to hold as we conclude this trading day here. Beyond that, yellow 21-day EMA near 31.26. Then our next set of lows near about 28.50 at our light green line.
Okay, yeah, and a lot to look at here when it comes to Pinterest shares. Appreciate the breakdown. It's always great to cut our chart master. So now we trade this name, Alex, and we are moving today to the upside. We're giving up a lot of that strength actually here in real time as we just raced around 0.3% for the overall market. But this analyst day at Goldman does have a $46 price target. So that would be above its 52-week high. So leaning into this optimism for example purposes today, walk us through your thinking.
Looking at a shorter term trade here, Jenny, on this one, buying a call vertical in the stock, 31.34 monthly for October. So just a few weeks away, of course, because it's October 1st today, October 18th, the expiration. So 3 Fridays from now. $1.50 debit, risk 150 with a chance to make upwards of 150. 1-to-1 risk reward ratio, break even would be at 32.5. If you look at the current share price of Pinterest, well, it's 32.70, so it's basically in line with the current share price as well, which is
Okay, they're talking Pinterest. I know, Frano, you mentioned it earlier, Pinterest.
In a way, when there's one in the money, one out of the money, that you have equal risk to reward and a break even that's pretty close to the current share price. We accomplished that here with this example trade, Jenny. You need to move towards 34 to make 150, and your risk stops below 31 and is limited to 150. So want some more upside if you do a trade like this.
Yeah, and a good way to look at 2 different ways to play, of course, more neutral strategy with Nike and then a more bullish strategy for example purposes with Pinterest. But we'll leave it there for Chartmaster, and coming up next, it's time to talk Apple for FOMO, which is having a relatively gloomy start to the month of October thus far. We're down about 4%. Some of that selling persisting today with the overall market now down over 2% in the NASDAQ. So we'll dive more into some of that pressure we're seeing with Caroline Woods coming up next.
Okay, junk bonds again. Junk. All right, a little bit more pressure on junk bonds. Okay, so maybe there's some profit taking and some reduction of risk up here at the highs, junk bonds. We'll look at it again at the close.
With Schwab investing themes,
Caterpillar's higher. Caterpillar.
spot a trend in electric vehicles? Have a passion for online gaming?
Caterpillar buyers at the low of the day.
Economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals.
Home Depot. Home Depot. There's going to be a lot of rebuilding. Home Depot. Home Depot's trending. Home Depot.
Each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360.
XLI Industrials.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
Okay, so HOLO. That's one that Cayman mentioned. HOLO. Okay, hollow. Okay, ABCD pattern maybe.
Accelerate your market knowledge and shift your perspective into Folgers. Real-time example trades in full hours.
Okay, so nanonuclear pulling back a little bit.
I'm Kevin Hickman. Catch me on Fast Market. Weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. We're going to check in on the overall markets as we are seeing the four major averages significantly lower, nearing their session lows, approaching them rather quickly here with the S&P is down about 1.35%. NASDAQ also
All the tech stocks, XLK. Let's take a look at XLK. XLK, pretty big beat down today on the tech stocks.
Interestingly enough, the crude oil is
Meta's still drifting lower.
Down about 80 cents from those session highs. So that's a, almost a, let's call it a full percent. So interesting. We'll keep watching that. There's not a ton that's coming across. I have a newswire up on here that I'm monitoring to see headlines that come.
Okay, Walmart defensive.
So the only thing I guess we
Walmart trending.
To viewers is there was from Bloomberg First Word, Biden monitoring Iranian attack against Israel. NSC says, and Biden directed U.S. military to aid Israel defense against Iran. So it could be that second one. If there is this fear.
Houston American Energy, HUSA. Okay, that looks pretty good.
We'll see as more and more updates come. Nothing really new over the last 10 minutes.
Right, no new developments here, and I will say that we are looking at now Apple specifically for FOMO, which is just off of its session lows by about now, 20 cents a share. So it's just basically sitting at session lows. So here now to discuss more on some of the weakness we are seeing with Apple, we'll be stepping away from some of the macro unless we have more updates. It's Caroline Wood, Senior Markets Correspondent for the network. So Caroline, our second time talking Apple today, and I think it's like our fourth of just the last two sessions. We had positive news yesterday. Today is more of that negative camp of analysts. So walk us through what you're seeing.
Yes, and Jenny, Apple shares are erasing all of yesterday's gains and then some, with shares down almost 4% right now on some kind of negative news from an analyst in terms of what iPhone 16 demand is looking like. So Apple's the second worst performer in the Mag 7 behind NVIDIA. NVIDIA is actually doing worse today, but Barclays was out.
All right, I bought some HUSA. I'm going to track this with Jason. This could contract back down, say, 25, 30 cents. So stop, I'd probably put a stop underneath the 50-day. The volume suggests that we could see a follow-through tomorrow as people miss or chase. All right, so I'll track this with you, Jason. Okay, seeing a lot of short covering. FANGs starting to see some short covering.
Saying it's likely indicative of weak demand. Also, their sell-through checks point to 15% declines year over year for global iPhone.
Yeah, seeing the same thing, Cayman.
Few weeks of selling, and also tracked iPhone availability across geographies globally, which suggests softer demand for the 16.
Yeah, I'm seeing the same thing as you're seeing. All right, so let's take a look at some of these stocks, like Meta. All right, starting to hook back up. Okay, it's a doji. Meta could look worse. All right, we're starting to turn back up. Meta, I just took a position off. One less thing to be risky, but I would have been closer to break even if I had just waited 5 minutes. Oh, well, that happens. Meta. Let's see. Tesla starting to do that as well. Tesla turning back up. Yep.
softening or stabilizing across all regions, and that's good news because obviously those are the more expensive iPhones, which increases the average selling price. So they said that that's an
All right, the Qs, starting to hook back up. Okay. All the FANG stocks are starting to show short covering. AMD is not a FANG, but watching that one too. NVIDIA, watch NVIDIA. Okay, NVIDIA, let's see. Let's take a look at NVIDIA on the daily. At the 50-day, maybe I'll buy some NVDL here. Let's see. NVDL. Stop underneath the 50-day. Oh, it's under the 50-day. Okay. 45, so it could see another 7 points or so. Okay, NVDL.
They're doing all these things. Then you got to deliver the goods. Now, I will say, though, even if I hear what they're saying,
Qs.
there might be some truth to it.
Micron down 4%. Micron. Little short covering now. Micron. All right. Micron, what do I want to do with this one? Got a nice profit on Micron. Okay.
Correspondent for the Schwab Network. A couple things that came across the newswire here, Jenny, in the last few minutes. IDF spokesperson, there are no known injuries from the Iran launches. Many missiles were intercepted. There were some strikes, however. They also said that they don't see any additional threats identified at this time and have Israel home front.
Okay, Micron, I'll leave it alone. Micron's fine. I'll hold this for another few days. Micron, I have an Iron Condor from earnings. Micron. Micron. Okay, so we're probably going to like consolidate somewhere near the 50-day, I would think. Makes the most sense. And we'll set up a long trade at some point. Micron. All right, Tesla looking better. Tesla. Tesla starting to look better.
Could act as support. So we talked about a little bit yesterday, Jenny. Some traders would like to see that support tested or even break.
Tesla. Okay, watch the intraday Tesla. Nice bounce on Tesla.
But it's kind of interesting. We looked at a neutral to bearish strategy yesterday, Jenny, and perhaps flipping the cards over for an example trade today because so much has changed with the stock down $8.5 a share.
Okay, yeah, to your point, Apple making a pretty nice bounce. It made about $1 in real time, but just in the last several minutes on this news. Also, VIX now dropping here as we are around, still up, still elevated on the session, but now at around 1952. So definitely seeing that fall with this news development, like you said. But you mentioned to go back to Apple here to focus on the individual stories of Apple. Apple has been an interesting one to follow, especially over the last several weeks, really ever since the WWDC event, where I feel like then they started to get outwardly bullish, and then we're seeing some of that contraction, at least today, substantially so. But trading this name, of course, walk us through the thinking there.
Yeah, building on kind of our conversation from yesterday, using that chart, perhaps a trader would wait for that 225 level to kind of be reclaimed or retaken if the stock is to make some sort of intraday recovery. And then looking at an option strategy, a neutral to bullish strategy, in which you're selling that 225 put and define the risk by buying the 220 put. So a put vertical spread, neutral to bullish, using this spike in implied volatility to the advantage of the trader by selling it. And the credit received somewhere around 170 would be about a third the width of the strikes, creating pretty close to a 2-to-1 risk reward ratio. So in this case, risking around 330 to make around 170. Break even would be 223.30 on this. And again, I want to emphasize, with this strategy as kind of laid out using those lines that we had, a trader may not look to this exact strike selection with the stock at where it's at right now. They might look for a little bit more strength, see it hold that level before they would put something like this on. So something to think about as well. Again, a relatively short-term trade, just going out 3 Fridays from now on that October 18th expiration.
Yeah, and Apple's one that I feel like you don't even necessarily ever need earnings or any catalyst. Like there's a market maker move right now priced in just because of, I think, the elevated volatility we're seeing in the overall market. But we'll leave it there for FOMO. We'll keep you updated on any situation with the macro front and, of course, the situation over in the Middle East. So we'll be checking on that in real time. But coming up next, we'll tune into Tesla. Deliveries are due out tomorrow. We'll also
dropping some of the delivery figures.
Okay, watching Tesla to push a bit higher. Yesterday we had to wait until about what 3 o'clock for a reversal for dip buyers to come in. Okay, so what's Nano doing? Nano, Super Micro. I'm thinking about a position in Super Micro. Super Micro. Nano Nuclear trying to get back. Nano Nuclear gets above 17, and I'm not paying attention. Please let me know. I don't want to miss. I don't want to miss Nano Nuclear. If it gets above 17, please.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education.
All right, so Nano Nuclear. Okay, trying to get back up. All right, so you're short SOXS. Yeah, I like that. All right, SOXS. Yeah, we could see a few more days down. Double bottom, double top on the SMH. All right, so got a little double top right there, a lower high. Problem with SMH, Jason, is we're right above the 50-day. So I want to see how it reacts to the 50-day. Lose the 50-day, yeah, I could see some more downside. Okay, watch Nano Nuclear here.
When it comes to Tesla and these deliveries, I feel like we cling on to any degree of positivity. Like right now, I mean, this name's down about 2% for this week, about 6% from its 52-week highs here. It's risen well off of lows by about 84% now. So I do think the bullish thesis has taken back over at least ever so slightly. And hey, I think that these delivery moments tend to be, at least in recent memory, an upward catalyst.
Yeah, what a difference a few months can make. I mean, earlier on this year, this stock was, I don't want to say left for dead. It still has been an amazing performer over the last decade or so, but it was, some, let's call it 60, 70% off all time.
17. Or watching Nano Nuclear here for a rip. Rip. Okay. Micron. Yeah, I'm going to hold on to Micron because Theta's killing it. Theta's killing this iron condor, which is benefiting anyone that's in this iron condor. Okay, so we sold these for $132 per contract. I could close it for about $40 per contract. I'm going to let it drop to about 10. I'll put a limit order to sell or to close the position at like $10 per contract. Actually, if it gets down, well, I do want to do it. Yeah, I'll take it off at $10 per contract. Last thing you want to do is wait until the last few days. Gamma really gets very sensitive the closer you get to expiration. So if we get any kind of pop, this thing could explode. All right, there goes Nano Nuclear. Nano Nuclear starting to go. Okay. Watch Nano Nuclear. Okay, NNE. Okay, looks like it's going to go.
Units, and for the first 9 months of the year, they did deliver almost 99,000 smart TVs. That's up 21% from the same period a year ago. NEO on the
Nano nuclear looks like it wants to go.
similar results around 22.
Okay, watch nano nuclear here, folks. This should go. This might go here. Okay. And E, we see the FANG stock starting to turn. Nano nuclear. If this thing gets above 17, this could rip. This bar right here, this 4-hour bar, will disappear once it clears this level. Just be alert for a liquidity grab where we see a wick and then a quick reversal. They know that there's stops up here. They tried that once before. Okay, they've tried that stop. They've grabbed some liquidity up there before. Nano nuclear. A liquidity grab is just where they institutions know where volume stops and everything else are sitting. Okay, so above 17, we just need to clear 1770 at that point. You know what? I'm going to exclude that pivot right there. I'm just going to go back to where it was before, previous pivots, and I'll put a line there just so I know. Okay, so I have a line there just so I recall. Okay, so that's where we need to get above. Look at RSIs rising. Okay, so this thing is going to go eventually. Nano nuclear.
230 and 220 respectively. Dana Ives, though, still bullish, outperform with
Very bullish price action. You can clearly see that this has changed trends. Okay, so it's an IPO, came out in May. Double bottom, W-shaped pattern. 9 and 21 day are pointing up and to the right. So this is a really good setup. Okay, it needs to clear 1770 now.
Super strong price action.
I can recall that if you can recall the narrative of
there goes Netflix on the move. Netflix, there goes Amazon, Netflix, Amazon.
previous quarterly deliveries that were the catalyst that completely reversed the sentiment and tone around both of these major tech names. So yeah,
and they were both previously kind of the stage was set when they both had pretty strong earnings and brought positive vibe to the stock. And then yeah, they hit turbo when they had
Inverted head and shoulders. We got a Batman. We got a Batman on his head. Okay, looking for futures to rip. If we start to go, I'm probably going to buy some. If we start to go.
favorite bulls to follow when it comes to Tesla, just because I think he has a great perspective on the long-term plan of Elon Musk and Tesla. But they did mention that the third quarter deliveries they expect, like you mentioned, above market forecast. Robotaxi event though.
If we start to go, I'll likely buy some at the money S&P 500. Big cap 0-day calls. Okay, so watch. We need to get above. Let's see. Keep an eye on S&P 500. All right, nano nuclear looks like it wants to go. I'm about to buy more. All right, so I don't want to get caught with a reversal. Break of structure here. That's a signal. Break of structure on nano nuclear. I apologize for spending so much time on this one, but it's a $15, $16 stock that's rallied quite a bit intraday. So, 1,000 shares of this, you're up $2,000 today, $2,500. So, all right, watch 17 here. This is gonna go.
Very positive. I mean, we're seeing that in real time with the four major averages easing off of those lows pretty substantially and holding. So we'll have to see obviously where we close out today. But it's an interesting hour for the overall markets here on
what symbol?
investing. We will leave it there for this segment. However, now coming up next,
Doc.
HP Inc. HPQ is that ticker as Citi did downgrade shares as they
Amazon going. There goes Meta. Damn it. Freaking pissing me off. I had that vertical on Amazon Meta. I took it off because I had to pay attention to my stops. Unfortunately, I'm not with you on Meta at this point. But looking for the breakout on. Okay, this is going to go here. We're about to go. Meta looking good. I got stopped out. I didn't get stopped out. I took the loss because it was down like $200 per contract, unfortunately. That happens.
Spot a trend in electric vehicles?
Let me just check. I might be wrong about that. I don't think it was $200. I think it was less than that because I had verticals. Let's see. Monitor. Let's see. What do they do? Filled orders. Meta.
Investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Yeah, $200 per contract. That's the way it goes. That's the way it goes. Win some, lose some. Made big money on Nano Nuclear over the last couple of days. We were behind down in the 14s. Okay. See that big area of liquidity down below? Oh, the Qs? Okay, thank you, Frank.
Trading the trending names every day.
Okay, Qs. All right, watching that one. Qs. Fair value gap.
Catch me on Fast Market.
Okay.
At noon on the Schwab.
Yeah, I see what you're looking at. Okay, let's go to the 1 minute. Okay, so let's see if we test that and take off to the upside. Okay, I see that fair value gap you're talking about. Okay, on the 1 minute chart. See if we come back and test it and then go. AVAV, Susie talking AVAV. Yeah, that's breaking out.
Under 30 today, looking at the hardware side of Hewlett Packard, HP Inc. And joining us now in for George Schuss is Kevin Greenstein, markets correspondent.
RTX, NOC,
About HP. We talked with George about HPE
LMT.
not that long ago. Now we're looking hardware. Nice move here today. Really counter to the overall market too, as it's up almost 4%.
Oh, last time, no, actually, HPQ down about 4% on the
I had the
session
wrong,
here today.
the wrong one there. I typed in
It's all
HP.
good. It's all good. It's all good. You know, you're trying to give it some optimism. Look, we do have a downgrade coming out of Citi here today. They downgraded the stock to a neutral from a buy with the new price or with the unchanged price target of $37. Now they actually did recently do some channel.
Okay, AVAV, that looks pretty good. AeroVironment, they make those one-way drones. Okay, Qs look good. Okay, we just failed the fair value gap. Fair value gap. Q. 1 minute. Okay, we just got test there. Fair value gap on the Q. Let's see what happens now. Look at the volume on the chart too. Looks like we're going to go the Qs. Okay.
Unfortunately, we are seeing shares down about 4%. And this stock has been trying to range out and really try to break higher. But
Nano Nuclear looking for you to break out. Come on, let's go. Okay, TTM is starting to show up again. Cyan bars. The daily and the hourly look good on Nano Nuclear. Okay, Nano Nuclear.
This is an interesting analyst note because I thought that narrative, that cycle of the story had maybe played out, but perhaps, I mean, not if we're still seeing this PC recovery, correct?
Yeah, it seems like it just depends on the week if analysts are really optimistic when it comes to the PC refresh cycle. Now, we did get an earnings announcement coming from Micron, and they actually did indicate that maybe they are seeing a bottoming when it comes to inventory levels, and that demand actually could rise in the near term, but it does appear that when you're looking at Intel, or when you're looking at HPQ, it might be a little bit of a different story. So I think analysts right now are mixed. They're kind of waiting on their channel checks to really confirm that the bottoming of the cycle has taken place. And Jenny, I think it also just reminds us that the AI narrative, especially when you're looking at the CPU space, which is going to be utilized in PCs and laptops, we're just not there yet. There's not a lot of new products hitting the market. There's a couple of them, but not a huge refresh cycle when it comes to product offerings yet. And so maybe that does change when it comes to the holiday season. I'm not sure. Usually when you're looking at consumer devices, they do catch a little bit of a bid and a little bit more enthusiasm. But like I said, it seems like the street is pretty mixed when it comes to this.
Yeah, once we start trending again. Okay, here we go. The Q is starting to move. Once we start trending again, it'll be a different story. We can start taking more swing trades. Okay, I'm talking about swing trades. So once we start to see that, we can start to once we start trending again, we'll be able to take a lot more swing. Look at these aerospace and defense stocks. Here's ARVA, AVAV, AeroVironment. You know, still very choppy. It's not trending like it was over here on the left. Okay. Let's take a look at RTX, Raytheon. Okay, at the highs. It's still not trending. Range bound. So this could very well come back in tomorrow. See this last time it gapped up on earnings, pulled back for a few days, then it took off to the upside. It's kind of a sluggish trade, but I'm looking for Raytheon to continue. What about Boeing? Boeing coming off the low. Okay, contracting a little bit. Lockheed Martin. Okay, so got people chasing it. That's what I was afraid of. Don't chase it. Wait for a pullback. Northrop Grumman, same thing. Looking for these pullbacks, ABCD patterns. Look at it. Here's a B and C. B is starting to form right now on Northrop.
So I'm right there with you. I think this is probably a little bit more of a longer term story, and you're just going to need to have the industry metrics and data to be able to support the fact that they're going to be.
Yeah, that's a great. I love Bill Burr.
Okay, so Kevin, really quick before we let you go,
Yeah.
I want to get your thoughts on current SPX levels here and like what we're watching as far as the overall market, because obviously the averages have been very interesting over the last hour.
Look, this is one of the crazier days that we've had across the board when it comes to the S&P 500 and macroeconomic data as well as geopolitical data. Right now, the 5,700 level is going to be a key area of support that we want to be able to hold. I did address that.
Yeah, Bill Burr. I mean, his childhood very much like mine. Oh shit, Dad's home. All the things he's gone through, you know.
Would actually be one that would trigger pretty much a significant sell-off. So I think we're for the most part we're maintaining, and it appears like the market really does want to try to rally back here. It might be one of those late day rallies as we get short sellers really covering their positions, and we get market on close orders that could suggest maybe a rip to the upside here for the close.
Yeah, I think well said here. And we'll obviously be watching, of course, HPQ lower on this day, as well as the overall markets, which are attempting to ease off of some of that pressure we've seen. I agree, Kevin. Very interesting hour here, which usually doesn't happen at the noon hour here in Chicago. We'll leave it there, though. Great breakdown, as always, Kevin Green, senior markets correspondent for the network. And that'll do it for Alex and myself for Next Gen Investing. It's been a busy but interesting hour here in Chicago.
Okay, Northrop Grumman. Watching these stocks for turn B and C pivots. All right, so Northrop Grumman. All right, watch these for B and C pivots. Okay, Northrop Grumman. Let's take a look at RTX, Raytheon. Okay, triple bottom intraday. Lockheed Martin. These are the opportunities, folks. Here's a B. Here's a B on Lockheed as well. Okay, Airbnb, AVAV, AeroVironment. That one's not giving you a B pivot. It's just going. $200.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar.
Nanonuclear. Okay, so we didn't take nanonuclear. We're looking for a break higher. We didn't add to it, I should say. Nanonuclear, still looking for a break above 17. Okay, Q's, big move there. Wow, what a move there after that. Holy smokes.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous.
Great call there. Great call, Dr. Frank. QQQ, the fair value gap. He saw it. Look at it. It's ripping now. Ho, ho. Ho, ho, ho. All right. Beautiful. Man, this thing is going, baby. Going. Wow, my P&L, what a shift in my P&L. I was looking at it a few minutes ago, which is a bad thing to do, by the way, intraday. If you can't stomach scary numbers sometimes, you know, your intraday profit and loss during the day, P&L, sometimes it looks pretty bad and you think, oh shit, I got to sell everything. And then you sell and then you fall right into the trap. And institutions wind up reversing the trade like they did with Meta. So I bit me with Meta. That's okay. I'll be fine. Tesla will do fine. Let's see. What do I have on Tesla? I think I just bought a vertical on Tesla, right? Tesla. Ooh, I don't have a freaking vertical on Tesla. Microsoft going, Netflix going, Meta going. I could still buy Meta. Broadcom is going. There goes Amazon. Amazon. What do I have on Amazon? Amazon. Where are you? There you are. Okay, October 18th. Okay. Amazon going. Okay, there goes the Qs. All right, the Qs are doing good. Okay, so what did I tell you? Okay, you know, I'm not trying to sound like somebody that knows it all. All I'm telling you is what I can see tells me this is not a fear market right now. Not yet. Junk bonds are sitting up here. Looked a little worse about an hour ago, but now it's popping up. Doji. What else did we talk about? I said that New York Stock Exchange, 2,000 stocks on the composite. What do these two wicks tell you? They're buying the dip. Okay, New York FANG. We said if the New York FANG could manage a bounce. Okay, again, I'm not trying to be I had told you so person, but if we get a wick here and we manage to close higher by 4 o'clock, we have a chance to break to the upside. We still have a bearish bias if we close down here, bearish bias for tomorrow, 50 days possible. But things are starting to shape up. So that said, I would still be selling into strength, day trades only at this point. Okay, so we could be down big tomorrow or up big tomorrow, in which case we'll trade again. As long as we're above 5,700, as long as we're above 5,700 S&P, above 5,700, we're neutral to bullish.
Troy ounce, and you see oil at $70, 70.11. That's up 2.8% now. Of course, we have tensions abroad, and we'll be going over that as well. In the meantime, the dollar gets in.
Love Bill Burr. Why would you listen to me? I failed math, and I'm an asshole. Love that guy, man. He is so close to being what I was like when I was a kid. You know, my dad was, he was the kind of dad that would whack you across the head if you did something wrong, or if your neighbors whacked you. So what did you do? What did you do? You deserved it. You know, back then you could whack kids. These days you can't whack kids. You can't do anything. You can't put your hands on kids. You'll get arrested, you know. And of course, we got a society that's way out of control. Anyway, I'm not suggesting go whack your kids. Watch Tesla. It's on the move here. The Qs are on the move. Looking good. Okay, Qs. That's looking very smart now. Okay. Nano Nuclear. Watching that one closely. If that breaks above 17, I'm going to double my position in Nano Nuclear. Okay. I'm back down to 500 shares on Nano. My average, first in, first out, my average is around 1450, 1425, and below that, around 14. Last couple of days, we've been shopping Nano Nuclear, looking for a breakout. If it gets above 17, I'll double my position to 1,000 shares on Nano Nuclear. And I'll scalp the addition. I'll scalp, see how far it goes intraday. We're already up quite a bit on Nano. Okay, so let's take a look at the daily over here. The daily. Okay, so here's our low from yes. This is the 4 hour, right? Yes, a 4 hour. Sorry. Let me go to the daily. Daily. Yesterday's high low. Okay. So if we do manage to get above yesterday's high, that would be significant, no doubt. Right? Everybody agree on that? If we get above yesterday's high, that would be significant. Think about what just happened. What just happened yesterday. We got 60, 20, 6,020 is the short call wall now, JP Morgan caller. So that's our ceiling. That's our ceiling. Okay, Amazon, everything is turned back up. Okay, so the FANGs are doing, everything is doing the same thing. This is what I look for. Okay.
Taking over, coming out of retirement to taking over the CEO job. He started as an intern at Nike, so he has intimate knowledge of every aspect, and he's considered to be a retail channel star at Nike, who retired a few years ago, coming out of retirement. His first earnings.
All right, this is what I look for. It's after 2 p.m. and we've got the markets turning. Okay. All the FANGs are doing the same thing. Okay.
Their income and their earnings, 15% of total revenue comes from China, 33% of operating income comes from China. So that rally in China stocks.
Okay, pick a FANG stock. Pick a FANG stock. Looks like Apple is lagging. Apple and Nvidia are lagging the most. Those will probably give you a pretty decent entry because the rest of them are already at the highs, back up to the highs of the evening session. Tesla's back to the evening session highs. Meta, Google, Broadcom, Amazon, Netflix, Microsoft, they're all popped. We've got Nvidia, we've got Apple, potential to follow suit and follow them. TTM is turning cyan as we speak, and the Qs are going. Okay.
And so I think that was something that the bulls can tuck in their pocket, right? But then when we look forward to October, usually October is historically a positive month for the stock market, but there are exceptions to that rule. And that one of those exceptions is in an election year. Usually we see a weaker October in an election year, on average down about 50 basis points. Also, when the market is up more than 20%, it is quite natural for the market to be down a little bit in the month of October after that type of run on a year-to-date basis. So we do look for things to get a little rocky in the month of October, especially as we head into the election. That's obviously a big thing on top of mind for many investors. I think the geopolitical events that we're seeing escalate today are also top of mind for investors. And of course, what the Fed's going to do, right? We've got the big jobs report on Friday. We'll get some more inflation data this month too.
What do you think the Fed may do or should do? I mean, a lot of folks are anticipating to see a couple more rate cuts, 25 basis points each this year, and continued going forward into the new year. Is that what are you in that camp?
So the Fed, Chair Powell basically told us yesterday that most likely we're going to see the 2 rate cuts, 25 basis point rate cuts that the dot plot suggests. And I can completely empathize with him, and I think that what we'll see in November is a 25 basis point rate cut, unless we see.
All right, Jason's on it too. He's looking at Raytheon, he's looking at Boeing, looking at a few different. Yeah, that's cool. All right, so
115,000 jobs have been added in the last several months, which is much slower than what we saw at the beginning of even this year. We also got the JOLTS report today, and you mentioned some of the other jobs data we'll get before Friday. And today's JOLTS report, it wasn't that inspiring.
Welcome to the first. Welcome to the best start to an election year. The first 9 months, the best has ever been. Ryan Dietrich pointing out that was pretty cool. Good stat. Okay.
Now people aren't quitting because of that, because it's harder to get another job. The good news that came out of the report today is that
yeah, Pete Rose passing yesterday. That's too bad. 83. That's pretty young. Pretty young. 83. makes you look at your life in a different perspective when you know people that are dying early.
Yeah, the 25 basis points, and we're seeing that at about
60-20.
when you look at the tools, the Fed funds futures tools, they are saying about 60% likelihood for 25 basis points, at least right now. 373 on the 10-year right now. What do you tell investors what they could do here to make some money, either in the near term or the long term?
Well, I think that you need to have a balanced, diversified portfolio. And I know that doesn't sound super exciting, but nearer term, one sector that I've had my eye on has been the healthcare sector. It hasn't been a great sector this year, but it does have a defensive nature and defensive characteristics.
Okay, so S&P at the highs, Qs.
The S&P 500, and it tends to be pretty.
Okay, we got a liquidity grab on a downtick on nanonuclear. That could be spelling a higher high coming, a test towards 17. Nanonuclear liquidity grab from 1640 down to 16, reversing. TTM is cyan, so that looks pretty good. On nanonuclear, looking for a bounce, a bullish bounce. See if we get it or not. We're up pretty big on the day, so. York Fang.
Yeah, and you said don't fight the Fed. So what do you mean by that for an investor?
Don't fight the Fed. Interest rates are coming down. That's generally a positive sign for risk assets. So for the stock market. So I think that the market can continue to rise into year end, even though I do expect, like I said, October is going to be a rocky month. And historically, October is the worst performing month of the last 3 months of the year anyway. So that's not atypical. I think November and December can pick it up. Once we get past the uncertainty with the election, we'll have better insights on tax policy and the economy in general. So I think that a lot of the noise that you're seeing from foreclosures or geopolitical events hopefully will subside, and we'll have better clarity on the consumer and their spending habits going into the holiday season.
Yeah, and just about earnings growth, I mean, I guess you're expecting a soft landing, but at the same time for companies, earnings growth, what are we thinking there?
Oh, yep, sure. So for the third quarter earnings, the estimate is 3.6% going into the reporting period. So we'll start to hear from these guys at the end of October into November. That's a pretty low estimate. I think the bar's been lower for companies going into the reporting period. I think all eyes are going to be on what the fourth quarter outlook is. And right now the expectation is
okay, nice bounce.
Growth. And I expect that's going to come down. It typically does at the beginning, heading into earnings season. So we'll get that. But most importantly, we're going to focus on what companies have to say about the outlook for the economy and consumers, because like I said, when you think about the jobs market, there has been a stalling in hiring. How does that translate into growth? Does that translate into slower spending for some consumers? I don't think it will, because people are generally employed. They have access to credit and interest rates are coming down. We saw on Friday, the University of Michigan Consumer Sentiment Report showed that consumers are starting to feel a little more upbeat, because that report was, mind you, was taken after the first Fed rate cut, which was supersized. So I think in general, they're looking forward, the consumer is looking forward to lower interest rates so that they can spend into the end of this year and early next year.
Yeah, Lindsay Bell, 248 Ventures. Thank you, Lindsay, for being here. Appreciate it. Thank you. Coming up, Options Corner. Tom White is standing by, and he'll join us with and highlight some unusual options activity we're seeing on the day, how investors are looking to trade on recent news of Oracle, HP Inc., and Raytheon. We'll be right back. Schwab Network.
All right, there goes Tesla. I'm really pissed about Meta. There goes Apple. There goes Apple starting to participate. All right, so yeah, that pisses me off. You know, just following the rules. It burnt. It hurt. You know, I had 5 call verticals. That was $1,000 loss on that trade. But, you know, we'll make $1,000 back on the rest of these. and more. So the net result for the day, you know, will be up, what, $1,000, $2,000, whatever your goal is. You know, mine's anywhere from 500 to 1,000 per day. If I can manage that, I don't worry too much about everything else, you know. So I know that occasionally I'm going to have to take a loss and I'm not going to like it, but stick with the rules. All right. 5 to 10% loss on options. Maybe you take a 25% loss, 50% loss. That's a little extreme. But before you go into the trade, you got to know what you can lose, not just what you're thinking about making. Because if the trade doesn't work out like Meta, I had to take it off. Now it's reversing and moving back up. If you get into the habit of riding losers, sometimes they don't reverse. And that's more painful than taking a loss. All right, there goes Tesla. Tesla's on the move. Shoot. Tesla. Damn it, Janet. I'm sitting here yapping away, and Tesla's taking off to the upside. Okay. Tesla.
Trading the trending names every day.
Tesla.
I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. Time for Options Corner, where we analyze unusual options trades we're seeing throughout the day. We welcome in Tom White, host of Fast Market here on the Schwab Network. So first up, you're taking a look at Oracle, where you found a bullish trade. Want to hear more about that? Please?
Yeah, you got it, Nicole.
Tesla.
You're up about 58%.
Shit.
The last earnings report that we
Tesla.
had,
I'm fumbling around here on
kind of
Tesla.
reiterated that if you looked at maybe the cloud offerings that they're starting to expand on, including the data centers, this has been kind of overlooked, right? You think about cloud offerings, you think of AWS, Microsoft, and Google Alphabet. Well, Oracle's actually growing at a faster pace in that space compared to some of the competitors. One of the key takeaways from that earnings report was their total remaining performance obligations. That was up 53% to $99 billion, and they backed their fiscal year 25 revenue growth reviews up to double digits as far as growth goes. They can cross-sell because their customers are basically all of the Fortune 500 companies at this point. So the more cloud offerings and data center offerings that they have, the more that they're going to grow. Cloud revenue grew by 21% last quarter. Infrastructure revenue grew
Tesla running.
in Q1. So if you look at the different segments within their business, they continue to grow. That's why the stock hit all-time highs last month post earnings, just under $174 a share.
Okay, Tesla running. Okay, looking good, Tesla.
In 2024, but we did see some bullish activity in here. Probably taking advantage of the small pullback that we're seeing today.
Q's still going.
Consolidated underneath those all-time highs. And this is out in the November 15th monthly options that expire in about 45 days. They bought the 170 strike calls over 5,000 times. They paid an average debit of $5 on those calls. That takes that break even to 175, which would be a new all-time high.
Nano Nuclear still holding at just below 17. Looking for that to break higher.
Oracle. So yeah, somebody probably thinking that this pullback's a good opportunity to buy some upside calls. But the key is they're giving themselves about a month and a half in this position, Nicole. So 45 days till expiration for this bullish positioning.
Okay, thank you for that. And to your point, a really great performer. I mean, if you look at a 3-year chart, you really see how well Oracle has done over time. That being said, next up you have HPQ, I believe. Bearish, right? Let's tell us about that one. It's down about 3.5% today.
Yeah, off of session lows as the market kind of bounces back here a little bit. Was down over 4.5% at one point during the day.
Okay, Q's at the highs.
15% so far this year, but it did get downgraded today on a city. They put it down to a neutral from a buy. They kept their price target of about $37. The key, I think,
all right, let's see how far we can go with this Q's. Okay, looks like we're going to start to see some profit taking. All right, Q's. I'm taking a little profits off the Q's. It was a scalp.
take a while to kind of take hold. It almost reminds me a little bit of the Apple.
Okay, the Q's taking some profits. I will do the rest of these trades the same way. All right, many of these are ripping higher, so Raytheon, I'm gonna hold on. I'm gonna swing Raytheon. Raytheon's looking fine. Nano Nuclear, looking for that to break out. Micron, that's working out. Okay, Meta still, Meta just, I can't look at Meta. I have to take it off the screen. It's distracting. Meta, I sold right down here. Shit. I sold down here at around, let me see when I sold exactly. Filled orders, Meta at 124. Okay, 124 is right there. I sold right at the low of the day. And literally 10 minutes later, or 5 minutes later, this thing was moving higher. It happens. I mean, I do this too, you know, so don't kick yourself if you make this mistake. Well, it really wasn't a mistake. I had to take the stop because I was down near 40%, 38%. So I had to take it. I couldn't let it go anymore. This could have been down 50%, which I would have been kicking myself. You saw TTM was turning. TTM did turn. That might have kept me out of taking the loss, but now it's back up to the highs. So that's a 7-point move in the Meta. But the good thing is Apple's moving, Amazon's moving, Broadcom's moving. I don't have Google, but I have the previous three: Apple, Amazon, Broadcom. I have Tesla. I was thinking about NVIDIA, NVDL. I didn't do anything there. NVDL. Okay, it's bouncing off this area of liquidity. You know what? I might actually do this. Let's take a look at NVIDIA. Okay, NVIDIA. Okay, where did it bounce, NVIDIA? Bounced right at the 50-day. 4-day pullback. It's worth a shot. It's worth a shot, NVIDIA. Okay, I'm going to buy some NVIDIA. What the hell? Let me buy some NVIDIA. NVDL. Okay. Buy the market. Let me do 100 shares, 200 shares for now. Okay, that's fine. 100 shares.
Trader bought over 3,000 of those. Paid an average debit of about 70 cents.
Okay.
There's nearly 10,000 have traded on that strike so far now. So they keep adding on to this position. So the break even of 130.70 over the next 17 days, that's about 5% above the current.
Okay, NVDL. I just bought some NVDL.
About 5 times normal daily average volume that we've seen over the last week of trading. So yeah, a lot of call activity in RTX, but then we also saw some big call buyers in LMT and NOC also on the geopolitical tension that's going on right now.
Absolutely. All those aerospace and defense stocks obviously moving higher on this news, the tensions abroad, and the missile attacks, to your point. Thank you so much, Tom White. Great to see you. And a good look there at Options Corner and 3 names.
Yep. Gotta follow the rules. You know, if you only take part of the rules, the ones that are acceptable to you, if you do that, you're in for a rude awakening. You got to take the losses with the gains. Occasionally, it's going to pull back. Meta still pisses me off, though. It still pisses me off. You know, if I had waited 5 more minutes, I might have been down 40% instead of 38%. Might have been down 50%. But the whole market turned at the same time. Was there any news items that came out on that pivot? Because it was right after, well, it was before that, but Frank later talking about that fair value gap on the Qs. The Qs keep going. Okay, that fair value gap on the Qs right there. Okay, so I'm gonna circle it, or I'm gonna give you the. This is what we were looking at. Okay. Okay. Where is it? It's right. Where's that fair value gap? Oh, it's right there. Okay, so there's the fair value gap Came right down and tested it right there. Okay. And
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
okay, that's a beauty. That's a beauty, Frank. That was a beauty.
Yeah, like Schwab.
Wow.
Full service wealth management, advice, invest on my own, and trade on Thinkorswim.
No, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Fedelides, live on the
All right, that was a good one, Frank. I'm very proud of you. Very proud of you. The good thing is, I know there are other people that follow ICT thinking, and that's helpful because I'm not always watching. I'm not always watching what I should be sometimes, and it's good to have somebody else or other people doing the same thing. Okay.
Go-to-market capabilities and products to drive innovation to meet the
Thank you, Frank.
of the post-pandemic marketplace. Paychex is on track to close at its highest level since April of 2022. HP Incorporated trading lower after Citigroup downgrading the stock from buy to a neutral, unchanged price target there. The firm citing more cautious view on the PC recovery in the second half of 2024. The firm added that the continued Chinese macro weakness is likely to limit positive estimate revisions ahead. When it comes to AI, Citigroup doesn't see it impacting shares till 2026 or maybe 2027. In the meantime, let's focus on the rally that we've been seeing in China and get right to the China automakers. In fact, we're seeing some really good third quarter delivery numbers. And for that, we welcome in our next guest. Caleb Silver's with us, editor-in-chief at Investopedia. And I want to hear what you're going to say about the Chinese automakers, but I know you're following investor sentiment at the same time. And we are in a minute-to-minute market, but September was a winning month. What are some of the things you're hearing, Caleb?
Yeah, we just came out with the latest results of our bi-monthly investor sentiment survey. How are you feeling? Bullish, bearish? What are you afraid of? What are you buying? What would you do with an extra 10 grand? Nicole, they're as bullish as they've been all year. More than 70% say they're either optimistic or cautiously optimistic. Less than 20% are skeptical, a little too much optimism than we're used to here. Only 19% expecting a correction in the stock market through the rest of the year. And what are they leaning into? They're leaning into ETFs. This is a stock buying crowd. The fact that they're leaning into ETFs tells us they like the rally that we've experienced so far. They'd like to be a little bit more diversified, more balanced going into the rest of the year because we've seen some big gains in some big stocks, but we've also seen a big sell-off in a lot of those. That volatility may be too much going in to the uncertainty about the election.
I mean, we're already up 20%.
Are you not entertained?
And they just feel like up and away. It's amazing, or at least cautiously optimistic or optimistic,
Sure.
less so on the skepticism. Pretty interesting there.
Yeah, lower rates will help you feel that way, plus higher highs. And we've had a lot of higher highs this year, not just the S&P 500.
Yeah.
The Dow actually 33 all-time highs so far this year. So when you get that momentum, when you get that trend, and you know rates are going lower, earnings look pretty strong, what's not to like, especially when you're going to get less money out of the bank going forward?
All right, now we turn our attention to EV makers, including Tesla, by the way, but we're looking at a lot of the Chinese electric vehicle companies, and some of these deliveries were pretty great. Interested to hear more about that. Which ones jumped out at you?
Yeah, you got to look at Li, you got to look at NIO and XPeng, but also BYD. All the stocks are taking off like all Chinese stocks in the past 5 to 6
Okay,
days.
looks good.
Deliveries worldwide, much better than expected and much better than they've been over the past several months, except for Europe. Let's talk about Europe in a second. But when you look at the fact that a lot of these makers, especially the EV makers, the battery-powered makers, they're doing a lot better because of a tariff situation in Europe that's kind of hindering sales there. But good deliveries across the board from a lot of these companies, even Tesla doing well in the Chinese market and doing well in the European market as well.
Yeah, I was looking looking at Lee reporting the delivery figures. They were the first to report on Monday night, delivering 50 in the U.S. It delivered 53.7 thousand vehicles in September, and that was up from the year ago number of 36,000. So for the quarter, it was up about 45%. Pretty interesting to see. I mean, these are some significant gains. I mean, I know China's been doing stimulus, lowering rates, a lot of measures to boost the economy. But some of these numbers, I mean, there's Lee, look, almost 50% year over year.
And you see it in the stocks. Look at the stock shares of XPeng. It's up 17% in the past 5 days, like the rest of China. 63% so far this year. You could not say that about most of the Chinese market, but XPeng doing very
All right, the fair value gap, man, that was a beautiful play there.
year to date as the stocks of deliveries are rising, right? And also you've got the fact that battery powered EVs are selling a little bit better, especially in Europe, but especially in the United States as well. Very key for these companies. And automakers in general have not had an easy time selling cars without significant discounts. They've had to discount and add some rebates onto some of these vehicles, but it is driving volume and unit sales. And for these younger EV makers, especially out of China, they need volume sales. They need unit sales to actually prove that they're going to be around for a while. To investors, so far in the last couple months, that's happening.
Yeah, and what's interesting too is we think about Tesla, and we're waiting on the robo-taxi event on the 10th, right? 10/10, then followed by the earnings. But overall, deliveries for Tesla were good news. But people are really, sort of getting all hopped up for the 10/10 event. Some of your thoughts there on that one?
Yeah, I mean, Tesla's a hype stock, and those that love it, and will hold it, and want to buy it into some of these events. Look at the Cybertruck. It was a major announcement.
I hope you hit it with like 100 calls there, Dr. Frank.
It was a big announcement, and the stock kind of volatile in and around that, and in and around the actions of the CEO, Elon Musk. So you might get some hype going into it, but the believers are the believers in Tesla. If you've been able to hang in there for the last 10 years.
Okay, Futu, or Futu, not Fufu, all right? Futu. Still going. Okay, what are the Chinese stocks doing? Let's look at IQ. IQ. Okay, IQ. All right. Got a hanging man candle. Looks like we're going to head back up to the highs. Baozun. 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 Okay. Baba. Had an inside day. Baba. Okay, almost about to take out yesterday's high. Baba, Baidu. All right, so the stock market, Chinese or otherwise, looking really good.
Yeah, it was the fourth quarter where BYD took over Tesla, and then Tesla took back the crown in the first quarter, has been holding it for now, but they are definitely neck and neck in the big picture. I mean, when we think about what's going on here in the world of electrification, data centers for AI, it's going to be a whole new world for electric demand, because we talk about that these kinds of cars need to plug in, and the U.S. grid not ready.
Not ready for that, even though there were a lot of promises made in the Inflation Reduction Act, which is really a climate bill in disguise. But you got to watch Europe very closely on this. This is a key market for a lot of these automakers, and sales fell 48% in Europe. They did well in other parts of the developed world, not in Europe, because Europe has provisional tariffs on companies that are EV imports that are not battery powered. So they have regulations there that are very tough. European automakers would like Brussels to loosen those.
Oh shit, there goes Nano Nuclear. Oh, damn it, Janet. Okay. Let me buy some more. I'm just going to add a couple hundred shares here. Shitsky. I messed up. I should have waited. Sorry about that. Looks like we're going to go, folks. Okay, Nano Nuclear. Looks like we're going to go. Okay. Nano Nuclear going. Okay, Nano Nuclear.
BYD actually had some recalls, nearly 100,000 recalls for potential fire. That was yesterday, but still a winner week to date, still up 5%, and year to date 35%. So that's the big picture, but sort of.
Okay, here we go.
Some of these are record numbers.
At least I caught it before it got too crazy. Okay, there goes the hour. Okay, Nano Nuclear. Okay, I missed what, about 20 cents on that one? There goes Nano Nuclear.
We'll see what happens with these automakers as well, but Europe's a key market for all.
Yeah, and And the European automakers, well, there was one article that said European automakers don't have a response to the Chinese EV offensive. So there's
There it goes. Nanonuclear NNE.
Yeah, yeah. Caleb, good to see you. And thank you for the news on the sentiment, how people are feeling so bullish. Careful, invest wisely. Caleb Silver, Investopedia, thank you for joining us.
Nano's going. Okay, good job there, Nano.
Some key trends to watch. He's watching the S&P 500, which is up about 20%.
Hour and a half to go. A little bit less than an hour and a half to go.
Clorox on his radar. He'll explain. We'll be right back.
Nanonuclear. Yeah, I saw you post that last night, Cayman. I have AVGO too. Well, the Bears just can't catch a break, huh? Meta going. I'm so mad. I am so mad. I am so mad. Happy for you, though. Meta. All right, so I got one that got stopped out on. Should I tell you the other F up I did? Should I tell you the other fuck up? Last week on Friday, I think it was Friday. Was it Friday? Or was it yesterday? I closed out Win. Okay, YINN. And I made the mistake. I put in a market order. It hit the high and there was no trades on it, but I had a vertical. So when I took the vertical off, I had a market order instead of a limit order. And there was no trades. All of a sudden, somebody saw it. They came in and they snapped those shares away from me. It was $180 loss per contract. So I'm not going to make that mistake again. I haven't done that in a long time. But on a thinly traded stock like or a asset like this, I traded a market order, which was a big no-no. Somebody snapped it up. There was no trades on it, and there was no open interest or whatever. So that was a screw up. That's two in a week. Anyway, so I'm human. At some point, we're going to have our own algos that take care of all of our trades for us. You just tell it exactly how you like to trade, and it's going to do everything for you. No mistakes. And we can just go about our business, go sailing, go play golf, surfing, do whatever it is you want to do. Go hiking, fishing, and your algo is going to do everything for you. Yeah, it looks good. The two Utes. The two what? Fred Gwynn. The two what?
Well, we've got support right beneath us, basically, Nicole. You know, from a technical standpoint, we had run ourselves to 5670 back in the early part of the summer here, back on mid-July, early July, and that 5670 was a level that we took out with the FOMC rate decision 2 weeks ago tomorrow, and we've been above that level for the entirety of that period following the decision. Now, Wednesday we had the volatility on decision day, but the subsequent morning we had the nice little breakout and then a continuation where we more or less have held that level until today. Now, what's interesting about today's action is that 5680 low we got today is coincident with an area of short run support. What I think short-term bulls are encouraged by, Nicole, was to this point the amount of buying that came in when we tested that 5680 zone. A lot of traders expecting some kind of pullback to the breakout, looking for their opportunity to get long or add to long positions in the S&P 500 at above this 5670 level, but they like to do it after a test of that support. So 2 weeks above, an intraday test today, it's way too early to define it as a successful test, but that 5670 to 5680 provides proper short-term support in the near run here. We surely could slip to the 20-day moving average. Today, that level comes in at around, let's see here, 5630. And that's another area.
Love Fred Gwynn. Great movie.
Right now, at least, Nicole, it sure seems like all of our drawdowns and pullbacks are being bought up quite nicely. And until we start to see that change, I think you're going to see bulls continue to be optimistic.
Yeah, understood. All right.
Yeah, of course. Of course.
The issues with the ports and the strike, and that could cost millions of dollars, excuse me, per day, if that is to continue.
Yeah, Fred Munster.
Auto industry.
Herman Munster, rather.
An auto group saying that the auto supply chain could really set off some serious issues, economic and national security ripples. So I think this is something that's a little bit of an overhang on how our markets could perform, coupled with the geopolitical events that have been happening today. That being said, I want to get to the next name that you're following here, and that's Anheuser-Busch. What price points are you watching here?
Well, couple of things. Number one is that we've been watching Staples provide as a sector quite a nice bit of return, up 16% on the year-to-date basis. And the two stocks we're going to be looking at today are in the Staples group. And what's neat or nice about the chart as it relates to Bud, yes, we got.
Okay. I'm sorry, I didn't mean to stick this on this one chart. All right, so Q's still hanging out here.
We tested with today's open essentially back in middle of May. We got as high as about 67.5. What's intriguing about this, as you can see on the daily chart, it's kind of sloppy, right? We've got a lot of back and forth. It's been a bit volatile. The recent low was in the neighborhood of 59, and now we pushed into 67. A wonderful move, albeit to an area of resistance. But if we were to look at this on the weekly chart, Nicole, I think what stands out is the clarity at the $68 level that we can see really developing as resistance now for about the last 2.5 years. And if you're looking at it from that standpoint and thinking, all right,
F-16s, test pilots. Okay, he just buzzed the house. I don't know if you heard that. We got a squadron of F-16s here in Myrtle Beach. All right. Okay, Meta looking really good.
If it were to break out. But of course, when we're looking at resistance, Nicole, one of the reasons traders are patient and sit on their hands until the breakout occurs is that we never know if it's actually going to happen. The last two times we've been to this same level, we have retreated to make higher lows, creating this ascending triangle. Eventually, we're either going to break out or we're going to break down below the ascending line there, the uptrend line. But until one of those levels is broken, traders might very well just be sitting on their hands. But we are right at the upper ledge there, 67 almost. So perhaps encroaching on a potential breakout here in BUD.
Yeah. All right. And then last but not least, we think about staples and consumer type products, and we look at Clorox, which has been a winner. It hit 169 high. The year to date, its performance is up over 16%. Some of your thoughts there. It did have an upgrade over at Jefferies to buy from hold with a new price target, 187 up from.
What time is it? 2:42 on the East Coast. 2:42.
Well, this one all starts with the strong move we've seen here, creating a flagpole and now a cloth portion of the flag over the last 3 weeks, as we've pulled back on light volume in the midst of this little drawdown, holding the 20-day moving average today, utilizing that upgrade to perhaps get outside of that cloth and maybe be a breakout with potential upside that could be pretty significant here. So, like you said, Jeffrey's upgrading them. We've got a 187 price target, by no means a guarantee, of course. But if we're paying attention to the breakout today, we want to see a hold over the 20-day moving average for a couple of successive closes, of course. Patient bulls are waiting on that, maybe a second day above the 20-day moving average. The height of the flagpole since this really started to move is about 30 points. That could mean a potential area around 195 upwards of 200 as a possible target. But as usual, Nicole, when we talk about upsides, it's always helpful to remember, yes, this pole established itself very quickly, but we can't expect every one of those moves to be the same. And we often take that nice stair-stepped approach higher a little bit more casually than we do the big moves to the downside, which tend to take escalators and elevators more consistently. So obviously the move through the 20-day and holding it would be significant. But if we were back below, say, 160 anytime in the near future here, this flag would basically be a fake out, and bears would be more likely in control. So there is a level where bulls would want to say, yeah, maybe I'm a little bit wrong on this, but today's action is optimistic, and on the heels of an upgrade, there may be more to work with.
Right, understood. I think it's worth noting that we've seen oil today jumping in a big way. I know you're following so many charts. I don't mean to catch you off guard, but oil's up over $2. It gained about 5%. I mean, you've had a lot going on here. You've had the Iran missile attacks into Israel, where you had folks running into bomb shelters. But, what will OPEC do? Which of these, I mean, Israel's not a producing country.
Okay, Nano Nuclear, looking for that. All right, just got to 17. Looking for a higher high now.
But I think it's something that people are getting a little nervous on and could
Okay, Unity Software trying to turn. Micron is off 2.75%, back to VWAP.
Any final thoughts on your part or anything else you're watching here, Kevin Horner?
I think it's an absolutely appropriate thing that we as traders have to keep an eye on. There is no doubt that the movement we have seen since early July to today in the price of oil, or as early as recently as yesterday or the day prior in oil, has been a benefit to our bottom line. It has absolutely helped the inflation discussion. Now, today's action has resulted in more volatility and a rally into about 72.25 a barrel. There is a ton of resistance there, though, Nicole, and we have been beaten back a little bit on that rally. So I think what it represents for us, regardless of narrative, you can see it on this chart you're highlighting. If we draw that line from the peak in July, it is pretty evident, and there is a lot of confluence at about 72 to 72.5.
Q's looking good. We're at the previous daily low right now.
We can remain relatively optimistic that we're not going to see a continuation of or rather a reversion back to the inflation discussion. But clearly over 72, 73, we definitely need to be paying closer attention to that, because then things can shift quite a bit. You're absolutely right.
Look, and this is a great setup for our next segment, because we're going to be talking about oil with our guests who are focusing on this in a great way. Because as you noted, traders are watching this. This could be an inflationary issue. Commodities are key. The dollar in focus as well. So Kevin Horner, great setup too. Senior Manager, Trading Services Education at Charles Schwab. Thank you, Kevin. Still ahead, we bring in our panel to dive deeper into the crude oil market, the impact Hurricane Helene has had, all of the tensions that we're seeing with, what's going on abroad, Iran, Israel, and more.
Meta. Okay, a little profit taking at the highs. Tesla. All right. Okay, we're coming into the 3 o'clock hour. Got about 13 minutes to go. 13 minutes to go. Power hour right around the corner. Looking for some more follow through. Nano Nuclear would be nice.
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah, at
Schwab, I can get full service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime.
All right, so everything is up and to the right. We are seeing some profit taking though, so watching the cues here, the cues.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by
Okay, it took some profits on the cues on the way up. Okay, that's good. Looking for XBI to do something. I'd like to see that rocket a little bit.
with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy.
Cues.
Cash to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks,
Nano Nuclear looking for a breakout.
and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock
Nano Nuclear trying to go.
Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Okay, we're just going to rock back and forth here, looks like, for now. Nano Nuclear. Watching that one for a push above 17. There's not a lot holding it back. It should go. 53% of volume traded on that one wick right there. Wow, that's pretty decent.
Thank you both for being with us. Patrick, I'll start with you. You know, you always do a good job on giving us the consumer's view here as oil has.
You see that right there? Strong high, 53%.
Does this turn around?
Okay, looking for Nano Nuclear to take off to the upside.
The energy market's been pretty volatile here the last couple of weeks. Last week, oil prices rose above $70 a barrel. Postal gas prices responded. We've seen the national average now holding at about $3.19 a gallon. There's been a lot of social media posts that worry about gas prices rising exponentially after today's attacks by Iran, but consumers really don't have to worry about a necessary spike coming just yet. Of course, there's a lot that can still develop. Oil prices, as you mentioned, coming off their highs. Now, it can be relatively quick. Later this evening, gas stations across the country, the first gas stations will probably be paying a few pennies more per gallon, and that will probably cause some of them to maybe raise their prices a couple of cents here and there. But the bigger question is, will this destabilize the Middle East, and will there be more of an impact? For now, consumers should not really worry about prices spiking. That is not something we foresee happening.
Okay, not for now. I'm glad you brought that to our attention, because that's something that everybody will always be asking about. Dryden Pence, look, we've had a couple of things that affect the energy world. You had Hurricane Helene, which obviously devastated.
Okay, all these stocks are holding near the highs. All right, watch Nano Nuclear here. This thing could go. This could go.
I just saw that it's the 7th largest producer. Where do we stand, and what are you most worried about?
All right, let's go. LATSGO, let's go. Looks like we want to go here. Nano Nuclear. Let's see what the daily looks like. That is the daily, okay. Hourly looks good too. The 60-minute looks good. 60-minute nanonuclear. I don't mean to spend so much time on this one, but I want to see this breakout so I can sell some into strength. Look for the next dip to buy. Okay, I don't need to ride this one every single day. Sell it into strength. Next dip, we'll buy it back. Nanonuclear. Okay, hourly chart looks good. Hourly just went cyan. Okay, so that dip that we just had, we're going to see perhaps a follow through on the 60-minute.
And so we might see oil prices move above, 70, maybe 75, probably stay below 80. But basically, you can make up the 3.5 million barrels a day that might come off. And so I don't think people should be overly concerned about a tremendous long-term spike in oil prices, because basically there's enough capacity out there to overcome it. Saudi Arabia is looking at increasing their production by about 2 million barrels a day anyway. So I think that the thing for people to know is not to panic over this. Certainly be concerned about the human costs of the hurricane, certainly be concerned about the tolls in life, but the strikes don't really affect oil delivery very much. So I think we just kind of take a breath, recognize it's going to be okay. We might see a small elevation in oil prices for a while, but that's about it.
Yeah. Yeah, well, Patrick, I mean, Hurricane Helene obviously impacting prices, at least to a certain extent. You were noticing some outages and such, but we are right in the middle of hurricane season. No telling what more could come, right?
Yeah, it had been a quiet August, and that's leading to what was a more active September, and certainly it's not quieting down anytime soon. A couple more areas of interest here.
Okay, no breakout yet. No breakout. Okay. Oh, what's the Qs doing? Qs. Let's go back to the Qs. QQQ. Sitting there at the highs. Qs. All right, I took some profits into strength on the Qs. For what it's worth, that was a nice pop.
Then you have the power issue. Will stations have power? Are the stations still standing?
Ooh.
In some of these areas of Western North Carolina, the infrastructure, the station, the business may have been swept away. So certainly a lot of challenges there, but the fuel is still flowing. It's not going to be a pricing event. I want to be very sensitive here. Tennessee, areas of Carolinas, both north and south, are working through at least low-level outages. And to your point, hurricane season's not over yet. Hopefully there'll be a little bit of a break here, but still a lot of activity.
Yeah. Dryden, what do you tell investors? Is there opportunity here quickly? Anything you're buying in the world of energy?
I think we take advantage of volatility. We don't be its victim, so we take the opportunity.
All right, come on. Let's go Qs. Let's do this. Let's do this. Okay, watching the New York FANG index stocks, they're all doing the same thing. Okay, we haven't seen this in a while. Going into the last hour, I haven't seen this in a while with all of these moving higher.
Yeah, Dryden Pence Capital Management, Patrick Duhan.
So the Qs should pop.
Thank you so much.
Qs should pop when you see this. When you see this kind of action, you would expect the Qs to pop.
It's available in the Apple App Store. Great. Tune in 24/7 SchwabNetwork.com. I'm Nicole Pedalides. Thanks for watching. Market on Close with Caroline Woods is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable
Q's trying to go. You can see all these New York FANG index stocks are moving higher.
will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, oh, way off with their head.
AI feels controversial and it's going crazy right now.
It is going crazy.
But what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
Bum, bum, bum.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
All right, Nanonuclear not taking out the highs. Nanonuclear not taking out the highs yet.
Good afternoon. It's 3 p.m. in New York. I'm Caroline Woods, live from the floor of the New York Stock Exchange in for Oliver Rennick, and this is Market on
Okay, we've got an hour to go.
left in the trading day.
1 hour to go. 1 hour to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 3 p.m. All right, let me go take some chicken breasts out of the freezer. I will be right back.
Seeing a bit steeper of losses, down 1% or a little bit more, but still well off session lows. S&P 500, meanwhile, off about 0.7%, seeing strength in the energy sector, but weakness in technology, healthcare, real estate, and so on. Let's take a look at some of the other futures products. Oil, of course, is higher, off the highs, but still higher, up about 2.5%, trading around $70 a barrel. You can take a look here. Dollar and gold also higher right now. Bitcoin, meanwhile, is lower, now trading, getting close to 62,000, so continuing its losses. Let's kick things off with a look at the broader market with Kevin Hings, senior equities contributor here on Schwab Network. And Kev, I'm so glad you're joining me because I'd love for you to help me make sense of some of this uncertainty and what it all means for investors. So let's start with the comeback that we're seeing in the Dow. I mentioned it was off as much as 380 points, now inching closer to the flat line. Hasn't actually turned positive, but could stage a complete recovery. What's going on?
Well, the good news, this market worked its way through the unknown of the event, then the event, and now we're getting through the event, and the realization is the IDF just reported that there's no known injuries from over 100 ballistic missiles being sent into Israel. And so the Israeli military says this is a serious attack and will have consequences. But if they're reporting and they continue to report from this, then the majority of this crisis, other than the follow through and the answer from Israel, is pretty much over. And that's what I think brought the market from, having its losses on the day from down almost 1.5% to down about 0.5% now. So I think that's what it is. It's the uncertainty about the event, Then the event happens, and now we're getting through it, and it turns out it's not as serious as we thought in terms of injuries or casualties, and the market's making, a pretty significant comeback here off the lows, Caroline.
Obviously, there still is uncertainty in terms of how Israel is going to respond. You're taking a look at oil prices. They are right around $70 a barrel, so off the highs, but certainly higher than where they were. Defense stocks still on the rise. So safe to say this is just adding another layer of volatility, of uncertainty for this market as we begin the fourth quarter.
Well, when days like this come, Caroline, what I do is go right to the risk-off assets. And some move more than others, and for some other reasons, some move, but it's the dollar that you mentioned is higher. It's yields that are lower, which the 10-year bond is being bought, so risk off there. The VIX is up over 10%, now trading 18.5.
Broadcom looks like it wants to go. Broadcom.
And then it's crude oil that's higher on the day. So, and then gold, of course, which has been trading strong all day. So 5 risk off or potentially risk off trading vehicles that you might look at. All of them volatile days. It's interesting how the market was going to be soft, and all of a sudden the defense stocks all rallied. It took
Made this one to turn a corner. Broadcom.
Up on the day. So I think you're seeing the speculation about war and and everything that involved in that play out throughout the day here, Caroline. Risk off and defense stocks.
Okay, well, Boeing is actually the best performer on the Dow, just confirming that. Yeah, Boeing, Visa, Chevron, best performers, but Boeing's number one. Shares are up about 1.5%. There's some other news surrounding Boeing that we thought might actually bring the stock lower today, and that's that it could be selling some new stock, which might not be good news for Boeing, seeing as shares are down 40% year to date. But fill us in on the story there.
Yeah, Boeing started the day pre-market traded as low as 146 and change. During the day, traded as low as 149.49, I think was the low tick. But then this news story came about, and defense stocks rallied. As you know, Boeing is not just 737 MAX; it's got an enormous Defense Department division. So all those RTX, Northrop Grumman, Lockheed Martin, all those stocks rallied in the industrial sector. That's why you're seeing the industrial sector so strong. But all those, Boeing was one of those. They're going to have to raise, they say, as much as $10 billion by selling more stock or offering more shares to the marketplace. So
Okay, watching Nano Nuclear. Broadcom trying to push a bit higher. The Q's looking better. Q's big reversal off the low today. All right, the yellow histogram bar is starting to turn on the Q's 1 hour chart. Okay, Broadcom trying to push higher. Amazon. Okay, cool.
Here's what I'm thinking going into the fourth quarter, me personally as a trader and an investor. The S&P 500 for the third quarter outperformed the Magnificent Seven by 0.2% throughout the third quarter. That shows you the lack of performance from the Magnificent Seven. And if we're going to have a good fourth quarter, I think you need that Magnificent Seven to retake the leadership of this market. And those numbers that look relatively modest seem crazy when you think about the power and success of the Magnificent Seven. That's what I'm looking for. And I'm going to listen to Fed speak. I'm going to watch interest rates and watch how this plays out as the Fed grapples with how to move interest rates and interest rate cuts for the rest of the year. And I'm going to watch the performance or underperformance of the Magnificent
Okay,
Seven.
Google. Let's see what Google wants to do here. Google pushing up against the highs. AMD. Watch AMD. AMD is trying to reverse off of this pullback. Here goes Apple. Now I got Funk 49 in my head.
Actually, now the worst performer. Off the lows, but down about 3% quite a bit. We've talked about it. Fill us in on the latest for what's dragging down Apple shares. Yes, Caroline, we're reporting on Apple all day long. We're just keeping up with the real-time updates on Apple.
Yeah.
$1 actually higher than where we
I know where you're
I agree with
going.
Kevin. I need some participation from the rest of the Mac 7 to get you topped up by feels like Alphabet at this point, but Meta as well actually, which is up percent. But in terms
All
of
right. Apple, not Apple. Apple trying to go. Change of character. Apple.
concerns about the iPhone 16, which we've all been saying, I think that it's pretty widely understood why there are these concerns, given that its Apple Intelligence rollout will not be at least preliminarily until about a month out from the release.
Yeah, I was thinking the same thing. Thinking the same thing.
To come in the next 6 months or so, that's expected at least. But Barclays analyst Tim Long is one of those few and far between bears on Wall Street of Apple, as he did rate the stock under a $186 price target, which does put it slightly above the lowest I could see was around 183-ish or around 184 roughly if we're rounding. The median though is 240, just to illustrate how much downside this would imply, about 20% actually from where we did close on Monday's session. But amazingly so, this analyst cited some of the things that we've all been talking about. And the fact
All right, there goes Apple going.
a lot of this continued fallout from what was being seen as a super cycle. They said they're tracking
Apple's going.
across the globe, and wait times for these new smart devices were shorter this year than last, which implies then softer demand. So even more notable, they did say that based on these recent supply chain channel checks, that they believe Apple may have just cut their orders at a Taiwanese supplier for the December quarter. Overall, the possible iPhone build cuts, weak sell-through, and shorter lead times do suggest, in their opinion, this softer start to the iPhone 16 cycle with a negative mix shift due to the weakening consumer spend, macro pressures, and competition. So Wall Street has been, of course, keeping a very keen eye on what the iPhone 16 cycle looks like ever since the launch of some of more of the specs of that back in September. Overall, devices for sales of that device are important. This is still 15% of Apple's overall revenue, so no wonder why we pay such close attention to it. There is a chance, though, that everyone's waiting until Christmas to buy the new iPhones. I typically find myself buying closer to the end of the year. Don't think I'm actually going to upgrade just yet from my 14, but we'll have to see what those, obviously Apple reports at the end of this month, but then the holiday season is going to be so key for Apple. All right, you also have your eyes on HP Inc., HPQ. Shares there down more than 3% today as well after a downgrade. The analyst over at Citi moving to the sidelines. Tell us why. I think this is a really interesting story, Caroline, because of
All right, so the New York FANG Index stocks, when they're doing this, this is kind of hard to beat. Okay, you don't see this very often.
Citi disagrees. Citi actually took a more cautious view on the overall PC recovery in the second half of this year. That's the reason behind the downgrade. Recent channel checks, they said, in their overall PC ecosystem suggest that the near-term PC refresh cycle remains protracted given the macro uncertainties as well as Windows 10 security patch extensions, while AI overall impacts are further likely out not until 2026 or 2027.
I know, I see you.
For that reason, they
I see you. I'll feed you. Give me a second.
In the aggressive overall hardware pricing world. So I think that that's actually frankly interesting because we saw this PC recovery was such a reason of strength actually in the last earnings period for so many companies. HP obviously not seeing the love as they did not keep their price target unchanged, $37 a share, implies some slight upside, but downgraded to neutral from buy. So taking on a more sideline approach on HP, which is now also lower substantially on the session here. Yeah, shares still up about 15% year to date, but off about 3.4% today to kick off the month of October. Jenny Warren, thanks so much. We'll see you a bit later in the show. Thanks, Caroline. All right, let's switch our attention from stocks to bonds. For that, I'm joined by Jennifer Johnston, Director of Municipal Bonds at Franklin Templeton. Jennifer, thanks so much for joining the show. Great to have you.
Having me.
So we're seeing a lot of money coming out of stocks today, and when you think about where to put it, sounds like you would say put it in muni bonds. Tell us why.
Absolutely. For a lot of reasons. First and foremost is for those that are trying to manage their portfolios and their tax situation, having tax-exempt interest can obviously be advantageous especially if you live in high state areas, think California, New York, Massachusetts. But it really makes sense in any asset allocation, regardless of what your tax bracket is. A couple reasons for that. First of all, fundamentals are actually pretty solid. You know, we're coming off, you know, a situation where we have credit at its all-time high reserve level.
There goes Apple. Apple going. Come on, Nano Nuclear. I'm just sitting here chomping at the bit. Okay, Meta pulling back a little bit. Meta. Okay, a little profit taking. Meta first. There goes Microsoft. A little profit taking on Microsoft. Hopefully it turns into a buy. Meta pulling back a bit. All right. Apple. Let's see. Apple.
To the extent you have the appetite for moving out the maturity schedule or even down the credit spectrum, you find a firm who has a strong research component, and they can be able to kind of suss out which of those credits that you should own. Always an opportunity, low default rates. Munis are the place to be.
There.
All right, so how does the Fed rate cutting cycle that we're now in
Can't get Funk 49 out of my head now.
is for at least 2 more
I
25
know
basis
where
point
you're
cuts from the Fed this
going.
year? The market, I think, would like a little bit more than that, but we should at least be
Come on, Nano Nuclear. Let's go.
How does that impact munis?
You want food, right? You want some food?
So we've been in
You
this
hungry?
waiting period for
She woke up from her nap. Now she's hungry. All right, give me 2 minutes. I'm going to go feed the cats. I'll be right back.
fixed income or think and what the extent of those will be. But you know what we've been talking about for a long time is trying to take this inverted yield curve that we've had in munis and get it to steepen out so we can get those people out of cash and help them lock in for the longer term returns and yields that are going to help them achieve their financial goals.
So it's a mistake right now to be sitting on a bunch of cash, even despite so much uncertainty that we're seeing play out today.
Sure, we think so, and I think the challenge is making sure that you don't miss out on the opportunities. And we think there has been a lot of these opportunities have already passed us by, but there's still a little room. So to get in now, lock in these higher rates while we can. As the rate cycle continues, you'll be able to continue to generate ongoing income.
So I'm curious because I was taking a look at your notes and you said, don't be late to the party when it comes to munis. How do you know when the party's wrapping up?
Sure. So I think when we start to see spreads kind of stabilize, they're not going to tighten anymore. I think that'll probably be the time. But the thing with munis is that you're always going to be able to generate that tax exempt interest. And so even if it's from a return perspective, maybe you're not always doing the best, you're still helping to manage your tax liabilities. And that's always a benefit of munis anytime there's the rate cycle.
And what about the impact of the election on the bond market? Both, you know, local elections, but also, of course, we have the presidential election, almost a month away.
Sure, it's definitely something that we're looking towards. And, you know, one of the kind of impacts we're seeing right now is a ton of supply coming to the market. We're hearing that a lot of issuers are trying to come before the election when this uncertainty, while that uncertainty is still out there. But at this point, you know, we're focused primarily on a divided government outcome or a red wave. And we look at it from two perspectives. First is going to be how likely is it going to be to get anything through Congress? You know, we've seen challenges with divided government in the past, and divided government in the future is likely to still create issues getting anything through. And second are going to be the policies. And we do know that the TCJA expires in 25, and so there's going to be some big decisions to make. And so we're watching closely what that might look like, what the solutions might be, especially under a Trump administration, and what the impacts could be on munis, whether it's around some of the things like advanced refunding and some of the things that we lost when the TCJA was passed, whether it's income tax rates in general, which can impact the demand for munis, of course. And then finally, what the tax exemption looks like going forward. It's an argument that comes up every 4 years like clockwork. This year is no exception.
And finally, you mentioned potentially being too late to the game for certain fixed income investments. What should bond investors be avoiding at this point?
There are a couple of sectors that we continue to watch, and we don't really have an approach where we won't buy any sector full out, because we think with a solid research staff, you can always find opportunities and find some of those, rough diamonds that you can turn into something beautiful. But, we continue to watch healthcare and senior living bonds. These are two sectors hit hard during the pandemic. We think they've bottomed
Okay,
out,
Apple.
and now is an opportunity to see stronger margins and better returns there. We're also continuing to watch private education, and private higher ed in particular is very bifurcated. Your strong college institutions, still very strong. But these small regional players, they're really struggling. We've got negative demographic pressure with fewer kids going to college. The very high cost of private higher education in this country is really putting pressure we haven't seen on the higher ed landscape. But we've actually seen colleges close, which, I never thought I'd be saying that. But it's something where you really have to have the right mix of, demand and a price point to continue to attract a smaller number of students who are graduating and moving on to college every year.
All right, we have to leave it there, but thanks so much for sharing your expertise. Jennifer Johnston, Director of Municipal Bonds at Franklin Templeton. All right, coming up, McDonald's and Starbucks both underperforming the broader market this year. We'll take a deep dive on both companies with the Jefferies restaurant analyst. Plenty more on the way. We'll be right back, so stay with us.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
All right, Apple's still going.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Let's talk restaurants with Andy Barish, Managing Director of Jefferies, restaurants and coffee shops, I should say. So, Andy, let's start with McDonald's because shares are under pressure today, off about 0.3%. They've had a nice run, really since July, call it, but only up about 2%.
Apple's still running. Apple.
This is a name, though, you're bullish on. You think it can have about $27 upside from current levels. Tell us why you like McDonald's.
Yeah, thanks for having me, Caroline. McDonald's had a really good third quarter because they pivoted and really started their efforts to reestablish their value leadership in the quick service restaurant category, and it's paying early dividends. I think we've seen the worst of the traffic declines at the business in the U.S., and that was what put pressure on the stock in the first half.
Apple's still going.
So we expect sequential improvement as they move through the rest of this year and into 2025. So that's kind of underpinning our continued buy rating, even though, as you mentioned, the stock, the stock has had a nice move here recently.
So yeah, you have a buy rating and $330 price target. I did see the upside case is 365. What would get it all the way to 365? What needs to happen?
Yeah, they'll launch their full value kind of assortment, I guess I'll say.
Cues look good.
Of the year when consumers are typically looking for promotions and discounts coming out of the holiday season. So that'll include the $5 value meal, but also individual price points and probably some breakfast promotions, all of which are kind of important to McDonald's regaining its value leadership. And typically in tougher, choppy times, that is when McDonald's tends to push its market share, regain lost share, and then continue to have share gains. So we think with that, you'll have positive same-store sales in the U.S., and that will
Look at the volume,
continue to propel
Apple
the stock,
volume.
in addition to the potential for increasing unit growth globally.
Volume building on Apple.
Opportunity to maintain or even expand industry-leading margins in the mid to high 40% level for operating margins.
Okay, so bottom line, how much of your bullishness has to do with the fact that McDonald's is offering those $5 meals for longer?
Well, I think, the earlier summer launch of the $5 meal was just the opening salvo. So I think, there is more to come, and that is a big part. I mean, the stock does trade on its U.S. comps, but I also think, as I mentioned, there is an intermediate term part of this story that can continue to propel the growth and thus the valuation with more global unit growth to be more
Boeing.
similar to some of its global peers like Domino's and Yum.
Yeah, Apple doing really well. Apple.
To kind of continue to focus on margins through some G&A reductions.
Okay, so shifting from McDonald's, where you can get a $5 meal, to Starbucks, where you can get a $5 grande iced tea. Not as bullish on Starbucks. In fact, you have an underperform rating and a $76 price target, about $20 below, more than $20 below where it's currently trading, basically back to the levels before CEO Brian Niccol was announced. So you think that this run-up that we've seen because of Brian Niccol is unwarranted?
I think it's just too much too soon. I mean, we like Brian. We think he's very, very good, and obviously the analog at Chipotle starting in 2018 has formed some of the dialogue around the move in Starbucks. We just think this is a much more complicated, larger, global organization, and it's going to be a heavier lift and take a longer period of time. And we think the next few things Brian's going to have to talk about are going to bring a little bit of dose of reality and kind of create some pressure on the stock, for the near to medium term.
What does Brian Niccol need to do to turn you from a bear to a bull?
Well, first thing he's going to need to do is build his team, because there's clearly been some shortcomings at Starbucks. He's going to need to work on the culture and the people side of things. In my view, some foundational elements have been rocked a little bit, I'll say, by the complexity that the former CEO has brought to the business in the past year through a lot of innovation that really didn't work in terms of driving incremental sales, but added complexity to the hourly team member or partner's jobs, which has then rippled through in terms of slower service times and not as good an experience as maybe folks remembered from the Starbucks of old. So I think it's really stabilizing, building the team, and really reinvigorating the culture, and all those things take a lot of time, and that's where we think there's a bit of a disconnect between the 25 billion or so market cap that has been gained since Brian joined.
So just finally, all of those points that you want to see Brian Nickel really address on very Starbucks specific. So I was wondering if there's a macro read through in terms of bullish on the value play, bearish on the more expensive option. Doesn't necessarily seem to be the case, but could there be a broader read through in terms of your take on the consumer based on your calls here?
Yeah, clearly 6 months ago, we were bullish that McDonald's would be able to figure out value, and we were bearish, not at an underperform, but we were skeptical of the direction that Starbucks was going, and thought it was a lot more complicated and a longer term fix. I think.
Yeah. Whatever.
Double digit. So it's not that big, but it's good. But long term, I mean, you bring up a good point. Like, I understand the need for a second source, but most of A&D's exposure right now is at these larger hyperscalers. And like, is that second source? Does it need to be the A&D or is it Broadcom? I think that's an open question at this point. Yeah.
Two quick ones before I let you run.
Watch Nano Nuclear.
Outcome of the end game, whatever you want to.
Watch Nano Nuclear.
What happens here?
Yeah, and that's a great question. I mean, they kind of bet the company now that their 18A, their next generation process that they call 18A, and then they're betting the company on its success. And so that's I guess what we're waiting for. And if it is truly successful, maybe you can see a revitalization. You know, they bring a bunch of, they're outsourcing a lot of stuff to TSMC right now. It's killing their margins. You bring the stuff back in, the margins get better. Ideally, it's a better process so they can take back market share and they can charge more because they're better products, and it gives customers a lot of confidence to put a lot of foundry volume there. And that's how you kind of build to the targets that they put out there for 2030. And keep in mind it's 2024 right now. There is a lot of wood to chop, though, between now and then. And you know, if that process does not knock it out of the park, if it's not successful, then, you know, there are some more severe scenarios that may come to play. And to be clear, like, I don't think they're desperate at this point. We made this point before. I think given the OPEX cuts and the CAPEX cuts and the dividend suspension and the government funds and the private equity funds that they've gotten, I think their cash position is okay. So I don't think they're desperate. They don't need to make any crazy moves, but they probably got a year, 18 months, like, to see if 18A really holds muster or not. And if not, then there are more severe scenarios that may come to mind.
What about Qualcomm? Quickly.
Yeah, I like Qualcomm. The only issue with the stock,
Apple's still going. Apple.
It's looking maybe more likely. They've already suggested people that kind of by the end of 26, the Apple business mostly goes away, and it's looking like they may lose potentially some more of it next year. Now, that being said, with the stock trading right now, it's a roughly low 20s multiple on next year's number, even if there was no Apple in it. And my own opinion is by the time Apple is gone, if Apple leaves, which would be fiscal 27. I think they're doing $10 plus. So I at that point, even without Apple. So I think you just need to sort of clear the Apple overhang and the stock can work. In general, smartphones are not great, but they've kind of bottomed. And I'm getting more positive on the content opportunities, if not necessarily on the units for AI smartphones. And there is a diversification story that's kind of slow, but it is building. They got an Analyst Day coming up in November. So we like the stock.
All right, good stuff. Covered a lot. Stace, thanks as always. Stacey Rascon.
Yeah, you bet.
Up next, First Mark's Rick Heitzman is back with us to break down where he's seeing the opportunity right now in the AI world. The names he's betting will bring in big returns. Closing bells back up here.
Okay, AMD and NVIDIA fading a bit. Apple's still pushing. All right, Apple's still going. Apple coming off the lows. Looking for a move back to 227.50, 230 perhaps.
For inputs declined to a 9-month low. Joining us now is Tim Fiore, chair of the Institute for Supply Management and Manufacturing Business Survey Committee. Tim,
All right, AMD. We're starting to see profit taking. AMD, Meta, Nvidia, Netflix, Microsoft, Tesla.
So we remained at the same rate of decline as we saw in August, which is a good thing because the 47.2 is not a major decline. It's a moderate to mild decline. It's in that borderline area. It's very consistent with where we've been for the last 12 months, actually almost 24 months, and it's pretty representative of a soft landing. So 47.2 this month, 47.2 last month. The biggest change this month, our PMI is made up of the sum of 5 sub-indexes divided by 5. So you look at new orders, you look at production, you look at supplier deliveries, you look at inventory, you look at employment. But the big thing that changed this month for the positive is that our production number returned to a stable, generally 50, which means it's almost like a surrogate for revenue. So we're pretty much the same level of output in September as we were in August, which I think is a good thing. It's showing that the bottom is not falling out, which is really positive. I don't think anybody's expecting the top to grow that much at this point, but the bottom is not falling out. In addition to that, we have continual declines in employment, which is the activity our panel numbers are taking.
Tech stocks are under pressure. NASDAQ leading the major averages to the downside today. It comes as investor demand grows for return on big tech, big AI spending. Joining me now, Post 9, First Mark's Rick Heitzman. Welcome back.
Hey, Scott.
Where are we kind of on the hope curve versus return on investment?
So that's kind of what we've talked about for the last 2 years, right? Eventually, the return has to live up to the investment. And so chickens are coming home to roost in the second half of this year. And so far, there's been probably very little return on investment. Some of the simpler models, some of the guys who are doing data enablement, we've talked about Data IQ in the past, are showing a real return on investment. But for a full cycle, we're still early in the process, and especially in the private companies, there's still people are betting a lot on the come.
You say at some point you can't spend against hope forever. I mean, where's the breaking point for
well,
that?
It depends. If you're
so early, I mean,
you're in the first or second inning. So people are thinking, how long do you spend? If you're a hyperscaler, you're Microsoft, Google, Amazon, your turn threshold is so long. You're playing the game of, can I outspend people? Can I outlast people who won't be able to get from here to there, and therefore I'll have a competitive advantage? Because there's a general belief that AI is maybe not, it's not if it's going to happen, it's just a matter of when. So if it's a matter of when, how long can people hold on?
Do you feel like the winners are so clearly defined at this point, or is the jury still out?
The jury is clearly still out. In the first or second inning, the winners are not defined. You're seeing the early leaders, but as we've seen in all kinds of other technology, oftentimes the pioneer gets the arrows in the back, and someone learns from their business model, learns from their go-to-market, and becomes much stronger. You saw everything from social networking to PCs.
And you think this will be no different?
This will be no different. I think OpenAI has a significant lead. They have a tremendous amount of capital. They're playing like an incumbent, so they might be able to.
Okay, so the New York Fang Index stocks seeing profit taking in today.
They've invested heavily and have a substantial amount of capital, so they're staying ahead of the curve. But we're seeing things in the private markets which are very interesting that might be disruptors.
OpenAI's valuation would have one believe that the game's over, right? I mean, $150 billion, I think, is what they're currently raising at. And, you put that against what Perplexity or some of these other generative AI companies are being valued at. And it's like the disparity is unbelievable.
Well, you're seeing some Anthropic, Perplexity valued at the billions of dollars. So the people are playing the game. If you get a certain portion of the search market and Google's worth, a couple $1 trillion, what are you going to be worth? Especially if things get thrown up in the air. And conventional wisdom is 5 years from now, we're not going to be doing conventional search. We're going to be working with the Chat GPT from whatever interface, even if it's Meta Glass, to be able to answer our questions. So that whole new version might be completely different. It might not be phone based, and therefore there should be new winners. But prices, you're saying, are clearly priced to perfection if you're OpenAI at 150 billion.
Where are all the IPOs?
I think
Where
there's
are they at?
risk. There's still too much risk
In the market.
In the market, we saw a lot more risk today, and we had the first thing to unwind that risk.
All right, we got profit taking at the highs, profit taking.
Unwind the war risk, presidential election, and clearly the Fed. And the Fed, started to drop rates a couple weeks ago. They're going to drop it again. That's one thing on for all. Hopefully, we'll have a peaceful transition in the presidential race, and then maybe some of the shooting wars will slow down. So there's less of a perception of risk. But in general, on days like today, when you see the NASDAQ do what it does, people are not looking to take a risk on a new whiz-bang AI company.
What are private tech companies thinking about the path of interest rates, how it impacts their business, ability to raise capital, cost of it, et cetera?
They're feeling pretty good because a lot of their, even their projects. So if you're an enterprise software company, you're coming out of the capital budget, and therefore interest rates are decreasing. People are hitting earnings, therefore they have more money to invest and deploy. So you're feeling good about fundamental demand because of lower interest rates. And they're feeling better about the IPO market, but there's still a lot of risk. And what some folks thought was a fourth quarter opening of the IPO market is now looking like second quarter 25.
Oh, second of 25. I hear a lot about like healthcare is the great frontier for AI. You smile, you must obviously hear the same thing. How do you think about that question, whether it's in healthcare or elsewhere? Like, what's exciting to you?
So you think about healthcare, biggest part of the economy, shortage of doctors, shortage of nurses, the ability to do it on your phone, and even you're starting to see AI be as good as.
All right, Apple, a little bit of profit taking, but now it's starting to take the highs again.
So the logic is catching up. That should be good, but you're seeing it in law. Simplistic documentation, legal questions, accounting, but even in things like media and Adobe Firefly, doing creative media, that's changing. So you're gradually seeing AI at least change the incumbents, if not disrupt those markets.
A few companies on your list, whether you've invested in them or not, that you think are in the pipeline and rising towards the top, who will go public when you suggest could happen in the second half, maybe second quarter, whatever it ends up being of 2025.
So on the AI side, hopefully you'll see Dataiku, which does data enablement so people could build their models. Hopefully we'll see OpenAI, which at some point has to go public and unlock that value. On the consumer side, you're going to see probably Harrys.com, which is a big kind of traditional consumer brand that's direct to consumer, and even StubHub and SeatGeek on the ticketing side.
What about like Stripe? We keep hearing about companies like that.
Supposedly they're pushing it out. So some of the companies which could, sometimes the door gets kicked in the IPO market, and would have to be an OpenAI, a Stripe.
Okay, Nano Nuclear not able to break out. It's pulling back a little bit. Profit taking. People taking trades off at the end of the day.
Would really open the IPO market, but conventional wisdom is you're not going to see them in the next 6 to 12 months.
All right, good stuff. Good to talk to you. Nice to catch up with you. Yeah, you too. Rick Heitzman, First Mark. He is the founder and the partner. Up next, we're tracking the biggest movers into the close. Seema Modi standing by for us with that. Hi, Seema.
Just 18 minutes left in trade, Scott. We're going to tell you why Disney shares are underperforming and what the street is saying about that stock. That's up next.
All right. We got about 18 minutes to go. 18 minutes to go.
Sure. I mean, the S&P had a great run the last
run this year. You've seen significant, in all the indices really have had a pretty good run, even the Russell 2000, but more importantly, the mid caps as well. So
Apple
you're
trying to
starting
push a
see
bit higher. Apple.
in the participants who are starting to move the markets higher, not just the Magnificent Seven. What's interesting, if you look back over September and you look back over the beginning of August, both of those, the first week for both the months, were both negative returns based off of data. Today, obviously, there's a bit of a pullback. There's a lot of macro news coming out of the Middle East right now. It's definitely impacting investors' thought theses here. But right now, let's see what the data brings over the next couple of days. Again, we'll need to see what happens with the Middle East tensions there. But really, it's a fantastic start to the year. The S&P is 5 straight months of higher highs, made an all-time high again to close out the month. And then the past 3 consecutive weeks have all been very good for the markets. I think it's a pretty good run. A couple of days of pullback, not a bad deal here. And right now we're moving forward.
But what we've talked about on this show is that people want to see more participation from the Mag 7. Obviously really drove this market higher for most of the year, but we've seen a bit of a pullback there. Not necessarily getting it today. We do have Meta and Google higher, Meta and Alphabet higher, but any data pointing to more tech interest as we look into year end?
Well, a lot of things focus on the macro environment, right? And with that, you're looking at consumer and how consumers are going to react. Remember, GDP is 2/3 consumer spend. And when you look at the consumer there, you're influenced by the macro trends, inflation, interest rates, and the employment rate. Labor has been a major topic lately, especially with the longshoreman strike coming to fruition today, as well as the Boeing strike that continues to play out. On the tech side of things, yes, the development there is where we're going to be moving forward. But the question is it going to be a 1-year, 10-year, 20-year play? The capital outlays for a lot of these companies, especially on the higher end, is now starting to weigh on them a little bit as it comes to how much they need to spend to develop the technology to move us to that next level. And along with that, you're getting a lot of sectors that are being pulled up along with this, especially utilities and infrastructure spend. So there's a lot of moving pieces there. But again, this is going to be a longer play.
Apple still hanging out at the highs, having dipped intraday, obviously.
And you're actually keeping an eye on retail stocks.
Looks like opportunity from the low.
Outperforms during easing cycles.
Hit the 223 level and turn back up.
That we've looked at shows that the S&P Selects Retail Index does actually outperform the S&P 500 when you start to get to a rate cut cycles, starting from the very first moment those cuts take place. And especially if you look at a 9 to 12 month period, for the last 9 cycles of rate cuts over a 9-month period, the S&P the retail sector has outperformed 7 of 9 times. And if you look at on a 12-month basis, 8 of 9 times. So very productive there. Again, which makes sense when you're studying rate cuts because the consumer feels like they're getting a little bit more money in their pocket. Their spend is not being used towards interest card payments. Auto loans are cheaper. Mortgages are cheaper. And really that money gets spent on other items. So it's really a trickle-down effect when you look at what the Fed has to do to bring this cycle to a better landing. And that's where we expect it to be.
Okay, I want to check in about the IPO pipeline. We're starting to see more headlines of companies filing to go public. There was just a big announcement, obviously, an NVIDIA competitor going to go public on the NASDAQ. So just bring us up to speed on what we can expect in terms of IPOs, because we've been seeing this slow recovery, I guess I would call it.
Well, we look at a number of different factors here on the, here at NASDAQ. And the IPO market for 2023 has been good. It's not great by any means, but it's definitely showing signs of life. 2022 and 2023.
We're starting to see more profit taking up at the highs.
We're not going to get 1,000 IPOs like we had a few years ago again. That just doesn't make a lot of sense. But we are seeing an uptick, especially when the cost of capital starts to come down. We've seen over $30 billion raised this year across the entire industry for both here and downtown. You've got over 160 companies. We actually did 2 IPOs today on site here at NASDAQ. We had another smaller one yesterday. We've got almost 20 planned for this week. Expect more companies to try to push forward ahead of the election.
All right, Meta's trying to bounce. Not going to do anything the rest of the evening. It's 13 minutes to go. 13 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the first day of October. 13 minutes to go. 13 minutes.
Really, the first half of 2025 should be very robust, not just for the tech sector, but we're seeing all sectors ramp up, including biotechnology, utilities, consumer. It's going to be a very exciting start to the year, and we're here to help them.
And just quickly, is that regardless of the election outcome?
Regardless of the election, which is election and certain people, investors like to see certainty in the markets. Whoever wins, generally you'll see the markets perform well, regardless of who is going to win. But the uncertainty that leads up to that is always a little mind-numbing because, again, remember, you have to adjust your portfolio depending on which party takes possession of the Oval Office, because that will impact future returns.
All right, we'll leave it there. Chris Dearborn, Managing Director, Market Intelligence Desk at NASDAQ. Thanks for bringing us up to speed.
Thank you.
All right, let's check in on a developing story with Jenny Horn, markets correspondent here on the network. Jenny, welcome back. You're taking a look at Paychex today, and Paychex, last I checked, was one of the best performers on the S&P 500. Still there, actually neck and neck between APA and Paychex, up almost 5% today after earnings. It's a name I haven't talked about at all today. We've been so focused on other stories. So bring us up to speed on that.
I know a refreshing change of pace, Caroline, from we've been talking about Apple, which is one of the worst, I believe the worst now. And so now we're looking at one of the best, which is Paychex here, reaffirming now its fiscal 2025 guidance for revenue.
All right, so Nano Nuclear seeing some profit taking.
After the company did post fiscal first quarter earnings and revenue that pretty handily did top expectations. So fiscal first quarter adjusted earnings came in around $1.18 a share. That beat expectations and did rise from around $1.12 a share reported a year ago. Total revenue also did come in around $1.32 billion. That exceeded expectations very narrowly and very modestly rose from a year ago. But what I thought was interesting about this company is the read on small and mid-sized businesses, which they said they've remained resilient as the U.S. labor market gradually returns to pre-pandemic levels and wage inflation continues to moderate. They said, per their CEO and president, that they continue to invest in their market capabilities as well as products to drive innovation to really meet the realities of this post-pandemic marketplaces. Also, I think it was interesting that their first quarter expenses totaled around $771 million. That declined from $813 million nearly a year ago. And they saw that overall, I mean, again, this continues to really show, I think, the labor force of some of these small and mid-sized businesses. They updated their business outlook, now expecting fiscal 2025 interest on funds held for their clients to be between around 145 to 155 million, down from previous guide of 150 to 160 million that was issued back in June. Other guidance, which includes revenue growth of around 4 to 5.5% and adjusted earnings between around 5 and 7%, remained unchanged. So I think that you could say, all in all, the fact that this is a positive read on some of these smaller businesses is perhaps why we're seeing such a strong result today. I mean, up, like you said, almost 5% on the session. In terms of the broader red space, I think this is a great barometer for how some of these smaller, lesser talked about companies are payroll and
Yeah. Okay.
Thanks so much.
Thanks, Caroline.
Apple's still pushing.
Let's close out this market session and get the big picture from the team at Charles Schwab.
Tesla bouncing, Meta bouncing, Google bouncing after some profit taking. We got 9 minutes to go, 9 minutes to go. Okay, market's taking a break after making new highs in the evening session. All right, nice pop. Okay, starting to see a bounce in Tesla, perhaps. Apple's still hanging on to the highs of the day. Not sloughing off the highs like you would expect with profit taking. It's still hanging on here. I'm looking at the hourly over here on the right. Looks like a pretty decent dip to buy. So that's what people did. They stepped up and they bought Apple. Didn't quite get to the 50-day, right? Yeah, we were close to the 50-day. We hit the 21-day, which is right in the middle of the Bollinger Bands. We bounced there. Still think there's a pretty good possibility we go down and test the 50-day, but we'll see. Hopefully we can bounce. We have the one thing going for us, which is the JP Morgan collar, the short part of the collar. Which is at 6,020. 6,020. Okay. New York FANG. Okay, so this still looks bearish. Okay, we're still looking for this third wave down, but to be perhaps down to the 50-day. All right, so there's still that potential. We got a bearish bias if we close right here for tomorrow. And then we'll see what happens. Maybe we can get a bounce after we touch the 50-day in reverse. I don't know. Apple's still hanging on to the high of the day. Apple. Let's see what breath looks like end of day. Breath. That'll tell us a bit. Okay, still seeing selling into strength. See that pushing down. We popped, but we see selling into strength as this is pointing down. Okay. Let's look at the New York Stock Exchange. Okay, New York Stock Exchange, high, low. Another measure of breath. Okay, we got a taller bar here. So we got 78 more new stock. Because this is a good thing. This is good. Okay, that looks good. New York's composite, New York Stock Exchange composite. Buyers at the low of the day. That's a good sign. 9 EMA is bullish. 21 days bullish. 50 days bullish. Let's go to the S&P. Let's go take a look at equal weight. Removing the weight of these tech stocks, which are pull things down a little bit today. Pulled their britches down. Okay, we're still grinding higher. Yeah, we did make a dip lower. We have a bearish bias for tomorrow. That just means we could retest the 20-day or the 9 EMA. But it's not a guarantee. It's never a guarantee. It's just a bias at this point. Let's see. Let's look at the XII, Institutional Index. This is what institutions, 75 stocks most commonly held in institutions' core portfolios. You can see a red stick. So that's a warning signal. Okay, that's a warning signal. Microsoft pulling back. All right, Apple's starting to see a little more profit taking. Okay, so there's a possibility to come back to the 50-day. These waves down getting shorter and shorter as we coming into the election. Okay, we only got a month to go. What is it, 36 trading days? 36 days to the election. Okay, let's go back to the S&P Equal Weight Index again. Let's look at that. Let's look at the number of stocks above the 20-day. Okay, those turned down too. Number of stocks at the 20-day, those pull back to 70%. Number of stocks above the 50-day, pull back a little bit too, down to about 78. Okay. Let's look at growth and value. We can see this looks like rotation to me. Looks like rotation. Okay. So look at value. Look at the value stocks. Materials, energy, financials, industrials, healthcare, consumer staples, utilities. Buyers at the low of the day. 21 day is still very bullish. Yes, tech did pull back. Expected. Had a nice run up. Okay. But it's starting to bounce. So tomorrow I could see another pullback, another day of a pullback perhaps. But we've tested the 21 EMA. Value looks good. Let's take a look at some of these. Okay, so XLB, materials. It's okay. XLF. Okay, holding up very well. XLI saw the most action today. That looks like rotation to me. XLU. Okay, rotation, rotation, rotation. Very bullish looking utilities chart. ETF sector. Let's look at healthcare. Okay, holding at the 50-day. Looks like rotation to me. XLP. Okay, Meta's still pulling back a little bit more. XLP holding. VWAP. Not VWAP. Bollinger Bands coming together. Okay, Apple. Apple looks like it wants to go. Okay, buyer stepping up low of the day. All right. Apple. Tesla. Tesla buyers at the low of the day. Can we see 265 tomorrow? I think we can. Think we can. Okay, we got 3 minutes to go, less than 3 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the first day of October. So far, what I see is rotation. I'll change my mind if we see those sectors that are moving higher, like industrials. If I see this start to turn down, lose the 90 MA, then I'd be more convinced. But you got junk bonds higher. You got junk bonds. Doji certainly doesn't look anything like April, does it? Okay, here's April over here. March, April. Does that look anything like March, April? If it doesn't, that's telling you what these people that will trade junk bonds with their deep pockets, junk bonds, high yield corporate debt. If they were thinking, okay, the market's about to crap, they'll start to sell. Okay, they usually will sell before the markets start to sell. Does that mean you shouldn't be taking profits off into strength? No, I told you earlier I would be taking profits off into strength, day trading more, swing trading less, because this rotation is affecting some of these big tech names, like Qs. While we did get a bounce, there's still a possibility to come back to the 21-day at least. Got a bearish bias going into tomorrow. It's not a guarantee. It just tells you that you should be expecting weakness tomorrow. If we don't get it and we move higher, hey, fine, that's fine. Buyers got ahead of the game by buying on the dip today. Okay, IWM. Let's see what that looks like. IWM. Small caps. Been disappointing, small caps. But pretty tight range around 220, 217. 3-point range. 50 days flatten out. Bollinger Bands are top and bottom. Not giving us much direction. The big thing, though, is the New York Stock Exchange Composite, 2,000 stocks. Okay. They bought the low of the day. Still a bearish bias for tomorrow. Okay. Even though we had buyers. So we could come down again. All right, folks, I got a hard stop. I hope everyone has a good evening. It looks like Tesla bounced to end of day. Apple held the high of the day. Apple. All right, hope you had a good day. Apple holding the high of the day. Buyers coming in. Okay, MACD turning up. Have a great evening, everyone. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com this first trading day of October. Have a good evening. Take care. Hard stop. I will see you in the morning. Ciao.